markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj, and my colleague Alex Matthew. And Alex, you can argue both ways that maybe it is more of the same. Maybe there is a pause after every offense, and after every pause there is a new set of offenses as well that take place. But, well, crude has cooled off a little bit. Maybe the markets are stable, but Indian IT has issues of its own.
It does, and I think you've summed it up quite well. Good morning to you, Neeraj, and of course, good morning to everybody tuning in. There are a lot of talking points for individual companies because a lot of key results have come overnight, and so therefore, Coforge is one of them. You have to talk about it. I think that what happens in the bond markets is also eventually something that we will have to speak about, with long bond yields across the globe heading higher. But what you're saying on geopolitics is bang on, right? Because you don't know where this is going. At least for now, there's a lull after that bit of spark that you saw earlier in the week.
Yeah.
And I think that is reflective in the implied open, which is pointing to a uptick of about 180 points at the start. So let's get a conversation going on the global setup. What we're talking about is statement by President Donald Trump, where he's announced a pause in Project Freedom. Now, on the face of it, that doesn't seem like good news, because this is something that was ferrying ships through the Strait of Hormuz. This is the US. But there is also the statement that the US blockade remains in place and the US is set to stop escorting those ships. So that's what has happened. But the second part of that statement on Truth Social is that he has cited progress towards a comprehensive agreement with Iran. And from that point, after that, crude oil prices have actually dropped marginally at the very least. So it's not at the heady levels that you saw just a short while back. It slipped below $110 to the barrel. It still remains above 100. Now, earlier in the day, you had Secretary Marco Rubio say that Operation Fury was concluded, which is also a positive sign, because at least you're unlikely to go back to the kind of kinetic warfare that you saw earlier on in the conflict. And separately, Defense Secretary Pete Hegseth has said that the truce with Iran was not over. So all of those are positive signs. US stocks have continued to rise. They've hit fresh record highs. The S&P 500 and the Nasdaq climbing to those new highs, and all 11 sectors of the S&P 500 rose. You had chip makers that actually rose ahead of the pack. You had AMD, for example, that did particularly well ahead of its results, and Intel gained as much as 13% on the back of a Bloomberg report that Apple could be using its processors for its devices. Now, S&P 500, by the way, on the earnings front, if you thought that this was just a bubble and it is going up with no reason, the S&P 500 constituents are on track to post aggregate earnings growth, take a breath, of 28% in the first quarter. This is according to LSEG. So it's not like the earnings growth is not keeping pace. However, the macro challenge is something that bond investors are taking notice of. The UK 30-year bond yield has spiked to 5.79%, the highest level since 1998. And the 30-year US gilt is now above 5% and only 15 basis points away from a 23-year high. And Japan's 30-year yield is also just less than 15 basis points away from that all-time high. So it's quite significant. In fact, we've got Matt Horton, Head of Advisory Solutions and Market Strategy at Chief Market Strategist at Raymond James Investment Management, joining us this morning. Matt, it seems like the bond markets and the equity markets are telling two completely different stories. Of course, the equity markets seem to be cheering what's happened in the fourth quarter, and earnings are robust, but the macro challenge remains.
Hey, good morning, Alex. And that's exactly right. You've almost got a tale of two cities. You have the equity markets that are really rallying on the incredible strength of earnings that you have in the US. And earnings around the rest of the world have been pretty strong too, which is definitely encouraging. But I think what's most important is it hasn't just been the previous quarter's results, it's that guidance in the face of the disruptions that the globe has been facing have been very, very positive, particularly around anything that has to do with the artificial intelligence build out. So that is really, I think, propelling risk sentiment. On the flip side, you do have global bond yields, especially at the back end, rising. And that's why when I speak with clients right now, I say a lot of the easy money, I think, in this rally that really started at the end of March has been made for the most part. I'm certainly still optimistic, particularly about the US, but about the rest of the world too, especially anything related to AI. I think there's still room to go. You just have to be more selective with respect to the investments you own, and the fundamentals are going to matter more because eventually higher bond yields, higher energy prices, those challenges are going to trickle into the system. And just look back to last week when US bond yields were rising at the back end, equities had a pretty challenging time until you got the hyperscaler results.
Yeah. Most certainly. Matt, I was reading, good morning, good evening to you rather, I was reading your note with interest that AI has winners, but it may be time to even look globally at themes which might benefit and not just in one or two countries. And I like that argument, Matt, simply because if one looks at the MSCI EM weights, right, there is big fall in India and China weights over the last 18 months. It's almost unreal to think of one single TSMC having a weightage of 240 basis points higher than all of India put together. My question is, does this unravel, or is this a new normal that AI-based plays will see capex for the next few years, and therefore the AI-based countries will continue to attract flows and higher weightages?
You know, Neeraj, that's a really good question, and it's one that I get frequently, especially over the past couple of months. And I would describe this as a pretty unstable status quo. So as long as these big behemoth companies are delivering results, and they really are the only game in town, Taiwan Semiconductor, Samsung, SK Hynix, they are the only games in town that do a lot of what they do. And because the bottlenecks around the AI build out from a global perspective are so severe, you have visibility with respect to their earnings over the next couple of years, which allows you to pay a little bit more of a premium for them. But on the other hand, that means there are opportunities that investors haven't been looking at. To your point exactly, China, despite some of the macro headwinds, there's improvements there, and the government is investing heavily with respect to battery technology, robotics, the next frontier of artificial intelligence, and on top of that, semiconductors. And you have countries like India, where GDP growth has still been fairly strong, but earnings results in India have also been encouraging. Something like 3/4 of companies are beating expectations. And I just look at, one of my favorite companies, like M&M, for example, reported earnings this week. Absolutely fantastic. The stock does not deserve to be trading where it is, despite all of the headwinds. And there's a number of companies like that in the Indian market. So for the long-term investor, you can balance owning some of these higher growth AI companies and perhaps complement your portfolio, or maybe take a little bit of chips off the table where your stocks might be up 100, 150%. Rebalance that into areas where there are still fundamental reasons in countries that have been forgotten about in this AI rally.
Matt, I want to delve a little deeper into that point, because it's seemingly, and this is a comment that I've heard before as well from a commentator looking from the outside in, is that a large part of flows into India happens at the ETF level. It's not really something where foreign institutions parse through individual stocks broadly. Having said that, there are a few instances where large blocks have taken place where opportunities are being seen. So do you see the possibility on the margin of more such trades taking place? You pointed out Mahindra and Mahindra. There are a few other large cap companies that seem to be attractively valued right now.
Yeah, there absolutely are. And I'm hoping that gets other institutional investors that have the capability to own and trade in single stocks in India to perhaps start looking a little bit more aggressively at opportunities. Because again, this energy crisis will pass at some point, and the overall Indian economy is weathering the storm. There are alternatives to Middle Eastern oil, and certainly it might dampen the growth and it might hurt certain areas, especially, say, in the consumer space. But there's plenty of other opportunities. And so if you're looking at the long term across the EM complex, yes, you absolutely want to lean into these AI winners and ride that momentum higher. But as a risk manager, which you also have to be managing portfolios, I look very carefully at how I can balance that risk in companies where I strongly believe in the fundamentals. And there are a number of those in India. So from conversations I have with other investors, people are looking at it. Just no one really, except maybe myself and a few others, have been willing to pull the trigger or stay the course. But I think you have to, because eventually the tides will turn. And India, from a growth story, is just too small with respect to its overall EM weight, and that will eventually change. It just might take a little bit more time, and this Middle Eastern conflict certainly hasn't helped.
Got it. So Matt, in effect, what you're saying is that while the AI bandwagon is very strong right now, it may help to take advantage of the relative lower valuations in India or other markets, etc., and find strong companies and balance out the portfolio with some of those. Would that be a fair assessment?
100%.
Got it. Okay, great, Matt. Thanks so much for taking the time out and being with us today. Really appreciate your time.
Thank you.
By the way, just a couple of things, Alex. I mean, Matt, two things. One of the global standout. Other point was Samsung joining TSMC in the elite $1 trillion club. And Matt spoke about M&M. The one thing that stood out from Dr. Anish Shah's conversation yesterday, he's saying that their mantra for FY27 is acceleration in uncertainty.
Okay.
And he's saying that there may be uncertainty, but the growth path for India and for M&M is so strong that they are going ahead with full acceleration. Never mind the conflict and the lack of AI trade, so on and so forth.
Are they concerned at all about rural recovery and the state of the rural economy?
No, I think the one thing that Anish Shah did not show was any concern even about, or for almost everything else, except for what monsoons could do to tractor growth.
Yeah.
Otherwise.
Because that has been robust. Very important, I think. And from the auto pack, I think Hero is something to watch out for today as well, because the outlook for FY27 and post the earnings, of course, Q4, but what they say in the management commentary on the outlook for FY27, certainly something to watch out for.
Okay.
But let's talk about what happened in trade yesterday and then set you up for the day's trade today. Indian equities ended mixed as geopolitical fears rose, but as of this morning, of course, those have dissipated somewhat. Foreign institutions once again net selling to the extent of 3,621 crore rupees. One can argue that there were a few blocks that took place in the previous day, which is why you had a positive figure for foreign institutions. Domestic institutions buying to the extent of 2,600 crore rupees or thereabouts. Large caps lost ground but ended off the day's low. You had the Nifty 50 that traded in a 200-point range and closed above the 24,000 mark. So that was defended. Mahindra & Mahindra, Bajaj Finserv, Ultratech were the stocks that gained the most from the day's low. In fact, M&M ended at the top of the pack for the Nifty 50. You had private banks as well as Bharti Airtel once again that weighed the most on the downside. The Nifty Bank continues its underperformance of the benchmark, and these are led by both, of course, private sector banks, but public sector banks have been underperformers as well this time around. Broader market indices have ended in the green though, with the mid-cap index just nudging into the green to the extent of 0.1%, and the small-cap index more convincingly with gains of about 0.2%. You had defense, FMCG and auto that were sectors that outperformed. Auto understandably because of M&M's late rally, and realty as well as banks that were the laggards in trade yesterday. I wonder if the picture's different today. Of course, there will be frontline companies that react to earnings.
Yeah, but Alex, you are absolutely right. I mean, muted momentum in Nifty, you could kind of describe that, right? With that 24,300 mark coming up as a stubborn point
Hurdle,
of resistance. I mean, no reason. It's not even a very large round number, if you will, like 24,500, but it's proving to be a stubborn point of resistance. So, yes. And tech stocks may continue to remain drags on the Nifty due to the higher weightage. And there are a couple of concerning points here for tech, and we'll get to those during the course of the show. In fact, I'll read out a Jefferies note on what Anthropic has done yesterday, which might have concern, and we'll do that in a moment. But remember, tech may continue to be a drag, despite Coforge numbers, by the way. Coforge is not really necessarily a very large weightage, if you will. The West Bengal stocks are now starting to show some play, but I wonder if it's difficult to call it a bit of a trend, simply because you don't know when do these trends unravel. I mean, look at price action yesterday in Titagarh Wagons, Jupiter Wagons, some others, and you are seeing that the market is giving a thumbs up. Titagarh was up some 9%, Jupiter Wagons was up 3%, a clutch of others did well. But please be careful about calling these things a trend. So that is one. And transformer stocks results are wobbling and may impact valuations. You saw Tarrell or Trill transformers and rectifiers react. Voltam transformers yesterday doesn't have too many government contracts, but margins took a bit of hit, as a result of which a 19% downtick there. And if due to the West Asia conflict, if Q1, Q2 are impacted, then you might well see the valuations of some of these trade come off a little bit. So please be mindful of that. A 19% downtick or a 5% downtick may not necessarily mean a buy. And the last piece really on my trade setup today at least is this whole development that happened yesterday, wherein while Anthropic has gone for Wall Street jobs, from an Indian perspective, there is an impact on IT, because Anthropic has forayed into the IT services market, and which could, as per Jefferies, pose further risks for the IT services firms. The Anthropic's ownership and access to frontier models may place other IT service competitors at a disadvantage, according to Jefferies. They say it may also impact new client additions, which is a key growth lever for any tech firm. Jefferies does believe that this move that Anthropic has done does underscore the relevance of IT service offerings, and the emergence of new competition that owns their own frontier models is a risk one can't ignore. They are unequivocally saying, stay selective. And Alex, it becomes difficult because the human mind is so attuned that if something is which has worked all its lifetime falls 30, 40, 50%, that's the end of the fall. Who knows, this time may be different.
Yeah, absolutely. Which is why they say don't judge future performance based on past returns, right? So that's something to take.
Says the personal finance maestro.
You learn a few things, but let's talk about the derivative space, right? And Puneet joining in to tell us what the cues are on the F&O side. Puneet, Neeraj was talking about that 24,300 mark, which has proved to be a steep resistance. What are the key levels that you're looking at?
Well, thank you for that. Well, most certainly it's been a very sluggish kind of a start to the May series compared to, including last week, where we've seen the index long also from foreign investors come down materially. So their long positions has been cut quite sharply. Today, of course, the implied open indicating a start in the green, and we'll be retesting that stubborn 24,300 level yet again. It's something to watch out for. The Bank Nifty also has been extremely sluggish, more so if I can say that in compared to the Nifty 50 at this point of time, because back again at those levels of 54,500, which offer no support at this point of time. So we slipped all the way down to 51,000, even 50,800 as a matter of fact, during this Israel-Iran conflict. And even though we've come back to certain decent levels, not so many supports here. Even at 55,500, we've routinely broken those levels quite easily at this point of time. And with earnings of the large banks likely behind us, only macro triggers could be something to watch for this index in terms of re-rating triggers. In terms of what we've seen for foreign investors, yet again selling off 3,600 crores, and the index long continues to stay depressed at just 11.5% compared to 20% it was in April. And for open interest distribution also, we've been highlighting that the sluggishness of the Nifty 50 is visible here as well, because not too many change in positions over the last week. 24,000 has actually seen some deceleration in open interest for both calls and puts. 24,500 continues to be the out of money preferred call option, and 23,500 for the puts has also seen deceleration at this point of time. So that's something to watch out for, because even puts are starting to see reduction in terms of open interest at least. And stock-specific action continues to be one where we've been highlighting that, Vedanta is one where longs been continuing to build up even after the demerger. So stock continues to be relevant for the F&O traders. 361 VAM, Godrej Properties after results, second consecutive day of shorts being built up, and Hyundai will be in focus at the end of the week for results, but expectation is not too great, at least this time around, for the numbers. AB Capital and CAMS are the only couple of ones with worth mentioning because of OI change, but the auto pack continues to be in focus. You're seeing Hero report strong numbers, con call during the day, but you've had Bajaj Auto preview buyback announcement is expected, and Mahindra reaction. So that pack, I think, continues to be in favor along with IT, as Neeraj highlighted.
Absolutely, and the stock that you track very closely is actually the one that I want to talk about first, Puneet, in the 3 stocks that we're doing next. And a lot of stocks, of course, we'll get you what's on our list and then we'll get you a summation of everything that you should watch out for. But I've got Hero MotoCorp at the start, and of course we're still waiting for the management commentary that will come in through later in the day, and we'll get you those updates. But the numbers were in line with expectations. You had revenue growth that was led by volumes, and you already got that picture from the wholesale numbers that were reported as they do at the end of every month. But the question marks about continued performance in Q1 and in FY27 remain. If there is a worry on the geopolitical side, does that translate through commodity price pressure, through various other demand pressures in FY27? And if there's an impact from the monsoons on the domestic economy, then that's going to have a bearing on motorcycle sales and therefore on Hero MotoCorp. But it saw revenue uptick of as much as 29%, EBITDA uptick of 31%, very strong. You had margin uptick as well, 14.5% is what it stood at compared with 14.2%, and the net profit was up as much as 30%. I picked one brokerage on Hero MotoCorp. Citi has said that the Q4 results, EBITDA was slightly ahead of estimates and the PAT was in line on account of lower other income. Demand has remained robust on account of that GST cut. This is a company that actually gained quite a bit in the way of a tailwind on account of that. Efforts in boosting market share in scooters and EVs are gradually fructifying, according to Citi. The cost reduction initiatives are supporting margins, particularly from the perspective of input cost pressure. And possible inflationary macro environment and any adverse rural income trend could be potential headwinds. There you go, it's Citi saying that as well. Second stock on my list, Lloyds Metal and Energy. Pretty strong set of numbers. The key takeaways first. The growth was driven by higher iron ore environmental clearance limits. You also saw a faster ramp up of iron ore pellet plant. The sponge iron volumes have aided performance as well. So all told, it's an improvement on the volumes. But the product mix has improved because you have a higher quantum of pellet being produced, and that adds to a better product mix. And as a result, you've seen a sharp margin expansion during the quarter. Iron ore production, by the way, has risen 529% on a year-on-year basis in Q4, and the sales were up about 200+% or thereabouts. So the revenue uptick seen is about 19%. The EBITDA uptick is 45%. Margin is expanded by about 8 percentage points to 42.3%, and the net profit is up as much as 35% as well. So very good set of numbers. And finally, KC International, very short update. It's gotten more orders to the extent of 1,000 crore rupees across business lines, so that should generally bode well for the company.
Okay. Well, 3 interesting names. There are a clutch of others, by the way. I've chosen the 3 that I'm choosing are not necessarily the ones which will react the most, but I'm still bringing them out. One of them is Coforge. Now, good numbers, but IT is under a bit of a cloud. However, their commentary around what could happen ahead is interesting. So on the con call, they've said that the 12-month executable order book is about $1.75 billion, 16% YOY growth, and the Q1 FY27 revenue may be flat quarter on quarter, but acceleration will be seen from quarter 2 FY27. There is a deliberate exit of about $15 to $20 million per quarter of low margin in their book, as from Coforge's set. And their FY27 guidance is of a 20.5 to 21% consolidated EBITDA performance, EBIT at about 16.5 to 17% on a standalone basis, and 15.5% on a consolidated basis. They have said that healthcare and high tech will grow about 98% YY USD, travel about 62% USD. Now, what have brokerages said on this? UBS says that they are maintaining a neutral with a target price of 1240. In Q4, they have said that the Q4 is strong but robust outlook for FY27. Q1 may see a flattish growth on account of the closures, but they expect an FCF to PAT conversion of 100% in FY27 versus the earlier guidance of 70 to 80%. Remember, this was an Achilles heel for Coforge earlier, because of which the stock had fallen quite considerably, and there were some talks which Sudhir Singh had to come and clarify on as well. But watch out, in an otherwise dull day for IT, very likely Coforge could stand out and actually do well. So watch for this. Aeroflex Industries, small name, listing about 12 to 24 months ago, but very good numbers. 37% uptick in revenues, EBITDA margin at 23.9 versus 20.6%. Profit after tax as a result grows even faster, 57% at 17 crores versus 11.2 crores. You want good numbers coming in from small, mid and large companies. Aeroflex did not disappoint. What disappointed maybe United Breweries. The overall growth was disappointing due to cost pressures. EBITDA margins contracted due to higher fixed costs and increased new bottle infusion as well as mix. Remember, a lot of brewery companies had already said that their margins will get impacted due to higher glass cost. And they've said, by the way, that the company will see a cost impact of 400 to 500 crores in the next 2 or 3 quarters due to the West Asia conflict. Now, this is a sizable number that they are saying. So not only was Q4 slightly wobbly, but the quarters ahead might also have an issue. So keep an eye out for these three.
Absolutely, and strong companies to look at and stocks to look at, right? I wonder what Coforge will do, particularly because of what you highlighted earlier about the overall IT
and the cognizant issues
and the cognizant issue, yeah. So let's talk about Larsen & Toubro, because in the 6 stocks that we spoke about, this didn't rank, but it's likely going to see some action at the start because it's going to react to numbers. There was a revenue miss and margin slightly below expectations as well. What are brokerages saying, and what did Varsha make of the numbers? Let's ask her. Varsha, first of all, what do you make of the numbers and what are brokerages saying?
Well, you were right about the revenue miss and margin miss, Alex. Well, revenue miss was, of course, due to the war and due to the war segment, and the guidance, if you see, was also below consensus. The guidance, which was 10 to 12% for order inflow and 12 to 15% revenue CAGR till FY31. Margin was slightly below expectations and guidance was flat for next year as well. Now let's see what brokerages are saying, starting with Jefferies. Well, they maintain by hike their target price, but they say that the growth visibility offered in a tough environment, and also the company unveiled its Lakshya 2031 plan after beating its Lakshya 2026 plan on revenue and order flow CAGR. Well, 10 to 12% order flow CAGR and 12 to 15% revenue CAGR are the 2031 guidance. Now, talking about Bernstein, with their maintained outperformance, what they say is that Q4 FY26 was near-term, seems to be near-term challenges, but companies making right long-term moves. Order inflow continues to beat expectations on a big base, but prospects are lower. Revenue was a miss and guidance also below consensus according to Bernstein. Well, talking about JM Financials, they remain constructive despite short-term disruptions. Stronger core sales and margins versus what the company was estimating. Order inflows were slightly disappointed. Lastly, Nuvama, where they have retained hold with target price of 4,050. Middle East impact limited according to them. Growth has been moderated pending clarity on Middle East conflict, as management assumes recovery only from H2 FY27 is one of the key thing that investors should watch out. 5-year Lakshya targets also seem toned down given large base according to Nuvama. So overall, yes, a miss on numbers and mixed reviews when it comes to the numbers of L&T.
Yeah, I think that's well put, Varsha. Thanks for that. Ankit Soni, AVP Fundamental Research at Mirae Asset, Sher Khan with us on the show. And Ankit, thanks so much for joining in. And would that be one key issue for how you look at L&T going ahead, that there is a limited clarity on what the Middle Eastern impact could be for the short term and for the medium term? What would you think about when you think of L&T right now?
So, good morning. Thanks for having me here. What management also has iterated that there will be able to say soft H1, but then a strong pickup is expected to be going in H2. Also, there are opportunities which L&T is targeting with respect to the calibrating up the resources which were damaged and others. So there's opportunities lies out there, which is more positive with respect to that front. So we believe that over a longer period of time, since as Lakshya 1 was clearly achieved with respect to what was the guidance, we also see that Lakshya 2 will be achieved, and over a longer period of time, it can be a good bet for the investment.
Okay. Ankit, hi, morning. So the concern with Larsen & Toubro, I would think even before this conflict, was not about order inflow, it was about execution, right? Because look at the size of their order book. And if they're guiding for an increase of over 10% for the order book in FY27, I don't see that as a concern. The only point that I'm making is with such a large chunk of their order book assigned to that Middle East region or the West Asia region, are they going to have headwinds on execution? And will that cause problems? Nobody knows when this conflict will end. So is that something that an investor or potential investor should watch out for? One. And two, what is your call on the stock?
So what we believe is over a longer period of time, GCC, even management has highlighted that it will be, so if you see, there's a long-term plans of GCC incurring capex around. Management highlighted that $52 billion of capex which will be incurred by the GCC countries, and also I believe L&T is factoring in GCC countries as a major revenue growth driver over a longer period of time. So that would be over a period of time. This could be softened down. I mean to say, the geopolitical tension should be turning down maybe by H2, and then we could see a good turn up. And we currently have a buy rating with a price target of around 4,700.
Okay. All right. So that's a call on Larsen & Toubro. Ankit, thanks so much for taking the time and for speaking to us this morning. All right, we have to slip into a very quick break. On the other side, we'll speak to Parag Thakkar as well as Kush Bohra about the key stocks that you should watch out for. And we've got a live report for you all the way from Kolkata. Stay tuned.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Welcome back. You're watching India Market Open. Let's pull up the implied open just to take a look at what is indicated. And it's 160 odd points. So we're holding out not too far away from where we started the program. Let's go across to Parag Thakkar as well as Kush Bohra now to get a sense of what their feeling is at the start of today. Kush, I want to start with you today. And I want to ask about specifically what is keeping the Nifty 50 defended at 24,000, particularly in a scenario where we've seen significant underperformance for the Nifty banks and the private banks in particular.
First up, a very good morning. Hands down, the answer is Reliance and the Adani Group stocks. Look at what has happened in the heavyweight sectors like banking and IT. These indices are down about 3 to 4% on the bank Nifty, about 7-8% on the Nifty IT, and Nifty still holding strong in that, I'll just not even mention the 24,000 mark. I'll actually say the range of 23,700 to about 24,300 that we've been mentioning for the last 8 to 10 sessions. Had it not been for these two, I think Nifty would have seen significant cuts. But on a different note, when do you get to say when the Nifty is closed about 100 points lower and दिन अच्छा था? It's like आपका वजन बढ़ गया लेकिन cholesterol तो कम हुआ है. We are in that kind of a scenario where even if the index is doing what it's doing and mildly in the red, the internals aren't all that bad.
ऐसे भी होता है क्या?
Of course. भाई वजन कम हो गया, muscle gain हो गया, अच्छी बात है. So but yeah, I mean this is what the markets are also reflecting. The mood is not that bad. As I said, the index might be showing red, but if you see the small and the mid cap indices, they actually ended higher. Correct. We're still hovering in that range of 23,700, 24,300, despite crude being where it is today. It's of course a little lower, right? Indian rupee being where it is. So I think markets are absorbing this, and perhaps markets know something that we don't know, or they're starting to believe that perhaps the worst is over from geopolitical standpoint. No one really knows, but that's what the texture is suggesting right now. So I would suggest what I have been for the last few sessions is that play the range. You sell at 24,300, or I would say book profits in fact, and buy near the 23,700, 23,800 mark. Of course, with today's gap up opening, if it does come to those 170, 200 odd points, then the risk reward ratio is lost for going long positionally, but you could play the intraday trends. A break above 24,300 will put Nifty in a different trajectory for higher levels of 24,500, 25,000 also, by the way. And that could happen really fast because Bank Nifty and some of the other stocks are due a short covering rally. So for now, positional trades avoid. You could play the trade for the day, depending on how the indices are moving.
Okay. And Kush, if that is indeed the setup, what are the stocks that you're recommending today?
Yeah, my picks are also reflecting the enthusiasm that GIFT Nifty is showing today. So, after a while, I'm going all long. So, 3 stocks, all 3, on the long side, and one update. Grasim, CG Power, and JB Chemicals. Grasim has done well in yesterday's trade. Also, it gained, some ground today. There could be a further fillip to this up move. So, for targets of 2925 and 3000 with a stop loss at the 2820 mark. Grasim is a long. CG Power, yes, this one's actually had a brief round of profit booking, but yesterday a good up move, good volume uptake, above the last 20 days average. So yes, this is also something that you can consider long after, despite having run up yesterday the way it did. So 850, 870, these are your targets. 810 is where you keep that stop loss. And JB Chemicals, this is where the setup starting to become very interesting. Has not really seen that kind of a crack, after the kind of run up, in April, and yesterday closed at the high point of the day. So could have a good opening. 2165, 2220 are your targets. 2145, 2045 is where you keep that stop loss. And a word on Manorama. Yesterday we discussed this after market opening that this is something that you can hold positionally as well. Yesterday went on to hit the target too, saw some profit booking. So if you want to hold from a medium term perspective, you could continue to hold, else book profits.
Okay, I think Kush was talking about Manorama, and yes, this is the stock. So book some profits if you will, if you've taken that call indeed. Okay, I'm going to ask Parag Thakkar a mix of a sectoral call and a Nifty call as well, because what IT is doing is definitely keeping the Nifty dragged lower. Okay. Now, Parag bhai, आपकी एक कहावत बहुत फेमस हो गई थी, sometimes it should take the falling knife on your chest. But now there are some real issues here, right? Yeah. Cognizant laying off employees presumably is a clear sign that there are problems at hand. It's not just 1 or 2 companies doing it, but everybody doing it. And the latest that has come in from Anthropic, wherein what they are effectively doing is trying to attack the IT services model itself with the ownership of an AI model themselves, right? Or an LLM themselves. It is a concern. Even if it doesn't translate into actual business disruption, can it actually translate into more multiple compression for IT service companies?
See, I think the guidance given by Infosys and HCL Tech was very clear, right? That there is a deflationary pressure due to AI thing. Plus Anthropic fear of agentic AI models developed by themselves. And now they want to replace the IT services thing. So that's why we took call, and I've said this publicly many times, that in the month of March when IT was outperforming Nifty, by 10%. We booked some profit, some losses, and we reduced weight to 5% in IT. From here on, if you ask me, the concerns are really real, and I acknowledge that. The only thing is that you have to be very, very selective. For example, Coforge, if you see the results, whatever they have done, 2% CC growth was as per expectation, but margin delivery was fantastic. And they have raised their EBIT margin guidance also for FY27, and they have taken a conscious call to let go of the businesses with low margins. That's why Q1 will be flat, because they'll be letting go of some business. But I would say that the stock has beaten down completely. It trades at 18 times FY28. It used to trade 30 times. The stock has taken a big knock, and now management is doing all right things. FCF to PAT conversion, they are saying it will be more than 100%.
No, Parag, the erstwhile
So it is selective.
valuations, forget that.
Yeah, correct.
Is it good to buy a Coforge at 18 times earnings?
So I would say that so right now I don't have, but I would definitely consider it within the IT space. If I want to buy something, it's a good stock to look at.
At 18 times?
Yeah, at 18 times, yeah.
Okay, but so did you look at, I'm not talking about necessarily the headlines, I talk about the layoffs at Cognizant, right? So the question is that they're actually laying off. We don't know how much, and we don't know what the impact is going to be. People are doing back of the envelope calculations to say it could be this many number, thousands of people. Is that indicative of pain points heading into FY27, where this entire narrative, where we thought that the attrition was done, where people would be exiting, that's over, they're not going to add aggressively, but they're not going to cut. Is that going to be challenged further?
It can be challenged. Remember, one of the big reasons why Coforge actually was able to beat EBIT margin expectation was also AI-led efficiency gains. Now, the AI-led efficiency gains, it translates to that only, right? That there will be a reduction in the headcount overall. Right, some longer term structure. And that is actually one of the problem also for the economy.
Yeah, of course. The job losses will be there.
Yeah.
Okay. Fair point. Okay. There is lots more, by the way. There is banking, Aadhaar Housing Finance, something that we've spoken about with Parag Thakkar in the past, has delivered some very good numbers as well, and some record FY20, the best performance in FY26 kind of statistics too. There is Raymond Realty, there is so much more. But what is also happening is that some of the Kolkata-based names are actually getting favor. We highlighted how Titagarh, Jupiter Wagons, a few others have actually had a good move. So what NDTV Profit has done is getting you ground level insights on how West Bengal is reacting to the political change and what it wants next. The focus also turns to business confidence and economic expectations. Sharad Dubey, our colleague, is in Kolkata since day before yesterday, and he's getting us those updates. Sharad, what are the sentiments you are picking up?
Well, yes, this is the second day for NDTV Profit in Kolkata, and today I'm standing near the Bishwa Bangla Gate, which I'm talking about, and this place, the New Town area, this represents the modern extension of Kolkata. Be it medical hubs, institutions and technical offices, all of this action is happening in the new greater extension area. But what's there in the menu for today? We are taking in interesting snippets from the railways, the tea industry and also the manufacturing segment. We try to understand the sentiments and the expectations from these sectors. Apart from that, yesterday I did have a taste of jhalmuri and puchka. Hopefully we end our tour for Kolkata on a sweeter note by having rasgulla and sandesh.
Well, you can have whatever you want, Sharad, as long as you bring some for the rest of us. Neeraj is getting used to eating some form of mango in the morning, so I think he's developing his sweet tooth again. Neeraj, what would you say to some sandesh?
Wouldn't mind at all.
You wouldn't mind, right? Okay, all right. But on that note, let's talk about individual stocks that have posted results, right? Let me throw Larsen & Toubro in the mix. Let me throw a Hero MotoCorp from the frontline companies into the mix. We haven't spoken about Coforge necessarily on the charts, right? We've talked about fundamentals and valuations. How do these three stocks look on the charts?
Sure. So let's go in that order. Larsen, not bad at all in terms of the setup. If you see, a lot of stocks have corrected, after giving that bump up. This one's just consolidated. So just rounding the numbers off, around 4,000 on the downside and about 4150 on the upside. That's been the range. Break on the either side, perhaps will decide the near-term trend. But if you ask me from a medium-term perspective, the setup looks very interesting. I would suggest a positional stop near the 3,900 mark. So Larsen, not a bad setup. Hero Moto, some of the other names in this space, I have mentioned recently that the setup is turning a little negative. You have lower high, lower low formations, downward sloping channels and trend lines. So that remains a bit of a concern. So Hero would need a break above 5250 for the trend to turn positive. But up until that happens, there could be some selling at higher levels. Coforge, like I said, avoid trading on the result day. But if you had a position, I would suggest a stop loss on this one close to the 1080 levels. But from a near-term perspective, the kind of selling that you've seen, volume-backed selling, I wouldn't really suggest buying, at least from a very near-term perspective. Near-term perspective trades on Coforge, even IT for that matter, best avoided.
Yeah, this is lovely. For a value buyer, pick will never see confirmation from a technical expert. That's just the nature of the beast, right?
Yeah.
And therefore, it's good to get both these perspectives. You can choose which one you like more depending on what kind of a trader / investor you may be. Bear that in mind.
And please, Coforge also, Q1, they have said that it will be flat.
Yeah, it will be flat. So you got to keep that in mind. Acceleration from Q2 onwards. The guidance though is pretty impressive. Okay. So, and by the way, we were not only about Coforge, it was largely a more IT specific discussion. There's another big thing that happened, Alex, and that is on banks and lenders, right? Wherein the ECLGS 5.0,
yes,
the credit guarantee scheme has been approved, and which is a fairly large incremental credit flow to MSMEs, which likely is positive for lenders. I would love to get Parag Bhai's opinion on what does he make of this, because frankly, not that this has been done for the Bank Nifty, but the Bank Nifty needs something to save it, right? It's actually sulking. What do you make of this announcement?
So this is a much wanted announcement. I think during COVID also government did this, and I would like to congratulate government and RBI and the entire finance ministry for doing this. During COVID also, unlike other countries, which directly credited checks to the people's account, and that created inflation in the system, our government did this thing, right? Credit guarantee. You give more loans, 20% more loans, top it up, and we'll guarantee this thing. What it says is, first of all, it doesn't affect fiscal at all. It is just a guarantee. It's off balance sheet item. Second, what it does is MSMEs get the confidence. They don't fire people. So there are no job losses. And third is lenders get confidence that, okay, I'm lending 20% more to already slightly struggling MSME due to this West Asia conflict. That time it was COVID. But I am getting a guarantee from government. It does all purposes. It is like, you can kill everything with one shot. It's a very good shot, a much required thing, and size is also good, 2.5 lakh crore plus 5,000 crore for airlines.
So this is another instance of fiscal stimulus without it being fiscal stimulus.
Yeah, and plus, the history suggests during COVID, when people were shut, okay, then also the actual NPAs out of this guaranteed thing was minimal. So even when people were shut, that tells you about India's credit culture also.
Also, MSMEs don't have this habit, right? Ke haath upar kar diye, chodo, I can't do it. Very few.
At least 90% of them will be honest and will say that, okay, right now there's a problem, you have given me a support, and now when I come back, I'll repay you.
Actually, that has been the tendency for individual borrowers as well as small borrowers as well. A lot of earnings that we have to talk about. We've spoken about several, but let's round up the list. And Varsha joining in to do just that. Varsha?
Let me start with GNG Electronics. Well, good set of numbers over here. Revenue and margins were all strong. Talking about SRF, again, if you see, the fluorochemical business was the highlight over here, which was robust. Chemical was little subdued. Though they have increased capex also, that's also one of the key things to watch. Raymond Realty, strong numbers. This was due to higher collections. Aavas Finances, profitability was driven by strong NII growth. SJ Enterprises have seen spike when it comes to EBITDA margin. Talking about few counters where the numbers were weak, weak. I would say L&T, of course, miss on revenue and EBITDA. Domestic infra execution stayed weak. Talking about GHCL, there was a margin pressure which was seen in the Q4 numbers. PNB, again, margins were lower. Shoppers Stop, if I were to talk about, losses widened due to higher expenses. So all of these stocks will be in focus on the back of Q4 FY26 numbers.
Got it. All right. Let me ask about a couple of these stocks, right? And they stand out, some of them particularly on the back of those numbers. So let me read out the list. So Coforge we've spoken about, and L&T we've not spoken about. So let me ask you about L&T. So margin outlook is flat, and I'm talking about future now, right? You've talked about Q4.
Correct.
10% increase in order intake is what they're talking about, and so therefore revenue uptick, I don't know how much is going to get, but they're guiding towards a slightly quiet H1. H2 should pick up. What's your overall view?
So we are right now underweight on L&T, but I would say that any de-escalation in the Middle East will be a big positive sentiment booster for L&T. So because company is doing all right things, Hyderabad Metro divestment, ROE now is touching 18%, like M&M has also said, right? So all these companies are doing all right steps. So market is ready to reward them once this Middle East tension goes away. But right now we know that right now, as you rightly said, H1 will be quite muted one because. And they have also toned down, actually, if you listen to their call, they have also toned down their optimism because of near-term weakness due to Middle East problem.
Since we're on the topic of earnings, just before I get to Sumit Sarkar, can I bring up one more set of numbers, and that is Raymond Realty. And just look at what the company like for like has posted in Q4, and it's a decent show. The sector may have had some iffy times, but the numbers reportage from most companies thus far is looking okay. Is the operative word, Parag Thakkar, thus far, that Q4 tak theek hai, but kya pata aage kya hoga? And what about Raymond Realty individually?
So Raymond Realty I don't track.
You don't track.
Yeah, I
but
don't track.
15% uptick in numbers, etc.
Yeah,
Is that...
So I saw, Godrej Properties did phenomenally well. Aadhaar Realty, of course, it depends on launches and all, continues to do well, great company. So basically, I would say that Prestige or Brigade, all this, the March quarter was not bad at all. But I would say that as we discussed yesterday, that how this duration of this West Asia war conflict, its impact on sentiments, its impact on jobs, its impact on discretionary consumption, that will play a role now. And of course, stock prices, portfolios of each individuals, because that gives you a positive momentum to buy a new property. So I would say that that way I'll be a little bit cautious. And stocks have rallied, right? After 31st March, most of the stocks have rallied 20-25%. So I'll be a little bit cautious at these levels.
Okay. Maybe that is the prudent way of looking at things as well. Though valuations in a lot of cases are really good. Independent of what the historical valuations was, the actual valuations currently are not very expensive in a lot of companies. Okay, are dealing rooms talking about that, or are dealing rooms talking about something completely different? Sumit Sarkar joins in with all the chatter from the dealing rooms for this morning. Sumit, have things changed between yesterday and today?
Well, yes, GIFT Nifty is up 200 points, but then again, the market continues to say that 24,300 is the crucial level that we need to cross for a big upside to come in. So we need to watch out for that, because Nifty has been quite range bound, 23,800 to 24,300. Few stocks that dealers have highlighted in trade: Gopal Snacks, buy flows on the large HNI desk. The stock has been gaining for the last couple of trading sessions. It's up nearly 15%. Street is expecting a strong Q4 numbers from this counter. For Titan and Britannia, there are sell flows on the PMS desk. Dealers expect weak Q4 numbers from both these names. Prime Focus, Godfrey Phillips and Inox Wind, some delivery-based buying seen in the prominent HNI desk. They have been accumulating these counters in trade, so keep an eye out for these names. And lastly, when it comes to Eternal, the stock was down yesterday, but dealers were indicating that there were some buy flows at lower levels. That on the FI desk, long-only funds have started to accumulate Eternal at lower levels.
Interesting. Okay, thanks a lot for that, Sumit. Interesting. Kush Bora, Eternal. It's a nifty name, fairly liquid name, a name that, though unfortunately, if anything, actually benefits from AI, but unfortunately has not quite seen any spark now for a really long time, right? Any bottoming out, any support levels? Is it close to anything, or is it difficult to call it on the charts right now?
Yeah, so consolidation with a negative bias. Ever since it dropped from those 300 odd levels, multiple rejections came, around those levels. It saw selling pressure, and like I've said in the recent past, it seems to have lost favor with the market, at least for now. So I would definitely keep it on my radar, but not something that suggests that of course you can go out and buy immediately. Momentum's missing, volume action really not all that great, rejection at higher levels. So yes, something that you want to be a little cautious of. So as I said, I would keep it on my radar, but not something that I would buy right now. On the downside, immediate support at 240, positional at about 225. So watch out for these levels. As long as these are held, it might just go into time-wise correction for some time.
Yeah, and Parag, maybe the idea is to not try and think of names which are necessarily belonging to the Nifty or otherwise, simply because just the mood that the market is in, all names which will see some buying need triggers, fundamental triggers. Just being in the Nifty is not a fundamental trigger by itself, because flows are anyways missing, right?
Yes.
So therefore you need to look at what individual results are showing up, right? What has impressed you the most this earnings season? For example, yesterday, one of the stocks that you talk about a bit. Marico, no, but I was looking at a financial name, right?
Aadhaar Housing.
Aadhaar Housing. What did you think of those numbers?
So great numbers as per expectation. 20% loan book growth, 20% disbursement growth. They've guided also for 17, 18% disbursement growth. Spreads are 5.82, NIMs, ROI is above 4%, trades are only 2 times. It's a good 20% compounding story, which we had bought it around 450, now it is 515. And I feel that whatever some brokerages estimates are saying 620, 630 targets, they are very easily achievable in my view.
Okay.
In Marico also, for example, very good high single digit volume growth, 9% volume growth. They are aspiring for high teen EBITDA growth. Quality company, no corporate governance issue, fantastic 45% ROC. So I think you're absolutely bang on. You cannot take a blanket call because flows are missing, as you rightly said. FIs are still selling. So I would say that it is stock by stock, stock specific, and result by result, and commentary by commentary. And that too, you have to take some commentary with pinch of salt.
Okay. Speaking of taking commentary with a pinch of salt, I wonder what FMCG companies will have to say about FY27, because the Q4 was actually particularly good. And let's talk about that. Let's in fact go across to Mahima to give you the key takeaways from what has been a pretty rosy Q4 and perhaps also the outlook for FY27. Mahima?
Right, so Alex, Q4 definitely has been rosy for FMCG. I mean, we've seen multi-quarter high, revenue growth as well as volume growth for a lot of companies across board, and overall growth, has this time been largely driven by volumes. The focus going forward also remains on volumes, and that is something which is certainly positive. In terms of what's causing the growth, a lot of this growth this quarter has come because the GST cuts plus overall freebies that state governments were offering, plus largely it's a volume-led growth and with focus on advertisement spends, which is kind of auguring this growth. In terms of the entire table of volume growth, sales growth, and the percentage that benefited, the percentage of portfolio for each company that benefited with GST is something like this. The HUL around 7.6% growth, 6% volume growth, which is almost a 12-quarter high. 40% of their portfolio benefits from this GST coming in. For Nestle, it's almost as high as 70%. For Varun Beverages, around 25%. For Godrej Consumer, it's as high as 95%, for which the volume growth came in at around 9%. For Nestle also, there was a double-digit volume growth. Now, in terms of earnings at multi-quarter highs, HUL has seen sales and volume growth at 12-quarter high. Nestle sales and volume growth at multi-quarter high. Varun Beverages, a 4-quarter high, as well as Godrej Consumer at a 20-quarter high. In terms of commentary coming in from the management, I think price hikes in Q1 FY27 are unavoidable. This is because of the West Asia conflict, and that could put pressure in terms of volumes and demand. But headwinds because of this might overall see some impact on Q1. Companies are prioritizing, however, volume growth over anything is the common commentary that we've seen coming in from a lot of management HUL, Nestle, etc. In terms of valuations, still valuations are at a comfortable level. They're below the 5-year average. If you take a look at that, Aadhaar Consumer is trading around 80, 5-year average is at around 80 times and a 1-year forward at 52 times. Of course, still not cheap, but at least cheaper than the 5-year average. Varun Beverage is a 1-year forward at 40 times, for Britannia at 45 times, Marico at around 45 times. ITC is the cheapest amongst all at 18 times 1-year forward. In terms of stocks with highest return potential as per Bloomberg consensus estimates, Imami with the highest one at 45%, followed by Varun Beverages at 27%, then Radico Khaitan at 27%, GCPL and Dabur both at 24%. So this is the overall view of what's happened in Q4 and what one should look at going forward in Q1 FY27.
Thank you for that, Mahima. Very detailed look. The only concern is, and I think in that sense, FMCG space epitomizes the problem across the board. That the quarter is great, but who knows what's going to happen. Prabha, this is a space that you track very closely. And the fact is that if nothing else, packaging costs are going to hurt. For Marico, for example, raw material costs have not escalated to that extent versus others, but packaging costs is going to be a pain for everyone.
Yeah, so it is pain for everyone, so everybody will try to adjust to it. No? Either they will do a grammage reduction or they will take a selective price hike, as HUL Priya Nair said, that 2-3% price hikes. And remember, these are very high gross margin businesses. So, if the raw material impact is high, you have to take just 2 to 5% price hikes to adjust for your margins.
There is no concern of demand dipping in any real way?
FMCG, it is a day-to-day need, right? So, and during this kind of scenario where commodity prices shoots up, generally the regional and the smaller players lose market share. Because the HUL will have done an inventory planning, right? Marico would have done an inventory planning. And that's why they have been able to protect margins better. And they need to pass on the price hike also lesser than a small regional player. So this, in fact, when there's a commodity inflation, the large branded FMCG companies like Marico and HUL or Nestle kind of those guys will gain market share. And in Marico's case, it is actually the reverse, as you rightly said. Copra prices are off by 35% from their peak.
Yeah.
And that is actually going to provide a boost to their gross margin and EBITDA margin next year.
Top pick, Marico or Dabur?
As I keep saying, Marico is my structural holding. Of course, FMCGs are not that you will get 30-40% upsides. It is a 10-15-20% upside. हम छोटे लोगों के लिए.
Oh wow! Today, Kush Bora, what about you on any of these? Do you also have this very humble view on FMCG?
मैं तो कहूँगा भगवान करे ऐसे छोटे भगवान सबको बनाए. Very modest as always, Parag bhai. Again, very selective. I think that's been the theme. We started with that. You have to be very selective. If I look at the Nifty FMCG index itself, it's gone up quite a bit, but now seeing consolidation. So I'll be very selective. Hindustan Lever, the stock that we were discussing, has resistances around 2350 to 2375 zone. If it takes that out, you could remain constructive. Bajaj Consumer, on the other hand, very strong. So I think I would prefer this and Marico. And one stock, from what Mahima discussed, that could be turning a corner or is in fact turning a corner is VBL, Varun Beverages. For a long time, it has seen selling pressure. If it sustains above the 475, 480 zone, then I think this is in for, significantly higher levels. So definitely keep on radar. You could even consider a buy at these levels with the stop loss around these, 475, 480 zones.
Okay, the pre-open session just kicking off as we speak, and it's going to be an interesting day. So far, the implied has indicated a positive start, and those rates will settle. This big booster from the government is definitely one of help. The emergency credit line guarantee scheme has been refurbished, showing that the government wants to come in and help small companies and MSMEs. Watch out for NBFCs today. Watch out for banks today. There's a semiconductor boost in play as well. But let me go across to Chandan Taparia, Head Technical and Derivatives Research at MOFSL this morning. Chandan, very good morning to you. Let's start with the call that you have on the index. Do you think that there's enough of a boost? Frankly, the Nifty has lost its sheen in the last few weeks. All the action is in the broader markets.
Good morning. Thanks for having me. So the good part is that broad-based buying is clearly visible in the market. However, index got stuck in a range and flirting above and below is 50-day exponential moving averages. But the good part is that Dow is holding well and all set to head towards its all-time high. And I think positive effect of that may be there in the Indian market. If I need to focus on a couple of things, first, USD INR is continuously moving upwards. That means rupee is weakening. And the weakening rupee is somehow putting pressure in the market at higher levels. FI's flow is missing. And third and important part is the crude prices. So even after all these three concerns, the Indian market is holding well above 24,000. So I believe the resilience and the relative support-based buying is clearly visible. And with that, I believe the broader trading range will be 23,750 to 24,600 and beyond. For day point of view, if Nifty manages to hold 24,000, it can witness a recovery towards 24,350 to 24,400 kind of levels. If you talk about Bank Nifty index, that has been underperforming, making lower top, lower bottom. But if it manages to hold above 54,750, then short-term reversal could be seen after the profit booking of last 9 days, and it can head towards 55,000 to 55,555.
All right. Chandan, very good morning to you. What are the individual stocks that you're liking?
Yeah, so positive on the capital goods name. We have seen decent run up in most of the capital goods name, including Siemens, ABB, Cummins. And here I would love to recommend ABB. The stock has been making high tops, high bottom on the monthly chart. On daily chart, it witnessed a corrective or consolidative move in last 9 days, and now again forming the positive price pattern. So the major trend is positive, and the recent corrective or consolidation phase provide the fresh opportunity. So one can buy with support of 71.50 for an upside target towards 7600. Second trading area, there is buy on AB Capital. We are quite positive on the entire capital market and infra theme. So most of the counter, whether BSC, MCX, and counter like SDFC, AMC, and AB Capital could be on focus. AB Capital has seen a positive price pattern, has seen the multiple support-based buying near 335, 340 zone, given a decisive close with significant surge in the open interest and the trading volume. So one can buy with support of 352 for an upside target towards 375.
How do you feel about BHEL, Chandan? Just asking about BHEL because the kind of excitement after the results, order wins, and yesterday, we had Deepan Mehta coming on the show on closing and talking about how this can really add value. How do you see it on the charts?
Yeah, Tamanna, so BHEL is quite trending nowadays, whether you look at the stock market or whether you look at the election point of view. So counter has really rallied well, has been making higher tops, higher bottom in last 20 days. Stock rallied well from 242 all the way to 399. So trend is positive. We have recommended a couple of times, given a massive breakout. And if I look at the yearly chart, in 2007, it made high near 390, and now we are back to the same. So I can see here that 20 years long consolidation breakout is visible in the counter. So I believe the major momentum could continue. However, already rallied well, but till it holds above 355, ongoing positive momentum can take it towards 395, 399, and above that, I believe 500 to 520 could be the positional target because of its multi-year breakout on yearly chart.
Okay, 4 minutes into pre-open, I wonder what UBL is doing because of the weak numbers and the weak commentary. While the Nifty is looking okay, United Breweries down about 1%. Keep that at the back of your mind. USL too, the update wasn't the strongest, but maybe you'll keep an eye out on the dividend. So keep note for that, and keep an eye out on Vodafone with Kumar Mangalam Bidla appointed non-executive chairman. That management deck reshuffle, does it bring some more confidence? Well, like it or not, Vodafone Idea has gained 10% in the last 3 days. So whichever way you look at it, from a percentage move perspective, it's not done too badly. Okay, more updates and more stocks we'll get from our guests. But on the big brokerage call for the day, Nomura has downgraded Larsen & Toubro to neutral. Hiral has more details on the rationale. Hiral, the jury may be split out there, but what is Nomura's rationale?
No, absolutely. The jury is split, and what everyone is actually pointing towards is the execution, which has been weak this time around, and that's the reason why you are seeing this kind of a split, because revenue visibility will be dependent on the way they execute. Nomura, what they're saying is basically they've cut the target price to 3,940 from a 4,510. The couple of points that they've pointed is, one, muted performance when it comes to Q4. They've not been able to meet their guidance, and the margins have been muted. Secondly, the guidance that they have given for FY27, and if you talk about Lakshya 2031, that has been muted as well, and that is what the street is not really happy about. On the back of which you have Nomura, who's gone ahead and cut FY27 and 28 earnings estimates by 8%, and that's a large number coming in there. Apart from that, what they've indicated is that they're relatively less optimistic, mainly on the back of the FY27 order inflow momentum. They're not expecting strength on that front. And if you have to look at valuations as well, they're finding the valuations expensive at the current moment, because your FY28 core earnings, if you have to look at that angle, it implies a lesser comfort when it comes on the valuation front because of the near-term uncertainties that you're looking at and the limited visibility that they have on the return on equity, if that would improve or not. So it's mainly your geopolitical, your West Asia crisis, which is actually implying to this kind of a downgrade.
For that, Hira, let's just take a look at some of the movers this morning. Let's pull up a Coforge, and result impact will begin to be seen in the early moments of trade, and this is the pre-open session, right? Coforge now about 8% up. Good set of numbers over there. Margins have improved. The outlook is also more positive compared to maybe some of its peers. Poonawalla, FinCorp, and the numbers on the face of it seem like a bit of a turnaround story. That stock about 5% up. I want to look at Aadhaar Housing Finance and Ajanta Pharma. All of these also reported post markets close yesterday. Aadhaar Housing Finance just about 0.5% up. Ajanta Pharma, let's look at that as well. 2% up right now. JNK Bank and SRF is the other one that we should quickly look at. SRF was a bit of a mixed bag. But the stock is doing well right now, 3.5% up. Like, can we pull up JNK Bank as well, Jammu Kashmir Bank? These are some of those which reported. So all of the results have been taken pretty well. I don't know if United Breweries has been seen at the same way, because it was a bit of a weak set of numbers overall. Yeah, and you're seeing that really reflect about 2% down right now. Lloyd's Metal and Energy is the other one we should look at. Let's look at Spandana, Spurti, financials, all of those that have been reported. Lloyd's Metal is doing well this morning in the pre-open session. Aadhaar Housing Finance, Parag bhai, because this is, I know, something that you've been tracking. Did you find the numbers a little below expectations, or you were happy with them?
Absolutely. 20% loan book AUM growth, guiding for 20% AUM growth, disbursement growth of 20%. Absolutely. And asset quality, for example, stage 3, that has improved significantly. So credit cost is absolutely under control. And it's remember, the good thing about Aadhaar Housing is 100% secured loan business. And that too, around 13.8% is their yield on advances, around 13 lakh crore is the ticket size.
At these levels, at this valuation, still a buy?
So I am,
for those who haven't.
It is my largest small cap holding, just for the record to say. We hold
which is why I'm asking you about the results.
We have bought at 450. We will hold on. That is the view I have.
Okay. What about on
It's a 20% compounding story for me.
20% compounding story in Aadhaar Housing Finance, because the numbers looked okay. It was not firecracker. It was decent.
I like to say one thing. In lending business, if somebody grows at about 30, if there is a base already, and if you start growing at about 30%, there will be an accident at some point.
You should be worried.
You should be 20% growing business in lending. That's it. 20 to 25% max.
Yeah, double in 4 years.
And which other business is at least, let's forget about Samsung, which has hit a market cap of $1 trillion today.
Yeah,
TSMC,
because AI.
Nvidia, those things are...
No, but then there's a company that makes toilet seats called Toto that has also now become massively important because they found an AI play.
AI detects.
No, I'm not even making this up. Please go look it up. Something that they use in their toilet seat covers, a kind of ceramics, can be used in semiconductors. And suddenly the valuation of that company has boosted.
I hope some of our large caps can develop something like this. I hope Bharti Airtel does something like this.
Kajaria Ceramics. Let's try and figure out if they have that ability.
I hope we also have some
by the way, Kajaria,
AI story.
I must point out that, I don't know, can we pull up Kajaria Ceramics, because the stock was up and about? I wonder if
because of Toto?
Well, it's up 2% right now. Who knows?
All is welcome. All is welcome, yeah. But I wonder if 908, I wonder if IT is actually down today because of the Anthropic thing, as well as the Cognizant news. Nifty IT. Coforge is one thing.
No, it's up. It's up.
Nifty IT is up 1%, so not quite I think relatively unfazed, I would say, by what Anthropic and Claude had to say. Maybe it's the market moving it, or maybe Parag Thakkar's optimism is rubbing off as well. Okay, Kush Bora, would you use an uptick in any of the IT names to offload them?
That's a good point. You could look at some profit booking, especially Coforge. If you did buy at lower levels, it was hovering around that 1150, 1180 zone for a while now. So if you do get this kind of a bump up, not a bad idea, because like we've discussed, there has been consistent selling pressure in some of these names. So yeah, I would look at an exit. One stock that I want to mention that I think Tamanna just mentioned briefly is JNK. I'm glad that the ceramic story came out. I mean, where you were going was a very different angle altogether. On AI.
I was not going anywhere.
People are right now furiously Googling Toto. It's a true story.
JNK Bank.
I was talking about JNK Bank. We've discussed about this stock in the past around those 115, 120 levels. Very strong moves, good volume accumulation. A long-term cup and handle formation, resistance, that too comes in at about 150. So from here on, that distance is also, quite a bit of, gains to be had. But a breakout above that will put it in a different trajectory. Very constructive on JNK Bank. Continue to hold if you bought. If not, you can still buy. Put a stop loss around the 120, 125 zone.
I do want to bring up the private banks, and so it's been a while since we've spoken about it on the fundamentals, and I'm not complaining, I must say, but we must bring it up because it's been an underperformance, right? And ICICI Bank after the pre-open session is up about 9-10%, but it's at levels that was last seen quite a while back. So is there any chance that it will move out of the funk, or is it likely to stay weak?
Bit of a disappointment, honestly. On the so I can understand the PSU banks not doing well, but at least ICICI, it should have moved. With the kind of volumes on the downside, I remain a little skeptical that the recovery could be sharp on this one, unless there is a fundamental or a news back trigger which brings in short covering rally, not just for ICICI Bank, the entire banking pack. So more hopeful for that rather than data based moves on this. There is a sharp negative bias right now. I would look at lower levels of about 1235, 1240, and if those are broken at about 1215. The short trade risk reward ratios missed. These are more stop losses if you have a long position. So yes, the bias on at least ICICI Bank remains a little negative. HDFC Bank was always a medium to a long term play, not a momentum play. So not too worried on HDFC Bank right now.
Okay, not worried about HDFC Bank. Okay, what else is moving? So since we spoke about the heavyweight Reliance Industries, you want to weigh in, as well as the Adani Group stocks. You spoke about this at the start of India Market Open. Does that strength in the Adani Group stocks and Reliance Industries hold?
Again, for the third day on the trot, Adani Enterprises is turning a corner. This could be a very good positional bet. I would suggest stop losses around the 2375, 2350 zones. The other names, Ports, Power, Green, they've run up so much that you want to book profits right now and consider buy on declines. Reliance Industries too, it's run up quite a bit, but you could still accumulate this with a stop loss around the 1430 mark.
Chandan, I want to ask you about Vodafone on the charts and the decision of Kumar Mangalam Birla to now be non-executive chairman though, but that now he's in the mix after the AGR problems are behind them. Will be looked at positively in a fundamental fashion, but on the charts?
Yeah, so on monthly chart, the counter is forming the cup and handle kind of pattern. However, it's beaten down if I look at the history of last 11 years. But in last couple of years, multiple supports-based buying were seen in the counter. So I believe some recovery could be there based on the recent price can head towards 13 to 14 marks.
Okay, well, Indian markets need to find their own Samsungs, SK Hynix as well as TSMCs. For now, let's see what the Nifty is doing on open. 0.5% higher, 147 odd points, 24213. Up one day, down the next. It's kind of meandering at these levels, but it's a strong start today, so we take it with both hands. Market breadth looking positive. Mid-cap index up about 1%, over 1%. Small caps up 1% as well. The going is good. Nifty IT2 is participating today, 1.26. This is a surprise for me, really. But, well, we take it. Let's get the heat map up on the screen and see what's moving and what's not. A lot of green, very little red. L&T, the one sulk today, and a couple of downgrades or maybe more than that have come in because of the lack of clarity on Middle East, so no surprise there, but look at the green. Interglobe Aviation up 2%, Shriram Finance, the high beta Nifty name, up about a couple of percentage points. On a day when the Nifty's up, Shriram Finance pops up. Bajaj Finance M&M, continued buoyancy. I see a lot of brokerages today talking about M&M as their high conviction idea. Watch out for that one. There is SBI up about 1%. Bajaj Auto makes the cut today as well. Max Healthcare, Tata Steel, Hindalco. So some of the metal names are doing well too. Effectively a rising tide carrying a few boats along with it, with L&T being the sole sulk, if you will, now down 3%, and with the little weightage that it has, might be impacting the Nifty a little bit. But it's more individual names doing well and lifting the market higher. Had it been a Reliance or an HDFC in the top 15, maybe the Nifty could have eclipsed that 1% mark as well, Tamanna.
India VIX 4% down and moving. If you had seen our show yesterday when this whole Operation Freedom first started, you would have remembered perhaps us saying that this is possibly a negotiating tactic, and that's exactly what happened 24 hours later, right? With the US president saying, I'm stopping this Operation Freedom. I don't quite care about the people stuck in the Strait of Hormuz anymore because our negotiations with Iran are going well. I want to pull up the India VIX full frame if we can. There you go, at about 4% down. The volatility index, the fear gauge, is benign today. Advanced decline ratio is looking quite beautiful, 1955 to 318. The mid cap and the small cap is looking good as well. 1.5% nearly up for the Bank Nifty. Small cap 1% up, the mid cap 1% up. The Bank Nifty is roaring because the government is coming and saying that, hey, we are doubling down on protecting our economy. This emergency credit guarantee linked scheme that they have announced and enhanced gives comfort to banks and NBFCs that the West Asia crisis is not going to let companies crack. We're there to help you out. Let's pull up the sectoral heat map very quickly and just show you what's working there. Do we have a full green screen? Almost. Actually, you nearly have a full green screen. That Nifty energy is pretty much flat. It's not even really showing any kind of pain or massive downtick. Oil and gas is about 0.5% up. PSU banks there are up and about 2% up this morning. Auto is doing well. Bajaj Auto ahead of the buyback announcement is already popping. You have Hero Moto, decent results. Should we look at the internals of the Nifty Auto very quickly? Let's just do that. Let's look at the internals of the Nifty Auto and the Bank Nifty. M&M. Top of the charts here, 2.5%. Ashok Leyland doing well. Samvardhana, Tata Motor PV, Bajaj Auto, Hero Moto also good set of numbers. All of them looking pretty decent today. The Bank Nifty also is showing good a good mood. PNB about 2.5% up. IDFC First also doing pretty decently. Let's look at individual stocks, shall we? Those who have been reporting results, and that's what really matters. The fact of the matter is that you've had a decent set of numbers from quite a few companies. Look at Coforge, the entire IT pack looking so dismal, and Coforge comes in with the strong set of numbers, 7.5% right now. Poonawalla FinCorp going strong, about 5% up. Aadhaar Housing Finance, numbers were fine, but that stock has already run up a fair bit. So you're seeing a 2% downtick there. Lloyd's Metal was looking okay. Aavas Financiers, Spandana Spurti, some more in the financial space looking good. Raymond Realty, something's happening with real estate companies this quarter. All of them reporting really strong results. I want to look at Vodafone Idea. Vodafone Idea is the black sheep that is coming back into the fold of a company that is now being taken seriously, if I had to put it in a very succinct way, because now you have pedigree coming in to say, okay, we are running this company. There has been some relief from the government coming in. Legacy issues are moving behind. 2% up. Obviously, all of these are not recommendations. Please tread cautiously and with your own personal finance advisor. I want to look at some NBFC names this morning because MSMEs have got some boost. You've seen 5-star, Ugro Cap, some of them moving quite well. Just NMDC, very quickly, they've hiked the price of some ores, lump and fine ores, by 200 rupees a ton. That's stock about 2% up. So there are enough victory stories in early morning trade today, Alex.
Yeah, you said it, Tamanna, and you've captured quite a bit of them. There are a few that stand out actually. Kajaria Ceramics, not perhaps for the reason we were talking about earlier, is up close to 4% at this juncture. Marico is doing reasonably well. Force Motors is up in about 4.4%. And the entire banking pack is actually buzzing in trade. Some of the smaller banks doing well. City Union Bank, for example, is up about 4.6%. Poonawalla FinCorp, of course, we already pointed that out to you on the back of earnings. But I would like to pull up the Bank Nifty internals just to drive home this point and to see whether it's across the board gains, because that ECLGS scheme that has been announced is proving to be a little bit of a fillip. So take a look at even State Bank of India, it's gained about 1.5%. PNB, of course, on the back of earnings is also in focus, but Bank of Baroda up about 2%. So the PSU banking pack also gaining ground. Quick question to you, Kush, on the banking pack and on Nifty Bank in particular. You were saying that it would need a trigger. Is this that trigger?
I would certainly hope so. The reason I say that is because right now, as we speak, Bank Nifty is at that upper end of the falling channel that we've been speaking about. So if we get a close above this 55,200, 55,300 zone, then you break out of that channel, and that's a positive sign. So I remain constructive. We do need a close above this 55,200, 55,300 mark, for the channel to be broken. Then you can go long on Bank Nifty. So far it's looking good, but we do need that close. So watch till the end of the day.
Watch till the end of the day. You can catch it on closing as well. But on that note, gentlemen, thank you so much for joining us this morning. A pleasure speaking with you as always. We're holding more or less with gains of about 0.5% for the benchmark Nifty 50. On that note, let me bring in Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers. Always a pleasure to speak with Manish because of the clarity of thought that he brings to the table. Manish, welcome and good morning to you. Let me start with this. Are you less concerned than you have been at any point during the conflict so far that there will once again be kinetic warfare, there will once again be a problem? And how are you looking at this entire crude and energy situation? Is it going to be a problem in Q1?
Yeah, so we are always hopeful that we'll see a diplomatic solution to this whole stalemate that's going on. But till about the point in time when everything is settled, we can't be very sure, because it's one day one thing, the other day the other thing. So till about that point in time, it's better to be cautiously optimistic. See, oil is going to be a problem if we don't see a diplomatic solution by the month of June. This is my understanding. For the simple reason is that supply chain disruptions in the production side of oil in the Middle East is just too big to get ratified very, very quickly. And what the entire globe is leaning on today are the inventories in the system, and more so the onshore inventories in the system, which are getting depleted on a daily basis because the world is consuming oil. And the criticality or the critical levels of these oil onshore will get breached in the month of June if normalization of some sort of supply doesn't happen by the month of June. So today, even if the stalemate continues, we have seen $125 crude, and currently we are hovering at around 114, 115. But we are not seeing a massive spike beyond 125, even though Strait of Hormuz stays closed, and we are not seeing any solution come by as we speak. Even there are a lot of talks, but this 125 gets breached in the next 1 month if there's no solution. That is the understanding. And once that happens, then it's a full-blown inflation shock, energy shock translating into inflation and growth shock globally. I mean, that's how I would look at it. So it's better to be cautiously optimistic at this point in time.
Manish, hi, good morning. Tamanna here. Just want to talk a bit about IT and banks. The Indian IT sector seems to be resilient in different ways. It keeps getting the confidence of investors back time and again, despite every new release by Anthropic, etc. Do you think that Indian IT has now more legs to go? Is that something you're looking at favorably?
See, AI is on us, that is for sure. It's going to be relevant in the context of IT. But, Indian IT has got derated massively. Hirings are not there. We have de-hiring or layoffs that is there across the globe. Anthropic comments on a daily basis, now they seem to allude. Last night's commentary is saying that enterprise software on AI will be executed with hands, which is manual hands, which is to say that companies like, IT vendors like Info, TCS, etc., will be relevant in the implementation of enterprise AI. There's no blanket, incorporation of AI just about as the product is there. You've got to customize it to the enterprise needs per se. So system integration is going to be there, and third-party IT vendors like Indian IT is going to be relevant. Prior to this commentary, it was widely believed that this is going to be massively disruptive and enterprise AI is going to be taken off totally. So that's basically the bullishness that we are seeing today. Nonetheless, the valuations had come off massively, and I had alluded to in the past also that zero growth means a 5 to 6% free cash flow yield. Some of the known names in the IT space are trading at those valuations today, which means that Indian IT today is reflecting zero growth, whereas you are still going to see some growth on a constant currency basis, low, single digit sort of return, and currency depreciation added on to that. So ballpark 8 to 10% INR growth is par the course, whereas the markets today are pricing in zero growth. So you have valuation comfort, and new commentary from AI like Anthropic is basically supportive of valuations and the growth for Indian IT. So that's the bullishness that we are seeing.
Got it. Well, 1.8% up. Manish, just sorry, a follow-up here, and which is this, that if Anthropic is coming out and trying to do exactly what the IT service firms have done for years, and doing that with the advantage of owning a large language model, wouldn't that eat into that business? And shouldn't that therefore be a medium-term negative? And shouldn't the markets factor that in, never mind the valuations?
No, so competitive intensity is going to be there. But Indian IT businesses have, track record, legacy, and their businesses aren't going to fall off a cliff. You may say that they will come down on a trajectory slope on the downside, but it's not going to be a massive 90-degree perpendicular on the downside. So competitive intensity will be there, and more so on account of their own enterprise system integration tools, etc., which the AI guys will be having. So we have to be more competitive. That's part of the course. That is always there. Indian IT always adapts itself around the new technology. So that is basically the point that can be argued, to that point that these guys are going to have their own enterprise system integration softwares.
Okay, just want to understand about the BFSI space, Manish, and what the government has now announced in terms of the ECLGS scheme and some buffer really for MSMEs. Does it relieve concerns that we may see the impact of the West Asia crisis on smaller companies and then on asset quality in the next 6 months? Is this enough?
Yeah, so this is the beginning, and obviously if this whole resolution doesn't happen, then there's going to be a problem on the cost of credit as well as the quality of credit in the next 6 months. That's for sure, and that is why this ECLGS scheme comes in handy at this given point in time. And but as of now, the credit cost is holding good. So let's assume for a moment that in the next 1 month, you are going to see some normalization of the West Asian crisis. Then obviously the damage is mitigated. But we could expect more if this gets prolonged into the future from the government. As we had seen during the COVID times also, government always comes out with a helping hand for the MSME space with, loads of moratoriums and all of that. So this is maybe just the beginning, but, the numbers, etc. for the BFSI space is pretty good. There's no credit or asset quality concerns so far, either on the corporate side or on the retail side per se, and even the MFI space is now turning the corner. So credit growth in the system FY27 is going to be better than FY26, 13 to 16%, depending on what you believe is going to be the number. And it's a proxy, it's an India proxy, beta play. If you are looking at a beta play, then BFSI is the beta play when it comes to India proxy. So all of these things are contributing to the bullishness.
Okay. Manish, thanks so much for taking the time out and giving us that perspectives, or those set of perspectives, if you will. Really appreciate your time this morning.
Thank you.
All right, we will dwell a little bit on that big news of the morning, which is IT. We spoke about Anthropic and what's happened there. The other piece of news around IT is Cognizant reportedly planning a large-scale restructuring as a part of its transformation strategy, with possibly a number as high as 15,000 jobs being cut globally. The belief is that India could see a very large impact as well. Before we speak with Neeti Sharma, CEO at Teamlease Digital, Puneet Johnson with the details of the same. Puneet.
Well, thank you for that. Definitely 12 to 15,000 jobs expected to be impacted because of the latest cut from Cognizant. And it's also important in the India context because globally, Cognizant has roughly around 3.6 lakh employees. Out of that, 70% are in India. So India could see a material impact for that. And what we've seen in the US, a lot of the companies, reducing their work count. It's almost crossed the 3 lakh employee mark that have been laid off from giants like Meta, amongst others. Now it's started to make its way into India now. Now, given this context, you could see some more impact on hiring from IT companies and hence an impact essentially on the hiring trends in companies like TeamLease, amongst others. So some perspective on that will be important. We also had Jefferies come out with a very interesting note on Anthropic making its way into the IT services segment. And Jefferies had just made one key point that this move could underscore the relevance of IT service offerings on a broader scale. So that being the context, it's important to get some perspective from hirers and essentially get some perspective on what could be FY27 in terms of hiring trends for the IT service companies.
Thank you for that, Puneet. That was, well explained on the headwinds which hiring in IT is facing. And Neeti Sharma, CEO of TeamLease Digital, joining in to give us some perspective. Now, Neeti, of course, we don't officially know how many jobs Cognizant is going to cut. We do know that they are going to save money because of their Project Leap, which includes employee severance. This is what their official communication says. We don't know to what extent. But what are the what is the hint that you are getting, or what are the signs that you are seeing on ground in terms of hiring with large companies?
Morning, Tamanna, and thanks for having me here today. There is obviously disruption, but I would not call out saying that there is no hiring happening at all. There is hiring happening. I think what's happening is a very structural shift to how and what things can get done and where hiring is actually happening. What is changing is not about volume hiring. I think strategically, all the services companies are looking at AI first skills. They're looking at hiring freshers, junior workforce continuously gets hired, which is really about bringing in new talent, new skill sets. Yes, what is getting laid off, I think the segment that is getting impacted the maximum is the middle level segment, which has largely been people managers. So right now, I think all the services companies are looking at layoffs where people are not able to bring in outcome linkages to their roles. But wherever there is outcome linkage, and obviously wherever there is domain experience and expertise, those people are definitely continuing to stay with the organizations and even get hired across other industries.
Okay. I just want to understand this. So Neeti, okay, that point is well made. But if you look, and good morning, this is Alex here. If you look across the value chain, right, and at the various levels, if you're sitting outside an IT company, you're trying to understand this, you understand this from the perspective of entry level, middle level, and then the top level, right? So most of the disruption, can you explain at what point in the value chain are you seeing that? And what do the numbers tell you as well?
Yeah. So I think right now the highest volume of disruption is happening in the middle level. Largely people who've been, people managers, roles which had just managed thousands and thousands of team members and not really the outcome that the team members had to deliver. I think that's where the highest volume impact is happening. Let's also understand, we've been talking about layoffs for the last 2 years in the IT industry. The first lot was really about taking off the volumes, which is at the bottom of the pyramid. People who were doing redundant, continuous work, those were the ones that got laid off. Then we heard about some leadership changes that are happening. And the past few months and quarters, we've heard a lot about middle level impact that is happening in terms of shift and, and in terms of layoffs. So yes, currently the disruption is at the, I would say about 15 to 20 years or 25 years of experience, people who are in the 38 to 45 age group, they are the ones who are getting impacted the highest. And the only reason is because all these services companies have typically worked in a pyramid structure, which would mean that we needed managers to manage a set of people who were team leads, and then they were managing a lot of other people. So that's where really the highest volume impact is happening right now. The other impact, as we see, is because we are, all these services companies have made huge investments on AI and agentic AI. People who have not been able to upskill themselves or stay relevant to the shift in the skill set, I think they are the second lot that are getting impacted, because I have seen in the past 2 years, all the services companies have made massive investments in skilling and upskilling the workforce. Yeah. So people who have not been able to upskill themselves and stay relevant are the ones who are also getting impacted.
But Ms. Sharma, in the same breath, you are telling us that the mid-level is getting impacted. I mean, it's counterintuitive, because the overarching belief is that if AI is impacting one level of personnel, particularly in IT services, but otherwise, it is at the bottom layer. You're saying that is not happening, it's happening at the middle level.
Yes, that's also because let's understand the middle level workforce is obviously way more costly than people who are coming into the workforce right now. So what's happening, and let's understand, all the graduates who are coming out of engineering schools right now will be AI first graduates. So we don't have to spend as much time in telling them to adopt AI. I think their adoption is the highest. If you look at the various levels, the leadership is the lowest adoption. And the junior most entry level workforce is the highest adoption, because they are AI native workforce that is entering into the labor markets right now. Plus, they will come at much lower cost than what the middle level layers are. I think you have to understand that what AI is doing is actually disrupting our own experiences and what we've been doing for the past many years or decades. Right. So today, I think there is no premium because I have been doing software development for the past 20 years. Right. The premium is, can I do coding or efficient coding much faster, much more productively with the use of AI? And there I think anyone with no experience can also be, a star performer.
So Ms. Sharma, just give us an absolute number to help understand. If company A was hiring 1,000 people 3 years ago, how many are they hiring now?
If they were hiring, I would say if they were hiring 1,000 freshers earlier, now they're probably hiring about 600 freshers, or that the plan is to hire 600 freshers. So we hear all the services companies calling out very high volumes of fresher hiring that'll kick in very soon now. But if they were hiring laterals for, I would say, skill sets which are more conventional, there I think the hiring continues to be only about 25%. The hiring is continuing to increase in the newer skill sets, which is AI ML coding, which is data, and a lot of data analytics, engineering, architectural work is being hired for, plus a lot of work happening on governance and cloud and security. So I think while we are talking about conventional skills on software development, and typically that's where the IT services hiring was happening, today the shift is also about skills and who they're going to hire.
Fair enough. Okay, thank you so much for joining us and explaining all of this perspective in such detail. Neeti Sharma there of Team Lease. What stands out? If 1,000 freshers were being hired 3 years ago, it's 600 now. The hiring of lateral entries and more skilled people in the IT sectors dropped to 25%. But let's talk about PNB. PNB has surged almost 3% after posting its Q4 results. We're going to be speaking to the management shortly. Piyush, what's worked for PNB this quarter?
Yes, Tamanna, PNB actually came out with PAT numbers, which was essentially aided by lower OPEX and lower amount of provision, because their core income, which is the net interest income, was actually down 10% in other income as well. But we have with us Mr. Ashok Chandra, the MD and CEO of Punjab National Bank. Sir, let me start by asking you on the ground, how has the loan demand been? How has the RAM segment grown in Q4 FY26?
I think if you see the performance for this entire year, we have done exceedingly well in the MSME. Q1, Q2, Q3, every quarter, we have grown at more than 20%, and that is the reason our YOY growth in the MSME segment is more than 20%. Retail, excluding IBPC, we have grown at more than 18.2%. So core retail activities are happening in the bank. Also, priority sector agri, we have grown more than 16%. So all those things put together, I think we have seen the good traction that is happening in the RAM portfolio. In fact, that was one of the focus area for the bank. If you remember our discussion in the very first quarter result, I think we had mentioned that bank will put a lot of focus on the RAM. Bank will put a lot of focus on activities through the branches so that the business should start generating from the branches. And we are very happy that successfully we have driven those activities. Even the corporate loan book also, we have grown at 11.6%. So all put together, bank has put a robust credit growth against the guidance of 11 to 12%, which we had given last year. We had grown at more than 12.7%. And that is the reason this year our guidance is revised and we have given a growth rate of 12 to 13%. And I'm very sure we are going to cross this guidance.
In fact, Ashok sir, if you could give us some sense on the corporate loans that are in the pipeline in terms of disbursals and sanctions.
Corporate loan book also, we have sanctioned more than 4 lakh crore under that corporate book for the different segments. And in that, 1,18,000 crore of disbursement is still pending. So that disbursement will happening in this financial year onwards. And that is the loan book, which is already there in the system. In this month itself of this financial year, we have sanctioned more than around 25 to 30,000 crore. So we have a very, very strong the corporate pipeline also. When we are putting a lot of focus on the RAM, at the same time, being one of the largest banks in the country, we are mindful of our responsibility to take care of the corporate sector also. And we will not hesitate to take part in that growth journey. We are taking that share and growing at more than 11%.
We also want to assess, the RBI has come out with final ECL guidelines. In terms of PNB, how much amount of provision will the bank need to make to comply with the ECL norm, and subsequently what would be the impact on your credit cost, because you're supposed to now categorize loans in the stressed asset category as well.
See, one thing I will tell you that we have just brought in the digital tool to measure that ECL framework. I think there are different models are there. We are working on that. And final number, I think we need to wait for 2 quarters. I think October, I will give you the exact number which is going to come out of this ECL transition. But I will tell you another aspect of that. See, we have 2,045 crore of floating provision. In this quarter, 270 crore we have kept. And earlier also we had that amount. So all put together, 2,045 crore is parked as a floating provision for ECL migration. Second aspect of looking to the migration is, today we have 17.74% is our CRAR. We have CET1 is 13.62%. Now, if capital point of view also, if you see, we are in a very, very strong position to face any requirement that will be there for the ECL transmission. Third aspect is that we have more than 97% is the provision coverage ratio. So all these things put together, I don't see any challenge that is going to come in our bank for moving towards the ECL from 1st April 2027. Absolutely, it will be very, very smooth journey and without any challenge in our balance sheet.
And finally, in terms of your capital raise plan for next financial year, do you have any? Because ECL guidelines are supposed to be met, and there could be some impact from the West Asia conflict as well on the bank's balance sheet.
No, we don't require to raise any capital. In fact, last year also we had taken the approval for 4,000 crore of CET1 and 4,000 crore of AT1 and 4,000 crore of Tier 2 bond. But we found that the capital is not required with a growth of 13-14% in the credit also. I think we have sufficient cushion to grow. This year also, with this CRAR, we don't require any additional capital to be there in the to be required now.
Thank you, Ashok sir, for talking to NDTV Profit. Back to you, Tamanna.
Thank you for that, Piyush. Let me go across now and talk about Bajaj Auto. Auto Pack in focus today, and Bajaj Auto is set to announce its Q4 results. Puneet, what is the street penciling in? And I think results on one side, buyback is where all the excitement is, isn't it?
Well, most certainly. It's come after a couple of years, and it's also been very rewarding for shareholders at this point of time. So in terms of numbers, a 29% volume growth is helping over a 20% growth essentially in revenue. So you're seeing EBITDA also rise to 4,643 crores and maintain that 20% EBITDA margins for the 8th straight quarter this time around. Profits also expected to rise by 2,615 crores is the other key kicker. But as you rightly highlighted, it's mulling a second buyback in the last 2 years. For February 2024, the buyback was announced at 10,000 rupees per share. And looking at the current share price, whoever had given it at that time to the company, and essentially the company bought back their own shares, had benefited because of this, because stock's not gone anywhere post that in the last 2 years. The buyback amount was almost 4,000 crores in 2024 and 1.41% equity was bought. So expect a similar amount or slightly more higher than this is the expectation on the street. 2022 in June, the buyback was at almost 4,600 rupees per share at that time. And it was also almost a 2,500 crore buyback. So the buyback will be something that will dominate the news flow in that sense. But you also have to watch out for the integration of KTM since the company has now gone into bankruptcy and Bajaj Auto has a majority stake now. So there is expectation of an update there. And finally, in terms of what they are expecting in terms of FY27 as an outlook, because the base year for H2 of FY26 is quite high given the GST rate cut benefit.
All right, Bajaj Auto in focus. That's going to be one stock to look out for. Already 2% up before those numbers come. But so will Godrej Consumer Products, reporting its Q4 earnings today. Varsha, what are the key expectations? Okay,
Right. So, Tamanna, overall, the growth is expected to be largely in line with what the management had guided, because that is what the Q4 business update is also indicating. Indonesia business is something that's recovering for them this quarter, continued to recover this quarter as well. In terms of estimate, revenue is expected to rise around 9-odd%. EBITDA may rise around 12-odd%. Margins may slightly improve to 21.7% versus that of 21.1% earlier. And net profit is seen, is expected to rise around 40-odd% as per the Bloomberg estimates. Now, in terms of Q4 update, consolidated EBITDA is broadly, the growth is expected to be, near that, close to double-digit growth, largely in line with revenue is what the management has said. In standalone, they're expecting double-digit sales growth, volume growth in high single digits, and EBITDA margins likely to sustain overall in Q4. Indonesia business underlying volume growth is expected to be in mid-single digits, and where Africa, US, and Middle East business is concerned, they're expected to see double-digit sales growth and high single-digit volume growth. In terms of commentary that's coming from the management in terms of commodities, they've said that high crude prices have created upward pressure in Q4. They expect cost of around 6 to 9% because of high crude prices and remain cautious on war situation. Now, key things to watch out for will be in terms of commentary that they give in terms of price hikes, considering that the overall impact of crude itself is around 6 to 9% plus packaging cost will add to that. Volume growth going forward, how will that picture be looking like considering the price hikes, and overall a pickup in urban demand, and further detailed commentary in terms of impact of the West Asia conflict. So this is the overall view of what you can expect from Godrej Consumer earnings.
All right, a key one to track. Now, we have to slip into a very quick break, but before that, just take a look at the markets. The Nifty 50 now trading with gains of just about 0.5% or so, having given up a little bit of ground. And I do want to pull up the advance decline ratio just to see if the gap between advances and declines has narrowed just a tad bit. No, it hasn't. Not substantially at the very least. You have advances that have held, but declines actually have gone up just a tad bit. We have to slip into a very quick break. We'll be back on the other side to talk semiconductors. Stay tuned.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracked.
All right, I want to do a quick market check before we get to our next conversation. It's heartening really that markets have done well, but the Nifty now coming off a tad, still about 100 points up and 0.5% up, but come off from the highs of the day. I want to pull up the Nifty heat map if we can very quickly, because remember at start we had just L&T in the red. Everything else was doing fairly well, and IT stocks were there up and about. Indigo, Trent, M&M still looking fairly robust, but that line of red has definitely spread. HUL, Titan, Power Grid and ONGC also seeing some pain points. But let's talk about what's happening in West Bengal. We have our very own Sharad Dubey there. He's on a spree in Kolkata, speaking to all of the top companies. Here's his conversation with Titagarh Rail Systems, headquartered in Kolkata and closely aligned with the state's rail and infrastructure ecosystem. How is Pritish Chaudhary of Titagarh looking at the big change in government in West Bengal? Listen into this conversation.
We are joined in by Prithvish Chaudhary. He is the Deputy MD at Titagarh Rail Systems. Good morning, Prithvish. One first query is the West Bengal looks like it's seeing a renaissance. And the sentiment, especially the infra push, and your company is also there. So how do you see this? What are the interests looking like?
So first of all, I think this is a great development for the state. I think for the first time in 5 decades, there is a government that is aligned in the state with the center and the policies of the center. And as we know, the government in the center has been always very pushy, very aggressive, and very visionary on the infrastructure sector. So we do hope that that translates into the state, especially on the urban mobility side, the metro systems and the urban mobility in the state. From our perspective, hopefully should undergo or should see a very rapid advancement.
Well, there is a lot of bullishness coming in, but Pritish, I just want to understand from the Bengal business community, what is the request coming in, especially on the schemes looking like, or any bottlenecks which need to be cleared?
So I think the industry sector as a whole has not been a very key focus area for the local, Bengal governments over the many decades in the past. So we do hope that a lot of the industrialization schemes that are seen in states like Maharashtra or Gujarat, something similar is made available in Bengal to really attract more investment to Bengal and facilitate that ecosystem really to develop for industrial growth.
All right. That is something which everybody is talking about. Even the entrepreneurs are talking about, get West Bengal at par with other states also. But apart from that, coming back to your company itself, how's the order book looking like, and, which segments you are seeing a good demand trends coming in?
So from our perspective, the passenger rail systems segment, which includes the metros, the Vande Bharat, that is looking very, very strong. The Indian economy at large is looking strong, and the freight loading targets still remain at 3,000 million tons, which they were. So the freight demand or the freight wagon demand also in the midterm or in the next few months should start ramping up again. As a company, we have kind of worked a lot, and we are investing now a lot to really get into the high-speed rail segment, which in the new union budget, multiple new corridors were announced. So from our perspective, from a Titagarh perspective, the passenger rail system segment, including the metros, the commuter trains like Vande Bharat, and hopefully someday in the future high-speed trains, is something that we are very bullish upon.
Also in third quarter, since right now your numbers are also not out, there was some wheel set constraints coming in. Street was a bit concerned. Pritish, I just want to understand, that pain is still there or is it bottoming out?
So that pain is slowly starting to bottom out. Another good news on that front is that our own wheel set manufacturing facility, which is in a joint venture with Ramkrishna Forgings, that's starting trial production soon. And in the next couple of months, we should start commercial production by June, hopefully. So, that's a permanent once and for all solution to the wheels problem on the freight
Exactly.
side.
That's an interesting take. And abhi महंगाई थोड़ी बढ़ गई है. And we have seen that across, talking to a lot of people from Bengal as well. A little bit of inflation cost is coming in. So that also coming in your industry as well?
So we as a company, we as an industry are quite insulated from the inflations because most of our contracts have a price variation clause in them. So the price indexes which move, they are actually passed on back to back to the customer. So we yes, quarter to quarter, there may be some differences because the indexes don't always move exactly as per the actual price movement. But on an annual basis, on a year-round basis, we always pass on the benefit or the disadvantage of the cost to the customers.
Fair enough. I'm just looking at this train, how it's actually looking like. It's pretty, like there's a child in me which comes out, but it's wonderful to see how these Vande Bharat trains are, coming. I'm just going to ask about this because let's take a 3-year, 5-year perspective. Of course, there is a geographical advantage in Eastern India and there is a need for that infra, which we already discussed. But how's the vision looking like? Any numbers we can see for the next 3 to 5 years, at least on the industry front?
So that's actually a model of our Vande Bharat sleeper train. That was one of the first models that was designed. And we should be able to launch the prototype by Q3 of this financial year. As for future plans, as I mentioned, the high-speed segment is something that we look at getting into with a lot of vigor, especially now, with this new development in Bengal. We're hoping that the industrialization, the industry incentivizations and industry policies really undergo some dramatic shift, which enables industries like us and more companies like us to really expand, our manufacturing footprints.
Okay, so you can see that entire conversation with Titagar on all of our social media platforms as well. But talking about policy push, the cabinet has now cleared 2 new semiconductor units under the India Semiconductor Mission, taking the total approved projects to 12 with over 3,900 crore in fresh investment. India's push for semiconductor self-reliance is taking shape. We're going to be speaking to one of the key players, those who will be moving ahead with this project in this leg. But Rishabh is first joining in with more details.
Absolutely, a very sort of crucial approval that is coming from the cabinet for 2 new semiconductor projects. This takes up the ISM 1.0 count from 10 projects to 12 projects. So whatever little funds were left in the first semiconductor mission, that has also been utilized now. Now onto the details. The larger chunk yesterday came in. About 3,100 crores were allocated for the Crystal Matrix project. Now, what this is essentially is it is a new chip facility that will be set up in Gujarat. They will be creating what are gallium nitride wafers, and these will then find application in a lot of micro LED displays. And this is, of course, a burgeoning market in India. You have outdoor displays also sort of really growing at a big speed. So that is where you'll have some sort of a domestic demand being satisfied within India as well. No more imports. So cutting that import bill, that has also been a priority of this ISM. The other one is, of course, Suchi Semicon, a much smaller allocation to that, about 868 crores. For that one, this is, of course, an OSAT facility. OSAT is essentially a chip facility that will help in a lot of assembly and testing of these chips. So Suchi Semicon will be also in Gujarat, a smaller facility at about 868 crores. This will find applications in, of course, a lot of consumer electronics. So ACs, TVs, mobiles, fridge, all of those will be covered under this Suchi Semicon approval. So that's what you have coming out of the cabinet when it comes to the semiconductor mission.
Thank you for that, Rishabh. I actually want to go across to Ashok Mehta. He's founder and chairman at Suchi Semicon. Mr. Mehta, thank you so much for joining us. Can you give us some color, some details of what is going to be your involvement in this semiconductor project by the government?
First of all, thank you very much to NDTV Profit to invite us. And thank you very much to our Honorable Prime Minister, respected Sri Narendra Modi ji, Ashwini Vaishnav ji, and whole the government ecosystems. Actually, this inspirations by our prime ministers at the time of COVID, whole world stuck by the shortage of the chips. And at that time, we thought, why not entered in this business? We start our research, and in 2025, we start our pilot line. We actually main focus for us, definitely we are small, but our key focus is in that consumer electronics, because the consumer electronics market is very huge in India. And India now export a lot of consumer electronics. Secondly, our target is auto industries, because the maximum chips consumed in India is the two key factors. One is consumer electronics, and second is auto industries. And it's a start of the semiconductor line, because when you start your education, you start with that schooling and college, and then you are going for the PhD. This is the entry gate. OSAT is the entry gate of semiconductor chips. And we successfully start that pilot line from our facilities. And after supporting of the government, we are expanding up to 3 million chips a day. Our target is to reach 3 million chips a day to acquire that whole Indian market and global market as well.
Mehta, point taken in. You've described your journey quite well. But the question is, from this point on, the latest initiative by the government, what does that do? What is your role in it? And two, you've described what your intention is to expand capacity. What is the timeline within which you're going to get that done in?
Within 3 years, we will reach to 3 million chips a day.
Okay. And the earlier question, which is the latest scheme by the government?
The government latest scheme is that 50% incentive by the central government and 20% by the state government of Gujarat.
Okay.
For the capex.
Okay. Okay, so put the numbers down for us, Mr. Mehta, so that we can understand what the benefit is. You're saying that you're expanding capex, you're saying that the government is supportive. What is the total benefit, if you can explain that to us?
Almost in our project, this phase, we are getting 521 crores as a subsidy from the government of India as an incentive.
521 crores on a particular base, Mr. Mehta, I'm presuming. Here's the question. In percentage terms, what kind of benefit does that cause? Part one. Part two of my question is, this is the first set of benefits that have come in and they are very lucrative. Would companies like yours or other in this space, I believe there is a lot in that belt, need further support a year, year and a half, 2 years down the line? Or now there won't be a need for further support from the government side?
Government already give us that support for the 3 years with project we already submit to the ISM.
Right.
That is for the first phase. And for second phase, our target is for that in that next phase is that advanced chips. And that also we will submit our project in ISM 2.
Okay.
Yes.
And therefore, is there a policy in place to give further support, or now companies don't need support after the initial phase of support is done?
I think if we are expanding in the similar line, if no support, there is not a problem. We can do ourselves. And if we are going for that advanced packaging, then we need the support. And government actually very supportive to all the chips industries who want to come in that advanced line. If you have the good ideas, new chips, they will support to us definitely.
I'm just wondering, what's the timeline for us to actually become self-reliant in this space for your project, for example? Because there is an announcement right now, there is some amount of government support, subsidy, you talked about 521 crores. But what is the feasible timeline before India can actually have a clear semiconductor play or be Atmanirbhar in semiconductor chips?
Minimum, it will take 5 to 10 years.
5 to 10 years. So minimum 5. 5 to 10 years also has a huge range between it. So minimum 5, maximum 10.
Actually, the India now 100% import depend on import.
Yeah.
And once you start the industries, it will take time. This industry is not an normal industry. Today you start and you get the benefit and you make the money. It's not the way. This industry is totally different. You have the patience because the qualifications, it's a crucial part of all the semiconductor chips. So it will take time. And now India import almost, I think, $20 billion import per annum.
Mr. Mehta, but specifically for a company like yours, the reason why there is an entry barrier, and if you look at fabricators around the world, right, you're talking about companies that make chips, it's not so easy to do. And they're at the front line. Of course, they're making really, really tiny chips. And the reason is you need land, you need technology, you need pure water, and there's a lot of disruption in tech. So my question to you, Mr. Mehta, is that if chips continue to get smaller and smaller, for companies that get in at the fag end of the value chain and try to build up, won't they get left behind?
Actually, you are talking about that fab, the clean water, tech, everything need for that fab. We are not in the fab, we are in the OSAT. So many things, and we have a very good collaboration with that 2-3 big companies. Last 2 months back, we had one MOU with that Japan's big company, ROM. He is having a very big infrastructure worldwide, and they second with us, and we are the partner in India. So manufacturing the chips and supply in the Indian market and global market. So for us, there is not a challenge in any places. We cross all the barriers.
Okay. Well, Mr. Mehta, it is good to know this. It is good to have this distillation as well, that if the expansion happens in the same space, then there won't be any support needed because what has been done is enough. Just one last question. Would you want anything else to happen from the government side to ensure that companies like yours or others stay competitive globally?
Actually, the global demand is very big. And due to that geopolitical, everyone need the China plus. So India have very good chance for the global market and Indian market also. And government is supportively very nicely. So I thanks to the government to support this all ecosystems.
Okay. Well, Mr. Mehta, wishing you all the best for this and more. May you succeed. May the country succeed as well. Thanks for taking the time out.
Thank you very much.
Thank you. Well, guys, it's interesting because I think there was a lot of question marks around what is it that India as a country is doing, and these are steps that the government is taking. Because I think when we spoke to Kane Semicon as well, when we went to their plant in Gujarat ahead of the budget, I think that is the same reflection that came in, and Suchi Semicon seems to be saying the same thing.
Yeah, OSAT is the key, right? When you're talking about creating a foundation that you can build on, fabricators might come later. And of course, Tata Group is
one of the original
You need a lot of capital.
So the 5 to 10 years, my only question mark is that technology is changing so fast. And I'm sure that this is something that is being taken into consideration. That you can't start a plant today and a facility today with an X plan and hope that it will stay and be consistent till another 10 years. Yeah. You're going to have to be nimble because you never know when the whole game changes very quickly. And I'm sure that's being put into consideration.
Yeah, and maybe, Tamanna and Alex, OSAT is the less risky form right now because no matter what will come out of the fab, the OSAT facility will be able to effectively slice and dice it in the usable form.
That is absolutely the key. And why TSMC is valued at what it is, by the way, because as a fabricator, it's able to move quickly. It has these massive facilities, and if one becomes redundant, they're okay. They're moving very quickly, but the margins are very, very low. So I asked, by the way, a fund manager that invests in global entities as well, and at that time, this is shortly after the COVID-19 pandemic and the shortage in semiconductors, and I said, why do you not invest in Taiwan Semiconductor? And he said, they make wafers, they make these chips, their margins are also really thin.
Wafer thin.
So therefore, and there is a lot of
he missed out
in the tech. He did.
He
But then he was investing in SaaS companies at the time, which was giving him 80% EBITDA margins.
No, but then, that's, maybe you ask him again today, that do you think you have feeling FOMO, and he possibly has. All right, so, okay, having said that, there's so much more to explore in this space, and we'll continue to do that and try and bring you all the expert views here on NDTV Profit. But for now, let's go to another expert. Ashwini Agarwal, founder of Demeter Advisors, joins us this morning. Ashwini, very good morning to you. Always a pleasure to speak with you, as always. I'm going to start by asking your assessment of what is happening geopolitically. Yesterday was a bit of a fear, right, with this new Operation Freedom, and then the US seems to have stepped back. They're talking about coming to some kind of a conclusion. Would it be overtly optimistic to say that it's possible that a month from now, maybe we would see an end to the crunch in the Strait of Hormuz, if nothing else?
Morning, Tamanna. Thank you for having me on your show. The statement that you made about, hostilities easing and things getting back to normal a month from now is what the market is pricing in as well. I think if you look at the policy stance of the government as well, where fuel hikes have largely not been passed on despite the state elections getting over. The government also seems to believe that maybe a resolution is around the corner. There's no point passing a shock to the system, and better to kind of ride it through, see it through. And I think the market is doing the same thing. So yes, I think both the US and Iran are obviously looking for off-ramps. They're looking for a solution that makes sense for each of these countries, solutions that they can sell to their own voters and their supporters. And I think that hopefully will come through. I mean, obviously, if it doesn't come through, there's a big price to be paid, especially by energy importers like India, to a certain degree, Southeast Asia as well. And I think the issue here, and which is something that I worry about a lot, is that we're dealing with two very unpredictable regimes or two very unpredictable stances, both at the end of the US and at the end of Iran. And we don't know whether this will come through or not. I think both countries are looking to find a solution, but whether finally something will come through or not, because they're very hard stands on either side.
Ashwini, and good morning, this is Alex. From the Indian perspective and for investors that have had relative patience over the last 2 years, a lot of people that got in after COVID-19 couldn't contemplate this idea that you couldn't get returns for 2 years, and they've experienced that. But now they thought that something would give. Things were looking up at the start of 2026, and you're pushing that down the line. The question is, how far would you have to wait? Do you anticipate that it will be for the extent of 2026 because of the kind of damage that has already taken place?
Alex, morning. The issue really is energy prices, right? We are a very large importer of energy. Middle East is a very large market for us. If there are disruptions in the Middle East that continue for, let's say, the next 6 months, there are going to be significant earnings downgrades, and there is going to be significant demand destruction in the country. I mean, you take the two together, obviously, equities is going to be a painful trade for 2026 as well. So it all rests on that single variable, right? I mean, does the Middle East open up? Does supply of oil and gas from the Middle East normalize? We can live with higher price of oil and higher price of gas. I mean, it doesn't need to go down all the way to 60, but at 80 and at full availability, that's what is an acceptable outcome for an economy like India. But, shortages or the current prices that the government is paying or being forced to pay for energy is not acceptable. So, yeah, I mean, for retail investors who've kind of been in the market for 6 or 7 years, a 2-year wait of no returns might seem very trying. But for people like us who've been around from 1992 and have seen decades of no return, if you look at the period between 94 and say 2003, or long droughts between say 2010 to 2013. It's okay. It happens once in a while. You will go through a period of 3 to 4 years where you make no money, possibly lose a lot of money. And then, you lick your wounds and you come back. I mean, that's the nature of the beast.
In fact, I think in some fashion, for people who maybe came in 2020, 21, they've still not lost money. People who come in maybe 24, late 25 would also have lost money. Very well put, Ashwini. And yes, that experience speaks. Just wondering, Ashwini, do you believe that from where we are right now on the earnings argument and the valuation that we are, plus the fact that there are macro concerns here, could the indices give no return period in 2026? Or could we see a downdraft over the course of the next 6 to 9 odd months? Never mind the fact that we haven't done anything for the last 18, 19 months.
Neeraj, it's purely a function of what happens to the Middle East crisis and oil and opening of the Middle East economy. See, again, it's not just oil, price of oil, availability of oil and gas. It is the fact that Middle East is a very big market for us. Middle East sends a lot of, repatriation dollars into India. And Middle East is a source of very large FDI flows. So, Middle East not being in a good shape is terrible for India. And the longer this stalemate continues, the more it hurts us. And that's a reality. And like we discussed at the start of this conversation, right, that the market is pricing in this will end. The government actions seem to suggest that the government believes that this will end. All the news that's coming out of the US, out of Iran, seems to suggest that both parties are looking for a solution. So let's see. I mean, if it comes through, then I think you might have a better outcome. You might have a situation where it might be a flat to a modestly positive return. I would look past the near-term earnings downgrades, in case a solution comes through, because then the events are in our history. And then let's say the March quarter or the June quarter earnings, one can ignore and one can look forward. But if it doesn't end, then you could have a situation where the market is down 10, 15% from here by the end of the year. That's entirely possible.
Ashwini, I was hearing your commentary a short while ago and said people should be ready for even larger losses this year. Is it this year that you're talking about, specifically this period? And do you see that period continuing where one should brace for portfolios in the red?
I mean, like I said, it's all about energy, all about the Middle East. If the situation doesn't ease, we have a problem. Tamanna, the second problem that we have, and we don't really have a very good answer to it, is that does AI lead to a crunching of job creation in India? For the last 2 decades, IT services jobs have been a huge driver of job creation in the country. And at least in the listed space, we are seeing that new hirings have reduced significantly. For the larger companies, they're near zero. For smaller companies, they've slowed down. GCCs are offsetting this to some degree, but we don't have exact data on employment generation from the GCCs. We know that AI is doing part of the job that entry-level programmers would do. How important is that in terms of a job creation for India is something that we don't understand. And that, I think, could be the next shoe to drop in the Indian context. So I think we have challenges ahead of us. The government is correctly pointing to manufacturing and focusing on a lot of high-tech manufacturing, providing subsidies, providing state support. State governments are coming forward. So that will obviously help. And one will kind of lift and the other will kind of ebb. That's the nature of the beast. And in the middle, you might go through a short period of, let's say, a year and a half, where the markets are despondent, nothing happens, especially if the Middle East crisis doesn't resolve itself.
So then, just part 2 of my question, and you've laid it out beautifully, Ashwini, that these are the risks, risk 1, risk 2, etc. How do you mitigate those risks? If energy shocks and impact of AI on jobs are your two glaring risks right now, how do you build a portfolio that doesn't lose as much as everybody else? I suppose that's the best that you can do right now.
So, Tamanna, what happens is that markets always give you opportunities. There will always be sectors which are being given up for dead. So, if you recall, through 2025, I kept saying that we are looking at microfinance as an area where we see valuations pricing in the worst, and at the margin, things are starting to improve. And pretty much a lot of the microfinance companies have given you returns between 20, 30, 40% over the last 12 months or so. That's not a bad return for a market that's not done well. So I think, we are looking at opportunities in manufacturing, in small cap stocks, in retailing, in energy distribution, gas specifically. We are looking even at IT services. I mean, in IT services, one could make an argument that while it is not great news for employment generation, IT services companies could be fine if they are able to find niches in where they handhold their customers in using the large language models that are coming through. So you might have the employment pyramids changing from a shape of a pyramid to to the shape of a diamond with a bigger kind of a central layer, which is more akin to consulting. So I think some of these opportunities are there. I mean, we are looking at them. Haven't kind of found a lot of sectoral conviction just yet. But yeah, there are bottom-up opportunities which are there. Companies, I mean, I think look for despondency. That's what I say. That's always been, something that excites me. You look at good businesses which are going through a very tough patch. And you can say IT services is one of them today, and look for ideas within that space, or look for ideas within other spaces where stocks have come off a lot. I mean, the number of stocks which are down 50, 60, 70% on a 2-3 year basis is quite large. I mean, and then you have to have the patience to hold on and accept that a few quarters will not tell you the story, but the next few years might see the story play out.
To that point, right, and the opportunities that might arise specifically on energy, and the fact that this shock, for what it's worth, has caused the administration to say, hey, you know what, we need to take some steps to mitigate this if it occurs in the future. So do you see opportunities in, for example, coal gasification? We've been talking about it for so many years now. Do you see, for example, in nuclear, where the government has made certain moves, where are those on the fringe opportunities that could become big if that transition has to happen?
Yeah, I mean, those are areas. I mean, battery storage opportunity, whether it's more of thermal, whether it is more of nuclear, whether it's more of, other technologies that might help us, energy saving devices, coal gasification, as you pointed out, recycling to a large degree. I mean, these are all opportunities. These are all things that we will have to do to insulate ourselves. I mean, I think, to some degree, we've actually been well ahead of our initial plans on the capacity that we have in solar and in wind. But battery will, I think, follow. Once that happens, then I think, stability of the power supply from the perspective of grid stability will improve. I think nuclear, I mean, I think that's a real opportunity. Can we get to another 20 gigawatts of nuclear in the next decade? I mean, things like that. So these are all macro opportunities. Stocks are a little more tricky because you have to figure out who is priced to perfection in that sense, and where the opportunity of earnings is higher than what the street is pricing in right now. I mean, if stock prices are full, then there's no opportunity to make money. So I think there's an opportunity for business and there's an opportunity to make money, and sometimes the two are not the same.
Okay, Ashwini, always a pleasure having you on with us. Thank you so much for joining in today. A market will always give you opportunities, so it's up to you to spot them. And of course, we're sitting here to help you do that day in and day out. Thank you once again for speaking with us. But a lot of stories that we're tracking this morning: high fuel prices and widening ATF cracks are forcing Air India to cut back international operations. Danish now joining in with exclusive details. Danish.
Well, that's correct. As per the data provided exclusively by OAG to NDTV Profit, we are seeing that Air India has massively reduced its international capacity. In fact, in April, Air India's international flights were reduced by 22%. And in the month of May, this capacity has been reduced by 20%. And even in the next month, it is expected that the capacity will get reduced by around 7 more percent. One of the major reasons is obviously the ATF and the widening crack. But besides this, if we look at it from a passenger's perspective, all major flights of Air India to North America, especially to the East Coast, they have been completely chalked off the board. And besides that, even the frequency to India to Vancouver flights, even they have been reduced. And if we look at how the cancellations are for the European routes, over there, it is kind of a mixed bag. Certain flights to big airports like London Gatwick and London Heathrow, the schedule over there is still as it was earlier. But if you look at the connections from other cities like Amritsar to Birmingham and other such places in the UK and other parts of Europe, those flights have majorly been reduced. So although if we see, because aviation fuel prices, Air India is forced to reduce its international operations, and we wrote to Air India twice and we did not get any reply from them.
Okay, all right. Thanks so much, Danish, for bringing us those updates, the implications of the energy situation right now. All right, let's talk about an important update. And the cabinet, as you know, has cleared the ECLGS 5.0. This is essentially the credit guarantee scheme that targets 2.25 lakh crore rupees in fresh credit flow. Let's bring in Piyush because he's spoken to a few people from the banking industry and he's got details of what this is going to mean for the banks as a whole and lenders as a whole. Piyush, what are you picking up?
Yeah, good morning, Alex. ECLGS 5.0 is being considered as a net positive for MSMEs. Bankers say with 100% guarantee on incremental loans to MSMEs, there is a likelihood that they will come out and lend more to MSMEs, especially those who are particularly hit by the West Asia conflict, export-oriented MSMEs into the oil, gas, pharma segments. And bankers also say that now with the 100% guarantee, in the last time this scheme was introduced was in COVID, and this time around they don't feel that a lot of NPAs will come out of these loans, and they also don't feel that very selectively the MSMEs will actually tap this particular scheme. We do understand there is some clarity that is required because, Alex, a lot of NBFCs give working capital loans, the term loans, not working capital loans. So the cabinet has informed that the current extension is being given to working capital. There is this limit, 20% limit of Q4. So it is important to understand whether this extension is also applying to term loans which are given by NBFCs, and there are a lot of NBFCs which particularly focus on MSMEs. For example, Ugrow Capital is there. A lot of HFCs also do MSME loans. So that is something we need to track and get some clarity on. Back to you, Alex.
All right. Piyush, thanks so much for that. So, a net positive, certainly for the MSME space, but there needs to be some clarity on whether this extends to term loans as well. Speaking of, we're more or less holding where we started off, 0.5% gains for the Nifty 50, but a few names have given up ground and the broader markets are holding, which is a good thing.
Okay, that's all the time we have on this edition of India Market Open. From all of us here and all of those who helped put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me very shortly will be Mahima Bashirjani. And over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the numbers that are flashing on the top of your screen. You can also call us, talk to us directly, as well as our experts for the stock-related queries as well. But before we do that and a lot more, quickly take a quick check of how the markets are doing. It's a time where earnings seasons are taking precedence over stock reactions, and you're seeing that today impact on L&T as well. So quickly pull up the heat map for the Nifty 50, and stock was down 3% at the start of the trading session. The guidance under Lakshya 2031 is not giving any kind of enthusiasm to the street, and that continues to be down today as well. Missed margin estimates as well, and the volatile period, because the war impact continues to hamper L&T at this point of time. You're seeing some decent reactions coming in on Indigo as well as on Trent at this point of time. Indigo is up almost 3.5%, Trent's up 3.1%, and M&M is seeing a good reaction today post Brokerage is coming out with its ever positive rating yet again on this counter. They've also upped their new launches guidance as well yesterday. Bajaj Auto results come today, and buyback amount expected as well. Apart from that, the other counter that will be in focus in the auto pack will be Hero. The conference call will start very shortly, so we'll start putting out those lines as well. But important quarter for Hero, results have been good. Commentary continues to be the other aspect to watch. In terms of sectoral heat map, also very quickly, if we can pull that up, Nifty Auto, rightly as I mentioned, for all those stocks and the reasons, is up biggest gainer today. So is the PSU banking index. FMCG is down today by 0.6%. It has had a good run over the last couple of weeks, but the advanced decline ratio is the other one. We've been consistently highlighting that market's been divided into two zones essentially. Second half has also had their share of reactions, and advanced decline also starting to show that trend. So currently up almost 2.5 to 3 times in terms of the advances versus the declines. And the mid and small cap also shows you that perspective at this point of time. So mid cap index up over %. Small cap continues to be in the green as well, is up by 0.7 odd % as of now. So the mid cap is dominating it. And finally, the BSE 500 before we start with the show. Embassy Developers up 20%. Coforge is up 7% after a strong set of numbers by the company. HFCL, Vodafone Idea, third straight day of up move. While on the loser side, we don't have too much of a reaction coming in. Only Credit Access Grameen and L&T as we highlighted. So it's a good positive screen today as of now. Let me welcome in, our guest as well as our, Avinash Gorakshankar, founder and head research at Avinash Mentor Services, and Vaishali Parekh, vice president technical research at PL Capital. Both of you, thanks so much for joining in. Let me just go across, and take the first query right now. This one's on Bajaj Finance, and actually Priyanka from Mumbai, who is sending across quite a few queries now and is a regular viewer, is holding 22,000 shares of this counter. She's holding them at 709 and asking a 1-year view. Now, Avinash, she actually got in at quite a decent price and has amassed a very good, decent quantity as well. Would you recommend her to continue holding on to this counter at this point of time? Just in terms of portfolio positioning also is quite a big, but what's your view?
No, I think Puneet, you can definitely continue to hold on. See, I think numbers for Bajaj Finance have been very stable, and I think asset quality has also remained pretty, robust. I think the coming year should be a good year. In fact, from the conference call commentary and the numbers which were reported, I think very clearly, over the next 6 to 12 months, we believe that NBFCs like Bajaj Finance should do reasonably well. I think interest rates have also remained stable, plus consumption, post the GST cuts have actually helped, more demand move quite positively. So I think, over the next, say, 6 to 12 months, we could look at prices around 1,050 to 1,100. Hopefully, once the market, sentiment also improves. But I think definitely the traction looks pretty positive and we should expect better numbers for 26, 27.
Got that view, Avinash. But let's go across, take the next query now. And this one is coming in from Ramesh, who's from Chennai. Now, his question largely being a short-term outlook on Ramratna Wires. He's looking at the current share price, Vaishali, asking what could be a target to watch out for. What's your opinion? Very good morning to you.
Hi, very good morning to all of you. So Ramratna is already in a good upward trend. I think even with a short-term perspective, continue holding with 410 as stop loss. This is likely to do 480 levels. So the trend is very strong, one way upward rally. So I would say keep a stop loss and continue holding.
Got that view, but the next question coming in now is from Mulli from Bangalore. And his question is on travel food services. He's bought it at 1,270 rupees per share. Asking Avinash, what should be his time frame for the next 12 to 18 months if he should continue holding? Would you recommend that?
Yeah, I think he should hold on. See, it's a very well-established business model where travel and food services operates in most of the airport, where most of the customers walk in. And I think it's a well-established, robust business model. So I think, despite the fact that valuations are not cheap, they're fair to expensive. I think it's a very unique business model, which is growing quite rapidly. So I would suggest that 12 to 18 months could be a good time frame where I think the investor could expect a decent risk reward. So continue to hold.
Right, well, let's pull up JNK Bank now because, the counter continues to be in focus on the back of quarterly results. And to get just a very quick perspective, I'm being joined by Amitabh Chatterjee, the MD and CEO of JNK Bank. Mr. Chatterjee, very good morning to you. Thanks so much for joining in. Firstly, sir, congratulations on a decent set of numbers for Q4 as well as for FY26. I just want to get a perspective from you to start with on how has been this year itself in terms of your advances momentum, because we have, of course, seen it grow in this particular year, but your yield to advances has slightly come down to 8.98% versus around 9.56%. So I just want to understand if we could expect this is largely led by what we've seen in terms of the repo rate cuts by the RBI and expectation that can it be maintained at this 9% level?
Yeah, good morning and thank you very much. There are two factors, essentially. One is, of course, what you said, because of the 125 bips of repo cuts. The other was, if you would remember, the state of the UT of JNK went through a very bad phase last year, right from the beginning of the financial year. What happened in Pahalgam and then later on the floods and flash floods and all. So because of that, there was quite a bit of impact on the retail business that we have, which constitutes almost 2/3 of our advances portfolio. So because of that, the high yield retail advances got impacted, which we compensated through the business in the rest of India. The rest of India retail business did well last year, but the volumes were not that high. We compensated the business by corporates, but you also know that corporates are quite competitive in rates. So combination of these two brought down the yields a bit, but now things being absolutely normalized here and the retail business picking up. So I'm very hopeful that we'll be able to improve the yields in the coming year.
Got it. And Mr. Chatterjee, very fair point on the concern that you highlighted. And at this point of time, you of course got the tax benefit in your yearly number of a growth of 13% profits. Largely, the other numbers you're able to maintain at least a flattish number compared to FY25. So is the expectation that FY27, given that there's a good base now for FY26 numbers, you should expect a growth, and what could that look like because that will also have an impact on your NIMs as well, which fell this year compared to last year, again, basis of what you said. So your retail share, is it expected to pick up? What's the overall growth that you are looking at? Is a 10% number achievable? And will that translate into NIMs going back to FY25 level?
See, the guidance that we have given is 10% on deposits and 12% on advances. This is the same that we gave last year. But then you see that we have grown by almost 12% in deposits and 17% in advances. We wish to continue with the same. The guidance is slightly conservative considering whatever is happening in the world at the moment, the geopolitical situation. Being a little bit conservative is, I believe, is okay. But the internal targets are always to improve upon whatever guidance we give, except for the NIM. I think we have surpassed all the guidances that we had given last year. And NIM, of course, I told you the reason. So going forward, the retail will be the focus, retail advances. We will continue. The pipeline in the corporate is good enough to cover for the entire year, right in the beginning of the year. So I do not have any issues related to covering the guidance on advances, but we want to do it in a better way through retail.
And Mr. Chatterjee, just as we wrap up this conversation because of paucity of time, just a quick question on what you're expecting, in terms of the other cost controls as well. Now, provisions you maintained, at a very low level this year. FY25, of course, was almost negative. And just in terms of a cost to income, has improved from 57% to 56%, but still a little higher than average for the public sector banks as well. So is the target in the medium term to go to that 52% mark, and any kind of initiatives that you're doing for that as of now?
See, if you look at the cost, essentially the major part of the cost is the staff cost that we have, and it has been coming down steadily. So the cost to income ratio, I believe, will be less than 50% very shortly. So if you look at this particular quarter, the cost to income was only 47%. Overall, for the year, it is 56%. So we are very hopeful that the cost will be contained, and major cost being the staff cost, it is already contained. It is coming down steadily every year through the more and more use of technology and lesser number of staff involvement, and staff being involved for businesses more. So I am very hopeful that both the costs coming down will continue, and the cost to income ratio will also improve.
Got it. Well, Mr. Chatterjee, a longer chat definitely warranted, but thanks so much for joining in, giving us time today to NDTV Profit, and giving us your perspective on the results as well as what's the expectation for next year. We look forward to our next conversation. But stocks down 2% today, but largely in the last 1 year, given also the challenges, stocks done well for investors, up over 42% in terms of returns. But let's get back to your stock-related queries as well. And Anjali from Hyderabad is patiently waiting by as a next caller. Anjali, very good morning to you. What's your query?
Yeah, very good morning to all of you, sir. Actually, I'm having Indraprastha Medical Corporation. So I'm having 550 average of 600 shares.
Okay.
Okay, so what is a short-term or long-term view on this? Shall I hold, or is it?
So you saw the charts, Anjali, when you bought into this counter, or was it a fundamental?
Yeah.
Okay, you saw the charts.
Long back, like almost 8 months to 10 months back, I bought this, sir.
Got it. Well, Vaishali, let me come to you then on Indraprastha Medical Corporation. She's been holding on for the last 8 months, currently sitting on a loss. Would you recommend her to averaging down or exiting the position or continuing to hold?
No, I would not ask to average right now, but well, I think it is on a recovery mode. So I would say keep a stop loss of 390. And right now it is at a minor resistance of a small moving average. Once you see the stock moving above 415, this can give you a target of 460. The actual strength actually lies only above 460 level. So till then, we will just call it a bounce back and a range of 390 to 460.
Well, hopefully, Anjali, that answers the question. But Avinash, just before we move forward, you heard the management of JNK Bank, and it's been one of the counters that actually done well in the last 1 year, given the correction that we saw at the start of 2025. Do you have an opinion on the counter? What should investors do with it now?
No, I think, the management commentary appears to be very positive. And I think there are valid reasons why earlier the bank's performance was impacted. But I think going forward in FY27, Puneet, I think the bank is on a very strong wicket. I think in terms of asset quality, in terms of disbursements, in terms of the overall growth opportunity, I think despite the fact that, large and a majority portion of its revenue comes from only one state, the balance sheet is managed very well. So our sense is that around 130, 31, one could definitely look at it from a year's perspective. I think one could definitely expect a decent risk reward. But clearly, I think the first quarter of FY26-27 will be the near-term trigger. Markets are expecting that possibly, after this quarter comes in, there will be some surety about the earnings growth, which we believe could be at least 15 to 16%. So definitely a good buy, but from a slightly medium-term angle.
A fair point, and got that view of Avinash. Next question coming in on SBI cards now. Vaishali, Gunsekharan from Tamil Nadu wants to know if it's a good time to buy for the short term. What do the charts say?
You're talking about SBI cards, right?
Yes, that's right.
Just a minute. So currently, I think it can be bought 620 as stop loss and look for a target of 680.
680. Got that view. But viewers, you can also call us for stock-related queries at this point of time. We, as well as our experts, will try to get you a perspective on your stock-related queries as well. The number is flashing on the top of the screen. That's the landline number. And let's actually go to Vijayawada now. And Bindu actually has a stock query for us. Bindu, very good morning to you. What's your query?
Very good morning. I'm holding 50 shares of Safari Industries.
Okay.
At 15.10.
Okay.
The stock has dipped a lot
for
a few months.
And is this a long-term bet, Bindu, or a short-term one?
I can hold it about like 6 to 8 months.
Okay, 6 to 8 months. Got it. Well, Vaishali, let me come back to you then. Limited time frame, but Safari Industries, what's your opinion on the counter now? Should Bindu wait by, and can she see her buying price yet again of 1510?
So I would say that the stock seems to be too beaten down, but quite in an oversold zone. So I think you can average it out and wait for a bounce. Don't be in a hurry to exit. I think the stock should recover and come towards 1500 to 1600 levels.
Got it. Well, the next question, coming now on Eternal, and our viewer holds 438 shares at 228. Now, wants a long-term view on this particular counter. So, Avinash, what's your opinion on this one for Birandeep? Because, I wouldn't say beaten down, but has corrected from the highs and is at a very interesting juncture now for investors who want to buy into it, might have missed the previous rally. How did you view the Q4 results? It's a continuation essentially of opening out much more stores in dark stores, continuing that food delivery model. What's your opinion?
No, I think, Puneet, from a broader perspective, I think the company has done well. Fourth quarter numbers were much better in terms of profitability margins. And I think Blinkit has been a very strong performer. I think clearly, the market opportunity when they launched Blinkit was not anticipated. But today, I think Blinkit is growing by leaps and bounds. And going forward, maybe in the next 1 or 2 years, I think you could see a bigger market opportunity being tapped by Eternal. So, in the short term, the stock will remain volatile. I think after the results, the stock has seen a fresh wave of selling. But fundamentally, I think the business model has emerged stronger. And I think now, with an annuity kind of business model, at least the next 2 years, hopefully, if demand continues to be strong and the kind of, volume growth we see in the Blinkit division, I would not be surprised that a significant amount of, upside is possible. But I think you need to keep a time frame of at least 12 to 18 months. Maybe on a quarter-to-quarter basis, it's not possible to, make a significant amount of alpha. But the next 2 years are going to be very promising for the company.
Got it. And thanks for the detailed opinion, Avinash. Hopefully, our investors are benefited from that. So is our viewer. But and hopefully, Birandeep, that answers your question. But another caller from Hyderabad, Anjali, has a stock query for us. Anjali, good morning. Welcome to the show. What's your query?
Good morning. I'm holding Elecon Engineering from long time, maybe from 1 year.
Okay.
So I'm holding 53 shares at the rate of 558. The stock was down from almost after I bought. So now it recovered and now the price is the same as what I bought. So is it good time to sell or should I wait for more upside?
Got it. And very fair question. Avinash, from the January low, stocks up almost 50%. I think it hit a low of almost 360 odd levels. Any view on Elecon Engineering? Should Anjali exit or continue to hold?
No, see, I think there were a lot of exceptionals, in the fourth quarter numbers. And I think if you strip off those numbers, then the performance has been pretty decent. And I think the management, outlook in the commentary was also quite positive. In fact, the management has said that, orders for some time had been postponed because of some midterm kind of, correction which happened in their marketing process. But I think now orders are trickling in. Hopefully, the first quarter for this financial year is going to be quite better. And just to add, there are a lot of ultra HNI investors like Vijay Kedia who already has a very significant position here. So my sense is that, despite the fact that the stock has not performed for the investor, keep a view of at least 12 to 15 months. I think in this space, Elecon has a very strong, dominant market presence. And I think a good amount of risk upside, a risk reward is very much possible. So continue to hold and keep the conviction for the next 12 to 15 months.
Got that view, but let's go across, just quickly address the F&O setup for today, and largely the Sensex continues to be in an up move. We've highlighted that L&T is one of those key stocks that's taking the brunt today. So is HUL, while Indigo continues to power through at this point of time. But individual stock specific action is also very interesting. You're seeing longs being built up on Coforge and SRF. Coforge, of course, on the back of earnings. SRF had a couple of key updates. Markets taking the one was a good one was a negative one. I think the market clearly telling you which one it likes better. But in terms of shorts being built up, L&T is one of the bearers, unfortunately, at this point of time. So is United Spirits. But longs now being unwinded on Hitachi Energy after a strong up move from almost 22,000 or to 33,000 stocks carried through. Seeing some build up of, essentially seeing some unwinding of longs that were built in the system, and shorts being covered on Force Motors. They've launched a new Traveler and markets liking that aspect. Also on Indigo. So those are some of the key highlights and some key counters that are buzzing in trade today. But the next question is actually coming in from Arnav, actually from Delhi, and his question is on Hero MotoCorp, bought at 5043. Avinash, before I come to you, just let me address the flashes on the bottom of your screen, because of course the results are quite positive, over a 20% growth, and now the con call is now on as we speak. It started at 10:30. Margin guidance is something the company has maintained at that 14 to 16% level, because they expect that the capex will continue in Euler Motors, in the two-wheeler side as well, for VIDA product development as well, and they've committed almost 1,500 crores at this point of time as well in terms of capex for the next year. Now, 14 to 16%, a bit, and actually it's quite in that range for the last 3 to 4 years, given the new ventures have taken precedence. They're planning big capacity expansion in EVs, so you would expect a lot of those 1,500 crores to go into the VIDA capacity, and it has performed phenomenally well at this point of time. Sales have grown almost 7 to 8x of the FY25 level. But just some important flashes, they are looking to launch, of course, new commuters, high displacement bikes, but the 125cc space continues to be one which is dominated by Bajaj, which will also come with earnings. The entry level continues to be an important one for Hero MotoCorp. So some more commentary on margins will be something to watch. Price hikes have been taken in a calibrated manner in April. But Avinash, how do you view the stock now? Because we've started to see a fresh up move on players like TVS, market rewarding players like Ather as well. And I think we have questions. We'll take that in just a bit. But what's your view on Hero? What do you recommend for Arnav to do at 5043?
No, I think he should continue to hold. I think, as you rightly mentioned, if the margin trajectory has been maintained at 14 to 16%, it's good, because typically, commodity prices have gone up, and despite that, the management is pretty confident of maintaining its margins. And I think volume growth is going to be the key driver. I think the demand for two-wheelers after a long time has picked up. Hero Motor has got a large presence in the rural markets. Most importantly, it's a free cash flow generating, company. So capex of 1,500 crores is not going to be a problem. They will fund it entirely from their cash accruals. And I think the market should obviously look at new product launches. I think apart from adding on to their electric vehicle product bouquet, new products, in the IC segment also are important. And that is where I think markets would look at it. But net, I think the next 12 to 15 months look pretty positive. So I won't be surprised the stock will move up steadily. Maybe, after the results, the stock may see some corrective action. But fundamentally, the company is on a strong wicket. So we would prefer that wait for the next 12 to 15 months. You should get a decent risk reward.
Got that view of Avinash, but viewers as well as Avinash and Vaishali, time now for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in on Tata Tech. Now, Mahi holds shares at 727. Avinash, yesterday's earnings were quite positively surprising in that sense as well for Q4. Should she average down since he's holding at 727?
Yeah, I think keep a time frame of at least time frame of 12 to 15 months, and you can average at the current level.
Honasa Consumer is the other one. Srinivasa Rao is holding 100 shares at the level of 4110. Wants to know whether to continue to hold or sell. Vaishali, your view on the charts?
So Honasa, I think continue holding for a target of around, I think, 370.
Mahesh from Andhra Pradesh is holding on to a Moisture Vaishali. He's holding shares at 218 and holding 264 of them. Should he continue to do that?
Keep a stop loss of 195. Once it crosses 210, the next target would be 220.
Inox Wind, 5,000 shares bought at the levels of 110. Continue to hold, exit from long-term view. Avinash?
No, I think continue to hold.
The next one coming in is on IKO Energy for the short-term perspective. Vaishali, is the question Sneha is asking, is it a good time to enter IKO, IKIO?
Sorry, not tracking this.
Okay, the next one is on Vari Energies. Our viewer is bought at the levels of 3240. What should be the target price going forward? Vaishali, on the charts, continue to hold, sell?
Continue holding. Look for a target of, keep a stop loss of 3100 and look for a target of 3500.
Shiv Kumar from Bengaluru is holding on to TCS, Infosys as well as Coforge. Avinash, should he continue to hold on all three of them or be selective now?
No, I think TCS and Coforge he can continue to hold. I think Coforge has pleasantly surprised the markets and the stock is up. So I think continue to hold TCS and Coforge.
Okay, CG Power, what should be the entry price considering the rally that we've seen in this counter? Vaishali, your view on the charts?
So currently it is 821. I think 800 would be 790, 800 would be an ideal level.
Padma Kumar is holding on to 13 shares of Maruti at 14,850. So he's currently sitting on a loss. Asking if he should shift to Voltamp, ABB or Siemens. Avinash, if you can address both those, should he actually shift out of Maruti into Voltamp? I know the stock was down 20% yesterday.
No, I think my guess is that in Maruti, I think, we should hold on. I don't think, markets would further drag it downwards. I think in the Voltamp, numbers have not been great. So continue to hold Maruti for the next 6 to 12 months. He can average even at the current levels.
Okay. Cochin Shipyard bought at the levels of 2498, down already 30%. What should be the next course of action for Dinesh? Vaishali, your view on the charts?
I think average out at these levels and wait for it to bounce because it's already in a trend.
Got the next question coming in, from Pawan from Bangalore. He's holding on to Patel Engineering at 38. Vaishali, he's holding on to 1,000 shares. Should he continue to do so? Currently sitting on a loss.
I think it's showing signs of revival. So I think average out at these levels and look for a target of 32. So this way you can lower your cost.
Got it. Well, that is the end of the first round of the rapid fire in this edition of Fast Profit. But Avinash, Vaishali, stay on. Lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
You're watching NDTV Profit. I am Mahima Vachharjani, and the stock we're putting spotlight on today is United Breweries, in focus on the back of its Q4 numbers. To discuss as to how the quarter has gone by and how things are shaping up for FY27, we're joined by Vivek Gupta, the MD and CEO of United Breweries, joining us now. Vivek, first of all, thank you so much for taking out the time. Despite of Q4 being a challenging one, you've managed to grow your volumes at that 4.11%, which is much ahead of what the street was, the analysts were expecting, right? Just want to understand as to how much of this is, a structural change versus, what you've been doing so far, and what is volume growth looking like going forward in FY27?
Yeah, good morning and thanks for having me. I think, you have absolutely picked up right. We are quite buoyant on what happened in the Q1 on the category growth recovery. In the Q1, the category grew double digit on volume growth. As UBL, we grew 4% on primary sales and almost 8% on secondary sales. So we reduced some inventories. But the good part is the category is back on growth and high single digit growth. If you remember, the last 6 months of the second half of 2025 were tough for the category because of weather, rains, as well as, the affordability issues. I believe the amount of work which Brewers Association of India and which as a UBL we have done with many governments to talk about the affordability of beer has really worked. In the last 6 months, the number of states who have made positive intervention to reduce differential tax on beer and spirits is one of the factors why beer category is back on growth. The second big factor is the innovation. As we talked, we launched our blockbuster innovation of Kingfisher Smooth. The third factor is the premiumization. I'm also glad that this quarter we grew 16% on premium. For fiscal year 2025, our premium growth is 21%. There was one quarter which was OND, October, November, December, where premium growth was almost flat. So I think the category is back on growth. At the same time, it has been a tough quarter because the West Asia war has disproportionately impacted the beer industry and UBL. Our cost of sales, as I mentioned, has disproportionately got impacted. Our exports in profitable market because Kingfisher is iconic brand for India and especially for India's outside India. And that has got impacted. The Indian rupee has become weaker. So despite all these challenges, and as a company, we are preparing for long run, we continue to invest in category growth. So I feel that the most important thing this quarter is category is back on growth. The premiumization story is back. We are getting very good support from regulators to reduce the differentiation of beer taxes, which is most structural. But at the same time, we have to prepare as a company to really manage this macro situation, which is not in our control. So there's a lot of action we are doing internally to mitigate the impact.
Got it. So Vivek, in terms of this entire impact of West Asia conflict, right, it's going to be on your raw material, somewhere in supply chain as well. Just want to understand as to considering the escalation in cost as a percentage, how much of a price hikes are you expecting going forward in Q1 FY27, and if that will follow through in Q2 as well? Just want to get that sense as to what is the percentage of increase in cost, and what is going to be the percentage of increase of price hikes that you're going to take?
Yeah, I think our estimate is the total impact is around 400 to 500 crore on our cost, which is almost 10 to 15% depending on this. This business is state by state business because every state has their excise policies. Some states, you can take pricing. In other states, you have to work with the regulators. We almost have 30% of our business where UBL has a very strong share. Our brands is very strong, and we still need to continuously work with the government to get the pricing. So Telangana, Andhra, Tamil Nadu are the 3 states where we have big business. Our brand is very popular, but we need to do more work with regulators to take the pricing. because unlike other industries, we cannot just go and pass on the pricing to consumer. The second is affordability on beer is extremely important. So we don't want to create a problem for the category growth, because where we just pass on the pricing to consumer, I think we need to do more work with the regulators, because every 100 rupees which consumer pay on beer, 70 goes to the government. So I think that is where they have to reduce the taxation so that affordability for consumer is maintained and the category growth continues to happen. So we'll be doing a lot of work on that. The third area is we need to have our own cost and productivity program. So we are questioning every single cost. We are doing a lot of work in making sure that we are more disciplined as an organization and we are more efficient and more productive. So it is a big challenge, but it needs a big, unique intervention by some of the state governments. And I'm also, through this channel also, I would communicate that states like Telangana, Andhra, Tamil Nadu needs to really help industry so that, we can have a much more sustainable business and growth.
Well, that was the management of United Breweries post their quarterly results, as Mahima highlighted some of the key aspects to watch. But stocks, taking a beating today, at least down 3.7%. But go across, take the next question from Akash on ICICI AMC. And his query largely being a medium-term one. He's bought into very close to the IPO price at 2165. I think it was the IPO price. And wants to hold for the next 2 years, Avinash. And the question largely being from him, is this the right levels to buy a little bit more after the 50% run? What would you recommend?
No, I think, ICICI AMC should definitely do well. I think it's a very strong annuity-based business model. But I think, since it's moved up by almost 50%, I would say that, it's better that he buys it in a staggered manner. Look at some dips if you get and accumulate the position slowly. Maybe do a small SIP kind of approach and then gradually accumulate it and stay invested for the next 2 years.
Okay, all right. We've got Yamini calling us from Chennai. Yamini, a very good morning to you. What's your query about?
Good morning, Mahima. My query is regarding Tata Power. I have 10 shares of Tata Power at 413 rupees. And I'm looking to accumulate it at the current levels, and I have a long-term perspective. And is it also advisable to take an SIP on the same?
Okay, all right. Got your question. I'll take this up with Avinash. Then Avinash, your view on Tata Power from a long-term perspective and whether SIP doing this counter makes sense.
Yeah, I think power generation continues to be a very strong sector where a lot of interest is coming in, and I think looking at the kind of strong demand from the data center opportunity, typically this summer has also been very hot, so I think you're going to see a lot of power demand coming up. In case of Tata Power, I think it's better that the investor takes at least a 2-year view and gradually starts an SIP, because clearly over the next 2 years the renewable space is also going to be a very big opportunity for Tata Power. So I think, rather than buying everything in one shot, it's better that you buy it in a staggered manner in small pieces and then stay invested for the next, say, 2 to 3 years.
Got that view, Avinash. But next question now coming in. Now, Vaishali, this one's for you. It's from Anil Singh asking if it's the right time to enter Aether Energy. Now, stock's been in an up move, up almost 200%, 2x in that sense from its buying price. And yesterday was up on the back of results. Today, almost down 4%. Would you recommend that, Vaishali?
I would say ideal level would be around 800. It can consolidate. We can see some profit booking. So I would say accumulate between 880 to 800 levels.
Okay, the next one that we have is from Rajesh Maheshwari, who's writing us from Indore, asking about Globus Spirits. He's got 70 odd shares at an average price of 1019. He says, what could be the prudent course of action for this stock from a short-term perspective? Is there more steam left, is his question. Vaishali, he's not very far away from where the buying price is. Slightly a downtick is what he's seeing. But do you think it can bounce back to his buying price and maybe give him some profits in the short term?
So I would say the stock has given a one-way rally right from 800 to 1150. So it can consolidate and we can see some profit booking coming to 1000 levels. So as long as 1000 level is held on, I think the stock is pretty strong and we can see a further strength going up to 1250. So depending on this levels, one should take a call. If you want to book your profit right now, you may do so because little bit of profit booking cannot be ruled out.
Got it, Vaishali. But the next counter is on Tarson's product. It's a very small counter. But Avinash, just trying my luck here because Deepak is holding on to 354 shares, bought at 350, and he's in a loss of almost 35% right now. What would you recommend, Avinash? Because I know you track a lot of smaller companies as well. It's been a rank underperformer, down almost 70% from when it listed back in 2021 or 2. Any view here?
No, I think, see, in the short term, I don't think there are going to be any major triggers. The investor has purchased the stock at a slightly, elevated level. So I would say that, if he wants, he can switch over because I feel that within the banking space, stocks like Federal Bank or typically a Bank of Maharashtra would give him a better alpha. As you rightly mentioned, the stock has underperformed significantly. And in such kind of cases, it takes at least a couple of quarters or sometimes even more to, recover. So my sense is, something like a Bank of Maharashtra or maybe a Federal Bank would be a better choice because year growth is clearly evident. And I think the next 6 to 12 months could be better. So I think a switch would be better, but definitely this company is unlikely to recover in the short term, very big way.
Okay. All right. We've got Muin calling us from Bengaluru. Muin, a very good morning to you. What's your query about?
Good morning to you all. Yeah, I have Greenfly, 808 quantity at 291.22. I bought it at a higher price. I want to know if this counter will reach the buying price within a month or two.
Okay, got your question. I'll take this up with Vaishali then. Vaishali, in a month or two, do you think this can bounce back to 291 levels?
Well, then I would say keep a stop loss of 240. This stock has to once again go towards 280 and sustain about that. So if that is the case, then it would go to 300, 320. So stop loss of 240 and continue holding.
Got that to view, but stocks done well actually in the 3-1 perspective, but as Vaishali, I said 280 for Greenfly at this point of time. Sunny Sharma from Kolkata is asking in this question, and it's a very topical one on L&T. He's bought 50 shares at almost 4,000 rupees, so bought it post the correction. Now, Avinash, how did you see the results? I think largely some disappointment on margins, on the guidance till 2031 as well. Any opinion here? Because it's one which a lot of investors actually hold on to, right? What would you recommend to someone who's already holding as well as to Sunny?
No, I think, see, these numbers were on expected lines, Puneet, and I think maybe the next quarter also will be challenging. But hopefully, if the geopolitical situation improves and I think things get back to normal, then I think L&T definitely should do business back to normal. And I think clearly in terms of the opportunity, L&T has got several pockets of opportunity like capital goods, infra, defense. So I would say that the investor should hold on. Keep some time invested here and have the conviction the management has the potential to bounce back. And I think better numbers could come in post-September. So I think till that time, the stock may be a market performer, but longer term, we continue to be positive.
The next one is on Juniper Hotels. Our viewer Nagraj from Hyderabad is holding 40 shares, bought at the levels of 360. He says he's sitting on a loss of around 6,000 odd rupees. Wants to know if he can continue to hold from a long-term perspective or book losses. Avinash, any view on Juniper Hotels?
No, I think here my sense is if the investor has a couple of years in mind, then I think he should average and stay invested. It's a good business model. The promoters have the right bandwidth, but I think the investor has purchased the stock at a slightly elevated level. So unless the investor spends a considerable amount of time here, only then the risk reward would come in. So I think rather than booking a loss, increase the time frame, and I think average at the current level, you will definitely be rewarded over the longer term.
Well, speaking of rewards, Avinash, I'm hearing that it's your birthday today, so just wanted to wish you a very happy birthday. You've been a key supporter of NDTV Profit over the last few years that we've been on air, and of course, to ask profit most certainly. So just wanted to wish you a happy birthday. And I think Mahima would say the same.
Yeah, I think Avinash, a very happy birthday to you and wishing you good health and happiness always. I think this is from the entire NDTV Profit family to you.
Yeah, thank you.
All right, okay. We've got our next caller. I think Jagan is calling us from Visakhapatnam. Jagan, a very good morning to you. What's your query about?
Good morning. I'm actually looking for Lemon Tree for the short sale, and I have 12,000 stocks of Lemon Tree.
Okay.
At 118.20.
Okay, interesting. All right, I'll take this up with Vaishali. Then Vaishali is already sitting on profits of 37,000 rupees because of the huge quantity that it's got. It's around 12,000 shares. From a short-term perspective, continue to hold. Looking at the charts.
Well, first of all, happy birthday to Avinash from my side too. And talking about Lemon Tree, I would say keep a range of 115 to 130. That is the range for a short-term perspective.
Got that view. The next question coming in now, it's from Murli from Kerala. He's holding 150 shares of Zentech at almost 1,800, and results were weak yesterday. Reported stock was also down. Let's look at the 5-day chart to get the perspective to our viewers as well. Asking what's the future now, Avinash? Disappointing results, and your stock's taken a beating post that. And there were some concerns, right, of order book being built up only for just a couple of quarters as well. So limited visibility there. What's your view?
No, I think, see, Puneet, in companies like Zen Technologies, you can't take a quarter-on-quarter view. I think in the past also we have seen, some very bad quarters and then the company bouncing back. I feel that, in a company like Zen Technologies at this level, if you don't have at least a 18 to 24 month view, you will not be able to ride the entire value creation journey. So I think, the company continues to do well. The management is quite strong and its domain expertise is there. The defense opportunity is also very large. So I would say that, in the short term, the stock will struggle because these numbers are definitely not exciting. The markets were expecting better numbers. So I think take a longer term view. And I think if you want to have this share, then I think unless you have a perspective of 12 to 18 months, it's not possible for you to make money. So stay invested, but keep the long story, intact. I think short term, the stock will struggle.
Okay, the next one that we have is from a short-term perspective. Sunita from Delhi is asking whether M&M or Lupin, which one has a better return potential for the next 3 odd months? She's looking at a 10% gains. Wants to know the stop loss and target price as well as the entry price for one of these which is looking better. Vaishali, your view on whether to buy Lupin or M&M for the next 3 months?
So I would say M&M would be a good buy at these levels because it's seen a good corrective move. And if you're looking at 2 to 3 months, then 3,100 should be the support, and perhaps 3,550 could be the next target. Lupin is in a positive territory, but we've seen already a good run up. So I would take M&M as a favorable risk reward stock.
Got that view, but the next question coming in now, Vaishali, again, just a short-term view that you have on Kotak Mahindra Bank as well. The results didn't enthuse the street too much, but what's your opinion on the stock now?
Well, nothing much has been happening, but purely on technical terms, 350 is the support. And if there is some momentum coming in, 385 would be the first target, 395 would be the next target.
The next one is on Good Luck India. Sachin says that he's seen a recent breakout on the charts for this one. What's the short-term outlook, the target price and stop loss? Vaishali, on the charts?
So Good Luck, yes, as rightfully noticed, it has given a breakout about 1350 levels. Continue holding. Next target would be 1450 to 1480.
Hopefully for our viewers, Sachin got that view, Vaishali, and hopefully for our viewers, Sachin, this stock does bring some good luck to him as well. I'm just stealing your thunder at this point in time. But Murthy from Vizag actually has another question on Hyundai Motors right now, asking if it's a good time to enter. Avinash, results on 8th and street's not expecting too much yet again, and it's very close to that IPO price as well. What's your preferred pick actually in the auto pack? Because we're seeing leadership now largely being defined, right? Clear winners there. What's your opinion on Hyundai?
No, I think numbers are unlikely to be, very strong. I think markets now expecting a very strong volume growth number, but that has not come in. So I think, we'll like to wait for the management commentary as to what kind of product launches, what kind of, volume growth expectations the company has got. But I think within the auto space, Puneet, Mahindra and Mahindra, looks very strong. I think yesterday the numbers had come in 18,000 crore PAT, and I think very strong commentary. I think margins could be a little bit down, but I think overall the volume growth is expected to be very strong. So here around levels of 34.50, 34.75 very much look possible over the next say 6 to 12 months.
Okay, we've got Aruna who's calling us from Vijayawada. Aruna, a very good morning to you. I believe you have a question on Voltam.
Yes, ma'am. Very good morning to all of you, ma'am. Thanks for taking my query. So, yeah, what's the entry price for Old TAM, both short-term and long-term?
So, Aruna, while you were analyzing this counter, did you see the charts or did you see the fundamentals of the company?
Charts only I have seen, ma'am.
Okay, all right. Then I'll take this up with Vaishali. Vaishali, Voltam transformers, what are the charts indicating? Is this the right time to enter?
Well, the going was pretty good till yesterday's results, but I think near-term support is 9,500. So, if your time is not your problem, then I think continue holding 9,500, 9,300. These are the levels to add more, because once we see some stability and new round of momentum setting in, this can retest the previous high and perhaps go higher.
Got it. Well, the next question is an interesting one, from our viewer, and it's from Prashant. He wants to know on Polycab or on Sterlite Tech, Avinash, if either of those counters look good to enter at this point of time, both trading at all-time high, but ROC as well as the ROE is very strong is his question. Any preference here?
I think within the wire and cable space, Puneet, Polycab definitely is a much better choice. I think, of course, Sterlite Technologies is also expected to do well because demand for optic fibers has gone up. Considering the kind of investments which are coming in the data center opportunity. But I think Polycab, we have the conference call today at around 4 o'clock. My sense is the numbers and the outlook commentary going forward will be very critical. But Polycab, if somewhere we were to accumulate maybe in a small, a staggered manner, in the next, say, 12 to 18 months, I think the growth momentum will continue. So Polycab can be a better choice. Stay invested for the next 12 to 18 months.
Okay. The next one is on Bellrise Industries. Gary is asking whether this is the right time to enter the counter from a 6 months perspective. Vaishali, would you recommend that?
Well, actually, the stock is already risen very high, but having said that, it still doesn't show any exhaustion. So I would say keep a range of 205, and this can go towards 230 to 250 levels in times to come.
Got that view, Vaishali. The next question coming in now. This one's, on a smaller stock here, Jyoti Resins, and a viewer, Sundar, has bought it at 1,700. Now, stock's currently trading at 839. Just trying my luck here, Avinash, do you track this by any chance?
Puneet, if you could please tell me the name again.
Yeah, Jyoti Resins is the counter. Jyoti Resins and Adhesives, yeah.
See, this is a company which is a smaller comparison of Pidilite. They are into industrial adhesives. And I think the company has done remarkably well. So I think, going forward in the longer term, the market opportunity and the pool size is very large, which I think, Jyoti Resin has frankly, demonstrated its, growth potential very well. So I think taking the next 12 to 15 months, yes, I think it's a good bet to, bet in the adhesive space, because if you look at Pidilite and if you look at Jyoti Resins is a much smaller player, but profitability is quite attractive. And I think the opportunity is large. So here, definitely, if you have a medium-term view, you should stay invested.
Got that view, and thanks so much for that, Avinash. The next question, and viewers, it's now time for the rapid fire round, the second edition in this edition of Ask Profit. Let me go across, take the first query. Now, this one's from Ramya from Chennai, and wants to know between Oswal Pumps or Max Health. Very different counters, Avinash. There's different sectors too, but what's a better one-year pick from here on?
I think I would prefer Max Health. I think, that is a promising opportunity in the hospital space. That would be a better choice.
Okay, the next one is on MTAR Tech. Is this the right price to buy for the next 3 months, Vaishali?
Well, MTAR Tech already gone quite high. So I would say keep a stop loss of 6,000 and look for 6,600.
Got it. The next question coming in now, it's between Bajaj Housing, GMR Airports. What's a better pick for the long term, Avinash?
I think my guess is GMR Airports is a very unique opportunity. I think if you have the next, say, 12, 18 months in mind, this is a good price to accumulate.
Crompton Greaves at the current rate, buying makes sense from a long-term perspective, Avinash?
Yeah, I think my sense is if you have a 12 to 18 month time frame, you can gradually accumulate.
Got it. Trent bought at almost 5,000 rupees by Harsha from Vijayawada. She's holding 50 shares. What's the view here, Vaishali?
You can average it out. It corrected quite a bit. It is at a good support level. You can average it out.
Okay, Transray Lighting bought at the levels of 580. What's the 1 year outlook for this one, Avinash?
I think outlook is pretty positive. The stock has been hammered from its high, but I think numbers have been pretty strong. So I think continue to hold.
KPIT Tech bought by Sunil at 728. Avinash's question being what he should do for the long term. Would you recommend him to exit since since he's in profits right now?
No, I think if he's got a short-term view, Puneet, he can exit. But otherwise, I think it operates in the automotive and basically in the US-American market. So I think very strong clientele. So obviously, if he's got a short-term view, he should exit.
Okay, 268 shares of JNK Bank bought at the levels of 606. Hold or sell? Vaishali on the charts.
Hold.
The next one coming in is on Union Bank, bought at 164. And the question, Vaishali, is what's a good price to sell it?
I think quite correct. If I would say sell at around 170.
Okay, the next one is an interesting one. Ashish from Delhi is saying ITC kab chalega. He's got 500 shares at the levels of 400. Avinash, your view from a long-term perspective?
No, I think here you need to give in a slightly longer period. I think ITC is a steady compounder.
Yes.
I think definitely at these levels there's nothing to lose. So I mean you have to possibly give say 12 to 18 months and continue to hold.
Continue to hold. Got well. Continue to eat bingo chips at least in that time, and probably the other product if you're interested. But Mahalakshmi from Hyderabad is holding on to ABB at 5580. Avinash, so she's a senior citizen holding 78 shares. Can she hold on for another year?
Yeah, I think she can hold on. I think growth momentum will come in. I think because this is a stock which is largely dependent on how the macroeconomy performs. So very strong MNC parent, continue to hold.
Okay, the next one is on Hindustan Zinc. Is this the right time to purchase from a short-term perspective, Vaishali?
Yes.
Uday is holding on to GPT Healthcare, which he bought at the IPO price. I can't remember the IPO price for this one, Avinash, but you have an opinion on the stock?
Yeah, I think it's a newly listed hospital company, and I think if you can hold on for the next say 12 to 15 months, I think has been done remarkably well. But I think it's a small hospital, so I think it will take some time to get related.
Okay, HAL 700 shares bought at the levels of 4659. Siva wants to know a medium-term view on this one. Avinash?
No, I think continue to hold. I think it should continue to grow rapidly over the next 2 years.
Final query for today. Srinivas from Hyderabad wants to buy into Force Motors. Avinash, do you have a view here? New model launch as well yesterday.
I think wait for the quarter 1 numbers. I think probably after that it's better to buy fresh.
Quarter 4 or quarter 1, Avinash?
Quarter 1, sorry.
Quarter 1.
Quarter 1 of FY27.
27. Okay, so you have to wait for a couple of quarters. Got it. Well, Avinash as well as Vaishali, thanks so much for joining in, helping us solve 54 queries. Avinash, hopefully you have a good evening as well, but thanks so much for joining in. And viewers, that's all the time on this edition of the show. KYC comes up next, but we'll also start taking all your stock related queries at 2 p.m. on Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to Know Your Company. I am Mahima Vajrajani and we are going to take up a very interesting company today that we are going to try to decode in this episode of Know Your Company. The company that I'm talking about is Aadhaar Housing Finance. Now, of course, it did come out with its Q4 numbers, but we're going to we're going to do a deep dive analysis of how this housing financer is doing. Basically, as a housing financer, mortgage-related loan products, what is its forte in terms of the loans. Basically it is for residential property purchases and construction. A lot of its loan book is from the salaried segment as well. Home improvement and extension loans is also something that the company provides. Loan is also they also provide loans for commercial property construction and acquisition as well. So these are the different segments of the loans that they give. Focused on low income housing segments, the ticket size largely is around that 10 to 11 lakhs. In terms of the loan book, 100% secured retail loan book is what they have. And this is of course the brief about the company. In terms of product mix, around 27% is LAP and around 73% of their loan book is retail home loan. So that is the big chunk of their entire loan book. In terms of how the geography and reach is, around 22 states is where the company has its presence, and it's got a vast expansion in terms to branches. Around 626 branches is what the reach looks like overall. So this is the overall view of what the company does, how is the reach, how is the geography as well. Now in terms of the parameters that we're going to talk about, when it comes to Aadhaar Housing Finance and as to how we are going to rate the company. Let's take a look at those 8 parameters. The first one is going to be the income statement that we're going to talk about. We're going to talk about the balance sheet. We're also going to talk about the operational metrics here as to how yields are, how ROAs are faring for the company. We're also going to talk about how asset quality is looking like, what is the guidance looking like going forward. Shareholding, this is a very strong company backed by Blackstone. Street cred, how has the performance of the stock been in the last 1 year? How has it been performing in the last couple of months? We're also going to talk about valuations as compared to peers. How is this company doing? Whether a slightly higher valuation is justified or not is something that we're going to talk about. And the last metric is the guidance given by the management. They're maintaining a strong guidance going forward in FY27, and we're going to quiz the management as well with regards to how this guidance fared. But let's start with the income statement first. Let's try to pull those metrics up. In terms of the net interest income, the 3-year CAGR has been at that 23% mark. This shows that there is solid loan growth, plus the spreads also looking very nice. In terms of the credit costs as well, the credit costs are relatively controlled, slightly inching up, but overall we've seen credit costs being in a stable range. In terms of net profit, the growth has been at a 25% CAGR, which is a very strong bottom line with good operational leverage is what we've seen. In terms of the quarter-on-quarter basis, net interest income, we've seen an uptick of 9%, and YOY basis we've seen an uptick of 25%. This means that there's steady loan expansion happening, plus there is stable margins as well. In terms of operating profits, up 4% QOQ basis and up 27% YOY basis. This basically means that operating leverage is kicking in. Slight moderation has happened in QOQ, but we'll try to understand as to why that's happened. Credit costs overall have gone down on QOQ basis, but are up year-on-year basis. That means there's net improvement overall, and net profit has seen a growth of around 11% QOQ basis, and YOY basis seen a growth of around 27%. So strong earnings momentum has sustained. So overall, if you take a look at the income statement, it's certainly a thumbs up considering the way things are moving. The next one is balance sheet. Let's take a look at the metrics here. The AUM 3-year CAGR has seen a growth of 21%. Overall, strong and consistent expansion has been happening when it comes to this particular counter disbursements. If you take a look at that number, the 3-year CAGR has been 17%. Growth is steady, slightly lower than AUM, but still a steady one. For borrowings, total funds, the CAGR, overall in the past 3 years has been around 16%. Funding growth overall is healthy and slightly, more conservative as compared to AUM. But AUM being more than disbursements growth, loan book is growing faster than the fresh loans, and overall indicating lower prepayments as well. And overall, this is how typically it is in a housing finance company as well. In terms of AUM growing faster than borrowings, I think that suggests that there is improving capital efficiency and the disbursement is also slightly lagging, and that means that there is slight moderation in terms of new demand. That is something that we'll ask the management as well in terms of how demand is looking like in terms of where disbursements are standing. So that's with regards to, of course, the two metrics that we talked about. But the next one that we're going to talk about is operational metrics as to how yields, ROAs, etc. are looking like. Now, yields, if you take a look at the past couple of quarters, the yields have slightly declined. This suggests that there might be slight or mild pricing pressure. Shift to maybe safer or lower yields is what the management is probably aiming at. We'll ask the management as to why that has happened. In terms of ROA, there is a very strong profitability, for a company like Aadhaar Housing. It's gone from 4.3 to 4.8 just in the past 2 odd quarters. So a very strong profitability when it comes to the ROA. In terms of cost of borrowing, it's gone from 7.9 to 7.7, which has come down. So that is also on a positive side. And spreads are also overall stable. Around 5.8% is what we've seen as compared to where they were at 5.9% in Q2. But overall cost to income, this is a very interesting one, because if you take a look at how the cost to income has come down in the past couple of years, 38% in FY23 to a 36% in FY26 we have seen. Most certainly a positive one. This indicates that there is improving in efficiency and operating leverage is kicking in when it comes to the cost to income ratio. So overall, in terms of where operational metrics go, it's certainly a very good set of numbers that we are seeing. Now, let's take a look at the asset quality as well. In terms of the GNPA to AUM as a percentage, there has not been much movement here. Overall, the asset quality is largely controlled is what we've seen. FY23 it stood at around 1.16, which is come down slightly to around 1.08 in FY26. For the NNPA, let's try to pull that chart up to AUM because that is an interesting one. Here also, overall, there's adequate provisioning. Slight uptick is what we've seen in FY26. But overall, this is also not very concerning when it comes to, there's no structural concern when it comes to this metrics as well. So this is with regards to where asset quality goes. Now, in terms of the next metric that we're going to talk about is shareholding. Let's take a look at how the shareholding pattern of this company looks like. Everybody knows that this is a Blackstone-backed company. In terms of where the shareholding goes, when it got listed, the promoters were holding around 76%, which has come down to around 65%. So slight selling has been there, but still a very well-held company. But we'll try to quiz the management around understanding around this backing of Blackstone, how long, long-term view with that stands. FIs have slightly increased their stake in the past 2 years since the listing from a 4% to around 6%. DIs have also slightly increased the stake from an 8% to 8.5% to around 9.15%, and the public shareholding has gone up from around 11% to almost 20%. So it's a well-held company fairly, and there's strong promoter backing as well. Now let's take a look at street cred as well. Now, in the past 1 year, we've seen, of course, markets consolidating, markets being under pressure as well. 1 month has been very good for the counter. It's given a return of around 12% considered to where the markets have been in the past 1 month. 3 months also, it's been in the positive, given around 8% return. But in a year, it's just up around 9.5%. So just taking a conservative approach here, we've given it a thumbs down, considering that the way it has been growing, the stock has not been that rewarding. But in terms of where valuations go, Aadhaar Housing 1 year forward price to book as per Bloomberg stands at around 2.48 times. That compared to Aptus value stands around 2.2 times, and that as compared to PNB Housing stands at around 1.3 odd times. But what analysts are suggesting is that the way Aadhaar Housing has been growing, the way the loan book is, the way the AUM growth has been like, the slightly higher valuation as compared to both of its peers is justified. And that is why we've taken a neutral approach here, though valuation is slightly higher as compared to peers. But the way it has been growing, this kind of valuation is justified, and that's why we've given it a neutral rating. In terms of, just before I go on to guidance, street coverage, 16 out of 7 analysts have given buy rating on this one. And if I'm not wrong, overall, the expectations as per Bloomberg as to upside return potential for the next year for this counter is around 22%. Moving on to the guidance part, as to what is the guidance that the management has given when it comes to FY27. What they've said is that AUM growth is going to be at 20%. I'm sure that this is a conservative one. We'll try to quiz the management on this one as well, because 3-year CAGR for AUM growth has been 21%, more than what they've guided for. PAT growth as well at 20%, so very constructive when it comes to the PAT growth as well. Disbursement growth is going to be around 17 to 18%. So that's the overall guidance that the management has given for Aadhaar Housing Finance. So that's everything, all the 8 metrics that we talked about Aadhaar Housing Finance. Now let's take a look at the rating as well. Income statement, most certainly a thumbs up. Everything looks very positive. Balance sheet also, very strong balance sheet, but just taking a conservative approach here and giving it a neutral rating. Operational metrics, most certainly a thumbs up with yields, ROA, everything improving. Asset quality, we've given a slightly neutral rating to this one, considering that it's not moved much in the past couple of years. Shareholding, we've given a neutral rating just to just from the approach of trying to quiz the management with regards to how Blackstone is looking at this holding from a long-term perspective. Street cred is a thumbs down because in the last 1 year it's not a very attractive return as compared to the way the company has grown. Valuations again is a neutral rating here because slightly expensive to its peers, but at the same time it's justified, like I said, because of the way the company has been growing very well. Lastly, FY27 guidance, most certainly a thumbs up, considering that they've given 20% growth guidance in AUM as well as 20% growth guidance in PAT. So the final rating for Aadhaar Housing comes out to be 5 out of 8, which is a very good rating. After a very short break, we're going to speak to Rishi Anand, the Managing Director and CEO of Aadhaar Housing. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Godrej, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching KYC, and as promised, on this side of the show, we are joined by Rishi Anand, who is the Managing Director and CEO of Aadhaar Housing Finance, joining us. Rishi, thank you so much, first of all, for taking out the time. My first question to you is, with regards to the guidance that you've given, AUM growth at 20%, PAT growth at 20%, 3-year CAGR, if you look at your AUM growth, it's been more than that 20% mark, right? Just want to understand that this guidance is given on taking a conservative approach. Do you think you can do better than that 20% in terms of where FY27 goes?
Great. Very good morning, Mahima. A tricky question to start with. Yes, we have given a clear guidance of 20% growth on AUM, 20% growth on PAT, keep the GNPA below 1.1. These are pure guidance numbers. And, end of the day, we always give range bound. So when I say 20%, I always meant 20 to 22%, both in terms of profits as well as on AUM. And on best effort basis, why not? Our CAGR, and you're right, our CAGR has been 21%, and on effort basis, it should be above 20% as we go ahead.
Okay. The other aspect, Rishi, is with regards to how AUM has been compounding faster than your disbursements, right? Just want to get a sense. This is on account of lower prepayments is what we're seeing. What are the trends looking like when it comes to repayments? And going forward in FY27, what are you expecting?
Yes, you've picked up the right point. It is on account of lower prepayments and foreclosures. If I look at the foreclosures that was in FY23, it was in the range bound of 18-19%. Now we're talking about 17%. So lower the prepayments, higher the AUM growth will be. But from a disbursement, purely from an incremental disbursement perspective, anywhere between 18 to 20% is what we are looking at, which will compound or throw a AUM growth of about 21 to 22%.
Got it. Correct me if I'm wrong here, Rishi. You have given a target of around 50,000 crores of AUM in the next 3 years. Help us understand as to what are going to be the key drivers going forward. Is it going to be geographic expansion, ticket size increase? I mean, how are you just trying to look at that growth coming in?
So, Mahima, it is going to be, and you're right on the 50,000 crore number. Even if I talk about a 20% AUM growth for the next 3 years, that's the simple maths that we reach about 50,000 crore. There are going to be multiple things that is going to fuel this 50,000 crores, right? From, yes, expansion, keep adding 30 to 40 branches year on year. We are today 626 branches, 22 states, 550 districts being covered. Keep adding 30 more branches in tier 2 and below, which is our emerging concept. That fuels it. Second is, more importantly, you'll have to look at what is happening on the demand side. All the state governments, the central government, the PMAY scheme, the BLC scheme, the affordable housing projects. There is too much happening right now as we speak in the EWS-LIG segment. That's what we cater to. To top it up, I think it is. And we've invested a lot in the last 2 years on technology, on implementing, on getting the right AI inputs into our processes. So all that is going to fuel our efficiencies and better productivities. So I would say a combination of all three is going to fuel this 50,000 crores.
Understood. With regards to your yields, slightly they're trending lower, and this I understand this on account of PLR cuts as well as the mix in terms of changes in the mix. Just want to understand as to how confident are you going forward with regards to your spreads? Will they be maintained at that 5.8% mark?
So what we have maintained, Mahima, always is that we will always be a company upward of 5.5. Today we are trending at about 5.8. In the short term, I don't see any reason why this 5.8 should not be maintained. And you're right, 15 bips cut we did in February, that has impacted, and that's been across the book. So that has given a little impact. But a 5.8 is completely sustainable in the short to medium term. 70-30 breakup of home loan to non-home loan is what we're going to be maintaining. We are going to be increasing 1% self-employed. Today, self-employed is about 45% on my book. We are going to be increasing that by a percentage each year. That is by design. And that's going to help us balance out the spreads that we maintain.
In terms of ROA, it's trading at around 4.8%, which is one of the best in class. Just want to get a sense as to how sustainable is this ratio? Because I want to understand as to how much of this is structural and cyclical.
So 4.8, the number that you've been quoting is for the quarter. But if I look at the financial year complete, it is 4.3. And even on a 4.3, we happen to be one of the best in the peer group in the industry that is being delivered. And I don't see any reason why a company which has reached a 4.3, there should be any reasons why it should be dropping further. So we are very confident of maintaining the ROAs that have been delivered.
Cost to income has been improving steadily. If you take a look at how the comparison has been from FY23 to FY26, I want to understand as to how much of an operating leverage is still left, considering that there is going to be branch expansions going forward. How are you looking at that trend?
So our vision has been very clear, Mahima, that 40 to 50 bips year-on-year basis, we should look at reducing the cost to income purely by building in efficiencies. We speak about branch network, but the kind of branches we open are low OPEX branches, the low CAPEX and OPEX branches, which does not impact, and they typically break even in about 9 months. So that does not impact the cost to income at the percentages we talk about, and clearly indicating 40 to 50 bips reduction in the cost to income as we go ahead. And you're right, if I remember right, in the last 3 years, we would have dropped our cost to income by about 300 bips.
Okay, got it. Your gross NPA and net NPA, largely have been stable, and that's not a concern as well for a company like you. But I wanted to understand that credit costs have seen some volatility. So going forward, how are you looking at that trend?
No, we've been very clear on credit, the credit cost, asset quality. You indicated GNPA and NPA. There are no issues at all. We guided the market for a 1.1%. We've closed at about 1.08% GNPA, so well within range bound. Credit cost, we've always maintained that we will be a company not beyond 25 bips of credit cost, and there is a lot of confidence around maintaining that level.
Understood. Rishi, you're one of those companies which is backed by, which has a very strong backing of Blackstone. Although the percentage of holding has come down to around 64%, just want to, help just want to understand in terms of, going forward from a long-term relationship view, how are you viewing, that percentage not going down?
So, Mahima, this is a question best asked to Blackstone. having said that, indicatively, you see, they came in 2019 June, if I'm right, on the month, and the rollover of the fund has just happened in February this year. Rollover obviously brings in a lot of comfort and trust on the management. It brings in a lot of stability across the way the models of private equity model work, and we as management, obviously, from a Blackstone perspective, there are no indications at all of looking at early exits, etc. So, as I said, this question better be asked to them. But as management, it gives a lot of comfort with a player like a private equity like Blackstone backing us. And yes, you're right. The 75% on the rollover came down to about 65%. 10% moved on to a sovereign fund based out of Abu Dhabi. So, but broadly, the shareholding pattern remains in the comfort zone.
Understood. Given that expectation is that the rate cycle is going to remain stable for at least next 2 to 3 odd quarters, just want to get a sense as to how sensitive in terms of, are you in terms of margins? If if there is a surprise on the upside going forward, how are you looking at that metric?
The clear view at Aadhaar is that, we have seen the peak, not the peak, the downward trend. From here on, it should be steady state given the disturbances across Middle East. But if you look at the composition of the book, Mahima, we are a 75% floating book on the asset side, and we are a 74% floating book on the liability side. So whatever comes in eventually gets passed on. And this composition of 75% and 75% helps us protect our margins and spreads. So there is no serious reason why my spreads should be under threat. Yeah, there can be always a lag of a quarter here and there, which is operational reasons, but broadly it is protected.
You've highlighted that tier 2, tier 3 markets are still very strong for you, considering, everything that's happening geopolitically with regards to West Asia conflicts. Are you seeing, any pressure in terms of, where demand goes? Because, overall, it is putting pressure in terms of when it comes to the Aam Aadmi money that comes in their hand, and inflation is certainly putting pressure on them. So are you seeing any pressure in the near term because of this aspect?
I think you chose the right word, Mahima, Aam Aadmi. That's what we do. We cater to EWS-LIG. This is the actual Aam Aadmi in the society. Aam Aadmi deals more in essential commodities. He's the guy who is lowest in the state of the society. It does not matter to him what is happening in West Asia, because he's not an NRI, and NRI flows are not coming to him. Having said that, our first line of defense has always been bouncing, etc. So we keep a close tab on what is happening on account of the West Asia issue. Is there going to be an issue around demand? See, my customer is a consumer who is doing a construction of a 2-room in a remote tier 2, tier 3 city. He's buying a small, 10 lakh kind of properties. That's the consumer I'm dealing with. We even post-COVID, we all said that markets are going to go down for the next couple of years, but this segment always prove everybody wrong. So I don't see any reasons why, especially because of the consumer that I cater to, I don't see any disturbances in that trend. Plus, to top it up with the government initiatives of PMAY, it is helping us a lot on the ground.
Right, Rishi, thank you so much for taking out the time and helping us answer all those questions that you did so candidly. Thank you so much for that. All right, viewers, so that was, of course, the management of Aadhaar Housing Finance. But with that, we're completely out of time on this edition of Know Your Company. But do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On
Cautious trade continues on the Lal Street as Nifty trades near 24,100 levels. Broader markets outperformed today. Major sectors trade in the green, barring the FMCG and energy sectors. Coforge delivered a standout Q4 number. Profit sharply beats the street expectations on strong execution and margin expansion. Brokerages turned more constructive, citing improved growth visibility, better margins and healthy deal pipeline heading into the new fiscal. Larsen & Toubro is in focus after missing revenue and EBITDA estimates, with margins slightly below the expectations. Profit growth stayed modest, but management struck a confident tone, guiding for steady growth through FY31, despite near-term pressures. Cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore rupees of guaranteed credit to ease liquidity stress for MSMEs and mid-sized firms, and with zero guarantee fees and quick access. This stands to benefit the export-oriented MSMEs, restaurants and other businesses navigating the global disruptions. Oil extends decline as hopes of a US-Iran deal lifts the sentiment, pushing Brent towards $108 per barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take a look at the market. And yes, there has been a slight dip in the market at the current moment. Market has been really toying with the external pressures and the global sentiments coming in. Crude has cooled off a little, but remember, it is still way above the $100 per barrel mark, which is the concern for the Indian economy as well. Sensex almost flat to green in trade at the current moment. When we talk about the internals, well, Bharti Airtel, Mahindra and Mahindra after strong set of numbers and good commentary coming in from the company, and also HDFC Bank, ICICI Bank and SBI, the three big boys of the banking sector, are all pushing and contributing the Nifty 50 the most. When we talk about the downside, Larsen & Toubro, RIL, from the FMCG consumption pack, HUL and ONGC Titan, these are the ones which are really the laggards in trade today. Remember, FMCG is a space which is of concern today. It is the biggest dragger. But when we talk about the sectors which are really playing a good role in the market is pharma as well as banking, some part of the banking space. When we talk about the other internals as well, the broader markets look far better than what the key indices are really showing today, over 1% up on the mid-cap universe. So that's the picture we should really keep in mind today. Sudeep Bandyopadhyay, who is the group chairman at IndiTrade Capital, joins in with a take on the market. Sudeep, always a pleasure to welcome you on NDTV Profit. How does one really play the market with the sentiment downers really coming in on a regular basis, and there is a day of gain and a day of losses? So there is a sustained volatility when we see in the overall momentum. Would you agree?
I completely agree with you, Nisha, and thank you for inviting me. I think we have to live with the volatility, and this volatility is not going to go away in a hurry. While there are positive statements which were made yesterday, and that's the reason why market is taking positive cues. But the fact remains that oil is still above $100 per barrel. The settlement in Gulf, West Asia, hasn't yet been reached. So things are still pretty tense and uncertain. Even yesterday, there were a lot of unfortunate incidents of firing by Iran on UAE. And things are not really looking to have been settled yet. So under the circumstances, I think investors will have to be prepared for volatility and act and handle markets accordingly. From a long-term investor's point of view, of course, there are interesting opportunities which are emerging, and it may be worthwhile to start accumulating good quality stocks in small doses over a period of time.
Right, so smaller stocks, and from the mid-cap universe, which is doing far better than the frontline indices today, Sudeep, what are the pockets which are really looking good, and is there still value to be made in the short term at this particular valuation levels in the mid-cap universe?
Well, I'm not sure about short term, because short term, as I was mentioning, there is too much of volatility, and it's extremely difficult to predict the market in the short term. I mean, if you're looking at technical trading, then it's different. But from a fundamental point of view, short term is extremely difficult to predict. But yes, mid-term, mid-cap stocks opportunities still do exist, and there are pockets, whether it's pharma, whether it's auto ancillary, whether it's cement. I think there are opportunities of picking up good quality stocks. Valuation isn't cheap in any of these spaces, but if you're building a portfolio for long term, I think these are the areas you should look at.
That's right. So Sudeep, one thing, one observation from a lot of consumption companies, results in the last couple of days, like in the case of M&M, even in the case of Marico, across the board consumption space, that is seen is that the revenue growth is good, profit is good, EBITDA is good, but EBITDA margin has taken a dip because of the cost pressure coming in. How do you assess the overall, price pressure, crude-linked, intermediaries pressure and inflation really playing out in this particular earnings season?
Well, I think Q4 numbers which these companies are coming up with are definitely very, very good. And they are beating market expectation in most of the cases. You talked about Marico, you can talk about HUL, you can talk about Nestle, you can talk about many other companies. I think they are and will beat the market estimates. But I'm a little cautious for the future. As you alluded to, the costs because of the situation in Gulf is going up. Not only oil, which has its primary, secondary, and tertiary impact on multiple, commodities which are in the supply chain. There are supply chain blockages which are affecting these FMCG and consumer durable companies. Also, some of the chemicals are getting impacted, and that in turn is leading to supply chain bottlenecks and price challenges, cost-related challenges for these FMCG companies. I think this will get accentuated in Q1 and Q2, and I'll be cautious. Also, remember that the predictions of the meteorological department, whether it's IMD or SkyMet, is that monsoon will be subpar because of El Nino factor. Now, again, that doesn't augur well for the demand scenario as far as FMCG is concerned. So I will be a little cautious. I think Q4 is undoubtedly very good numbers, but Q1 and Q2, I think I'll wait and watch.
Right, Sudeep, very well pointed out that Q1 and Q2 will be difficult, and also with the monsoon impact. But Sudeep, one quick question to you. How much of the bad news of Q1 and Q2 is already baked into the market, and how much downward slide do you anticipate then on account of that from here on?
Well, I would say, if I have to put a percentage, I would say 20-30% of the bad news is baked in, because somehow the market is factoring in a quick resolution to the West Asia problem. If that does happen, I think it's well and good. But if that doesn't happen, I think things can get far worse before they start recovering. So I would say market is expecting a quick resolution, and that's the reason why 20-30% of the bad news is baked in, but nothing beyond that. So we have to be a bit cautious. And as I told you, the El Nino impact on monsoon is going to have an impact on Indian capital market and Indian economy. We need to keep that in mind as well.
FMCG companies like Marico have already been raising that particular impact to really get baked in later. But only 20-30% of the bad news getting baked in is not a good news. Time for caution, says Sudeep. Thank you so much, Sudeep Bandyopadhyay, for joining in with your expert take. All right, let's take it straight to also the stocks which need to be on our radar. Shivam joins in with the entire list. Shivam, what all made to your watch list today?
Well, yes, the first stock is the United Breweries Limited, which is down over 3%. Now, the company has reported its Q4 earnings, and the revenue has been down around 3.1% to stand at 2,250 crores. The volumes of the company has seen a better growth than the street expectations, but there were few other metrics which has, such as the cost pressure, which has impacted the growth. The EBITDA margin has also contracted on the back of the high fixed cost. The company is also expecting to see the cost impact of around 400 to 500 crores in upcoming 2 to 3 quarters. Now, next stock is the SRF, which is up over 7% in today's session. The company has witnessed a strong growth in fluorochemicals, technical, textiles and films segments. The EBITDA jump has also been around very significant, around 47%, and technical textiles has been contributing around 63% of the growth. The fluorochemicals business has seen a robust growth, which was on the back of higher volumes and better prices, and the company is looking forward to expand its hydrofluorocarbon capacity going further. Now, next stock is Coforge, which is up around 9% in today's trade, and the company has reported a strong set of Q4 numbers, where the margins have expanded by 250 basis points on the back of lower operating expenses, and the deal wins of the company stands at 9.2% which is up 9.2% to stand at $648 million.
Very good list and a detailed work on that. Thank you so much for putting that out for us. Now, moving on, the new government in Bengal is likely to be a big positive move for the industries and MSMEs doing the business primarily around Bengal, says Sanjay Budia, who, while speaking to NDTV Profit, added to this. He even emphasized that this is one of the best periods for Bengal. Let's listen in.
Very important change which has happened in Bengal sentiment. I've been talking to a lot of businessmen and conglomerates folks also. They seem very bullish. Your initial views on how this is being perceived for Bengal?
I think it is seen as one of the best periods for Bengal. As they say, Bengal beckons. So it is now the time for people who have been settled abroad or who have been settled elsewhere, whether it is Bangalore or Hyderabad. They had that kind of feeling that, there could be job opportunities more in other states, and there could be, as they say, always grass is greener. So now they will also feel that, okay, there's the time to come back and, see the future because there is, we have to agree on two things. A, Bengal, because of its unique geographical location, offers tremendous opportunities. It is the gateway to entire northeast and to neighboring countries. So 7 sisters plus either Jharkhand, Bihar, Odisha, and then all the countries like Bhutan, Myanmar, Nepal, Bangladesh, whatnot. So it's a big area, and Bengal being the center of that hub, basically. So there is a huge number one. Number two, there are resources, mineral resources, where Bengal has huge age and advantage. So taking care of these two advantages, definitely we should now cash in to have some large manufacturing units which will spur growth, investment and employment. Bengal has been, mostly we have seen small and medium industries doing much more than larger industries. So it's the time now that we should also get some larger industries. So it will have a multiplier effect. As far as we are concerned, let me also give you our example.
Sure.
Basically,
Just wanted to understand a little bit. What are the industry demands looking like, sir? Now, presently, what would you be asking, as an industry in which you are working or the Bengal's businessmen are working? What kind of bottlenecks should be addressed first?
I would not say bottlenecks. We can say some of the few challenges or some of the actions, like you say, short hanging fruits, or what is medium term, what is long term. So some of the things which should be taken on priority basis is some of the incentives. You have to be at par. Basically, ultimately, all states need to offer. Now there is a competition not between countries but within the states also, which is very positive.
All right, so that was all the verdict really coming in from the state of Bengal there. But let's shift our focus back on the earnings momentum. Marico is the FMCG player that we are really talking about. Take a look at the numbers. Of course, the stock is really rewarding today, 2.5% up. And why not? The good set of numbers, strong growth momentum. All right, Saugata Gupta, MD and CEO of Marico, joins in for more on the numbers. Saugata, a good set of numbers, revenue growth, net profit growth, EBITDA growth, but EBITDA margin on a YOY basis has really taken a dip. What's really eating into the margins of the company?
Last year, as you know, there was a 100% increase in copra, which was 50% of our overall input cost in the basket. So I think that we have already seeing a fall in the copra prices, which is they are around 30-32% from the peak. And while I agree that there is a crude-linked inflation, when you have a 30-32% reduction in 50% of your commodity basket, the crude basket is around 20%. So we are net better off. So there is no risk to that. And number two is to take care of the crude-linked basket. We have already taken a 78% kind of a price increases in that part of the portfolio. So I think we are extremely comfortable with respect to margins at this point if time is concerned.
All right, comfortable as of now, but Saugata, the war really continues, crude pressure will continue. What is the guidance for this particular quarter, and will the price hike really offset for that inflation?
It's very difficult to get into a quarterly basis. I think what we have given is a yearly outlook, which bakes in the fact that there would be a heightened crude for the balance year. Obviously, if there is a resolution to the current situation, crude will go down a bit, but it's not going to go back down to 2026 levels. And therefore, the supply assurance issues and all this has been baked in. With that, we are extremely confident of we should be able to deliver a double-digit revenue as well as a high teens EBITDA growth. And the reason, as I said, comes back to the fact that we believe that the copra is now range bound at 30-32% of our, below the last year's peak. We have taken a 10% price drop in Parachute in the non-price point packs, and given that that's the kind of a outlook, I think with that mix, even if there is a heightened crude, and we are obviously monitoring the effect of El Nino in the second half of the year, we are at this point in time reasonably confident. But in today's world, obviously, there could be multiple black swans, which you can't predict.
Right, so El Nino effect also will play out in the second half of this financial year or this calendar year. But what about more price hikes? Do you think that you will need that? And will the market absorb it without impacting the demand?
I think we have taken some price hikes in the crude linked portfolio around 7 to 8%. And we believe this is good enough at this point in time. We'll wait and watch.
Saugata, your stock has been upgraded by the brokerages because of the strong momentum for FY27 outlook that you have given. What are going to be the key drivers for this strong outlook to play out?
I think we have been able to consistently execute multiple vectors of growth where we have a reasonably profitable core, which has shown significant resilience. Nowhere in the world a brand has taken 60% price hikes and delivered flat volume growth. Actually, it's a slightly positive net of MLH like Parachute has been able to do. I think our entire strategy on value-added hair oils is now playing out, which is investing behind the mid and the premium part of the portfolio, investing behind brand building equity as opposed to fighting it out with trade spends in the market, which is suicidal. Thirdly, I think the diversification play, which is now not only growth but profitable. We have amongst a lot of other peer set companies, one of the more consistent and profitable international play, which is again multiple vectors where we are significantly reducing our concentration risk of Bangladesh while I premiumize. So therefore, there are multiple vectors of play. Some years, some might not deliver. Some years, some might deliver. But my point is that the majority today are on a momentum, and I think one of the things that is unique to us is we have a management which is there for the long term with a long-term view and consistent execution. For us, the founder's mentality, ownership mindset in the leadership, which leads to high degree of consistent execution and also ability to cope with adversity. And I think it is a very battle-hardy team in terms of coming from whether it's COVID, Ukraine, we had last year significant cost push, and this year. So I think that helps. And I think today, I would say significant amount of the vectors are firing consistently.
All right, so looking confident there, Saugata, but my question also, how is demand picture really panning out with inflation, war impact playing out? And also with that urban demand pickup, are you seeing that and also volume growth?
Last year, I think pre the GST rationalization, we had already seen rural picking up. I think overall, a significant benign inflation and along with the GST rate rationalization, which also encouraged a lot of unbranded to branded as small players to large players because the consumers are aspirational. I think that helped the urban growth. We believe that so far, compared to a lot of emerging markets, our consumers have been shielded from inflation. I think the government has done a fantastic job in protecting that, insulating the consumers. And obviously, there is a watch out as far as inflation is concerned or what can happen with the El Nino effect to the second half of the year. So far, I think demand is in control. And the other larger thing which will help, I believe, the organized players is during a little bit of crisis which we are facing in terms of supply chain assurance, which needs working capital, which needs a far more agility and deep pockets. So larger players' ability to cope with this is far better than the smaller players. And therefore, in today's situation, the larger players in this sector are likely to consolidate and volumes in favor of the smaller players. So given that, if I look at the larger players in the sector, the listed set in the sector, I think this year will continue to be decently good.
All right, this year continues to be decently good. But as a sector leader also, Saugata, how are you seeing this West Asia conflict really impacting the overall sector and also your company? If you can give an outlook for this year.
Break it up into two parts. I think a resolution which is perhaps on the cards, and then obviously there will be some softening of crude-led thing. Or we believe that it will obviously be at a higher level. So we have to manage with and bake in a higher level of crude prices and crude derivatives for the rest of the year. Having said that, I think it depends on the company's mix. It depends on the company's portfolio in terms of how much, a lot of Indian companies we are present in Middle East. In Middle East, to be honest, other than the supply chain constraints, we haven't seen a significant demand, rationalization or something like that. For us, for example, Middle East contributes to 4% of our this one. We are not seeing any major concerns. So we are hopeful. I think it's good to be optimistic sometimes that there will be a resolution sometime soon, and things will, while it will not go back to the normal of 2026, it will soften definitely for the current this one. But yes, this year will be a little tricky for a lot of people, especially those who have significant amount of crude-led basket in the input costs.
All right. Thank you so much, Saugata Gupta of Marico, really giving the full perspective how this year is going to pan out for the company and the sector. Thank you so much. All the best for the next quarter. And there you go, over 2% gain when it comes to Marico after a strong set of numbers, slightly pared down from when we started the discussion. All right, a new risk is really haunting the Indian banks, not myth, but mythos. Well, Kotak CEO says that AI-driven cyber threats now strike at machine speed, not human pace. Banks are really racing to upgrade the systems. Piyush, my colleague, is here with all the details on this. Piyush, tell us.
That's absolutely correct. In fact, Kotak Bank CEO Mr. Vaswani said that AI risks keep him awake at night, and now bankers have to respond to AI-based threats on a real-time basis and act like machines to actually counter these AI models. We are aware that Anthropic-built Mythos can spot vulnerabilities in a bank's IT system or any operating software in real-time basis. Banks have actually stepped up their investments as well on cyber front. HDFC Bank CEO said that the bank's spending has quadrupled in terms of tech spending to over $1 billion in FY26. PNB has earmarked around 3,500 crore for digital cybersecurity infrastructure, and ICICI Bank says it spent around 11% of its OPEX just on digital infra in the last financial year.
All right, Piyush. So that's one very important development to watch out for when it comes to the banking sector. A quick update on Vodafone Idea. The stock is gaining today because of the changes in the board and non-executive chairman position. That has been regained by Kumar Mangalam Birla. Remember, in the year 2021, he had stepped down when AGR dues were really haunting the company. And now with AGR dues issue and waiver really coming in with clarity, company really looking at the future prospects of growth now. And also remember, the government's indication is that we need 3 healthy telecom operators, and therefore a lot of waiver and bailing out has been done behind Vodafone Idea. After all that is over, now the company is looking at the growth prospects going forward. Lenders are being connected for raising funds for the growth potential as well. So therefore, Kumar Mangalam Birla steps up as the non-executive chairman once again for confidence boosting measure for all the stakeholders post the AGR waiver. Also, it does a few other things. KM Birla as non-executive chairman to give comfort to the lenders at the fundraise event, and also important signal and very important to dispel the rumors on sale of the company to any other promoter group. So those are the indications and messaging with this top appointment. So keep an eye out on Vodafone Idea. With that, completely out of time on markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. Just
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Puneet Joheri, who's standing at the NDTV Profit Market Pit. With all the action in the market today, Puneet, it's an interesting day of trade because that tug of war somewhere continues as well, because last 7 to 8 trading sessions we have been in a pretty broad range, specifically when it goes to Nifty 50, and it's broader markets which is seeing buying at lower levels. So that's where probably value is emerging.
Well, most certainly, and we've seen that consolidatory phase continue for the Nifty 50 today as well. We're off from the day's high, and we've been speaking about 24,300 being a zone where the markets have seen pullback time and time again. Today, from that 24,250 itself that has happened today. So when you look at the key factors that we're looking at for the markets today, that has been one of the key factors. So 24,000 continues to be a key level where we come back to it and are seeing consolidation even on most of those days as well. 200 points off from the day's high, but the mid and small cap index continue to power through at this point of time. Mid cap index now at the day's high at almost 1.4%, small cap also at 1.2%, but within the indices you've seen pharma as well as healthcare continue to be the big gainers for today. And Coforge, in terms of individual stock movers, now up 10% after a blockbuster set of numbers. But the fears of a larger Anthropic entering into the IT service domain and also seeing cognizant that 15,000 layoff number is definitely catching the street, at least a bit of cold in that sense for the IT majors. So you're seeing TCS, HCL Tech, Infosys all down. It's only Persistent and Coforge that's driving the market today. And in terms of the other individual movers, you're seeing SRF and Hero MotoCorp report good set of results. And L&T is continuing to disappointing the street today, down 3% and is the biggest Nifty loser. But that is what's happening in the markets today. But Hero, back to you.
Okay, so that's with regards to where markets go, but let's quickly look at the watch list. Indigo is in focus, and this is on the back of the ECLGS 5.0 for airlines that benefits the company. M&M brokerages have been absolutely upbeat. Bajaj Auto will be in focus on the back of earnings and the buyback announcement that could be coming in. L&T, brokerages have been flagging concerns, and that's the reason why you're seeing pressure there. Embassy Development, that's moved out of IBC classification, and that's the reason why you're seeing a strong surge coming in. Elecon Engineering is buzzing on the back of volumes, and you have Coforge and Signity Tech both that are in focus, one on the back of numbers and two on the back of the merger completion. United Spirits, the premium segment, has been driving growth for the company, and you have a UBL on the other side, which has actually fallen short of estimates. That stock is at a 52-week low. Wockhardt also in focus. The stock is up 19% in the last 4 trading sessions, and this is on the strong performance in terms of FY26, a profit number only after FY22. Strong volumes building up on Force Motors as well, and Vodafone Idea. Kumar Mangalam Birla has been appointed as non-executive chairman, so that's providing a sentimental breather to the company. Cohance is also up 60% in the last 1 month. In fact, the flip with Umang Vora joining in is what is probably working in its favor. And you have Netweb Technologies, where your FY26 revenues have actually surged to 90%. So that's what we're watching out for. But let's head across to Puneet to take the rapid fire with Lakshmikant Shukla from Yes Securities.
Well, Lakshmikant, very good afternoon to you. Thanks so much for joining in. The first stock, Embassy Developers, stocks up and locked in upper circuit as well. But what's been the larger trajectory on this one, and what should investors do and keep this on the radar?
Embassy Development has seen a gap up opening today, and now it has surpassed previous swing high. But overall, structure is still on the bearish side, as secular trend is on the is trending lower. So until we see any decisive move above the levels of 61 to 64, we will remain slightly negative. And if it breaks the key support levels of 55, then further decline is possible on the lower side.
Lakshmikant, let me put across a couple of stocks, Cigniti as well as Coforge. Now, of course, Coforge has acquired Cigniti, but on the charts for both of those, what's the outlook?
See, Coforge has already gained around 10%. So overall sentiment is on the bullish side, and we are also quite positive in Nifty mid-cap IT space. Look at the trend of the persistent. It has found support from its ascending trend line, and so we could expect upside move in persistent as well as in Coforge. So we could expect current momentum will continue in Coforge, and probably it could surpass its previous swing high, and we will see 1,350 levels soon in Coforge in the upcoming sessions. And the support which I am expecting, it is trending on the downside toward the levels of 1,240 to 1,230.
Good. Well, that's a big upside coming in on Coforge from Lakshmikant, but also on Elecon Engineering. Results had multiple one-offs, but on the charts, what does it suggest?
For Elecon Engineering has seen decent upside move. A few days back, it has also surpassed its previous swing high of 525 and is still trading above this level. So we will remain positive till it holds this level. Now, further breakout is expected once it crosses the levels of 575 to 580 range. Once it crosses this level, then after we will see further bullish momentum in this stock, which could push it higher toward the levels of 600 to 610 range.
Also on Netweb Tech or Lakshmikant, because we've seen a very strong up move, then some pullback from the highs. Is the momentum back right now on this counter?
Yes, probably this stock has seen a consolidation breakout in today's sessions, and 2 days back it has seen some sort of decline, but that decline has bought with the formation of bullish candle, as in today's sessions it has already given consolidation breakout. So we could expect higher momentum in this stock. Support is intact around the levels of 4,200. As long as it holds this support, positive will continue, and we will see upside move toward the levels of 4,650 to 4,700 on the short-term basis.
And a very quick view also on Wockhardt, another result which was a very strong one in this quarter. Very quick view on Wockhardt as well.
See, Wockhardt has also seen a positive momentum, but it has already gained around 13% on the daily chart. So I think one should wait for the dip around the zone of 1,580 to 1,600 levels. I think that would be the good levels to take entry. But the traders who have already bought this stock can continue to carry this momentum and can expect the upside levels toward the zone of 1,800 to 1,820. And our view will remain positive till it hold up the levels of 1,550 on the downside. So wait, if someone want to initiate fresh long, then one should wait for the dip toward the levels of 1,580 to 1,600.
And the last stock on the radar, Force Motors, that's one yesterday launched a new model as well, but it's off from those highs of almost 25,000. Is there enough evidence on the charts to suggest we can go back to those levels?
See, after a few days of decline, this stock has seen a positive momentum on the upside, but still having multiple hurdle around the zone of 21,400 to 21,000 zone. Until we see any decisive close above this level of 21,400, I think one should be cautious. But if it is able to surpass above the levels of 21,400, then we will see revival on the upside, and we could expect this pullback move to extend higher toward the levels of 22,400 to 22,500 zone.
Got it. And just one more, Lakshmikant, since we've seen a very big up move on Cohance in the last 1 month, that's of course driven by a change in management, but on the charts, do you think that, because stock had fallen almost 58% from the highs in the last 1 year, now up 60% from the lows, but is there enough momentum even from these current levels, or will we see some respite from here?
No, yes.
Cohance Live, Lakshmikant.
So, for this base, the levels of 450 to 440 kind of range, and from there we have seen the formation of bullish candle. Further breakout is expected of the levels of 500. Once it started trading of this level of 500, then we will see more bullish momentum in this stock toward the levels of 630 to 640 range.
Right. Got it. Well, thanks so much for that, Lakshmikant, giving us your view across a bunch of stocks. But Hiral, back to you for what's trending on Google right now.
You know, the trends are always very interesting because yesterday we did see a Idea Forge which was trending today. Sorry, you have Idea Forge which continues with gains of 2%. CAMS was there on the list yesterday as well. Vodafone Idea, PNB on the back of earnings, and HFCL. In fact, Lakshmikant, let me come to you when it comes to two names. One is Idea Forge and a Vodafone Idea. Both of them seeing some good momentum in trade today. Would you still be a buyer at current levels? Okay, I think we have an audio issue with Lakshmikant, but you know, trends are really strong here where volumes have also been picking up. But thank you, Lakshmikant, so much for joining in. It's always a pleasure to speak to you as well. But moving on, Raymond has reported its Q4 numbers. Let's quickly look at the profits down around almost 99% at 1.1 crores versus 133 crores, though the stock is at the day's highest levels, and the loss is because of a one-time loss of around the profit number is lower. There is a one-time loss of 20 odd crores. Revenues have grown 8%. Margins have also improved substantially, 5% versus a 9.8%, and there has been a tax credit of around 7.8 crores this time around. So it's a decent growth, mainly driven by auto components. Let's get in Gautam Maini, CEO at Raymond, to talk to us about the quarter. Gautam, welcome to the show. Always a pleasure to speak to you. Yes, you know, the profits have dwindled this time around. Would you say this could be a one-off? And how are you looking at an entry in terms of FY27 with how Q4 has panned out and with what's happening globally?
So just to tell you, it's the consolidated performance doesn't actually give you a true and holistic representation. So what I'd like to do is to focus a little bit on the two segments which are actually contributing to a more significant growth. So if you look at these segments, it's basically the aerospace and the automotive. Aerospace has grown, 26% year on year on the revenue side and 25% on the EBITDA side. And the precision technology and auto has grown, low double digits on the revenue and over 34% in the EBITDA side with a one-time, profit of 13 crores. So both have actually done, in spite of tariffs, in spite of the wars and everything else, I would say both the segments operationally have performed very well and as per what our expectations have been. So in that sense, I would say that it's turned out to be a good year. And we expect the same momentum to carry on in the next year. If you look at the aerospace story a little bit in particular, the there's a global backlog of 17,000 commercial aircraft, which represents over a decade of revenue visibility. So honestly, it's not anymore a position of your market position or market order. It's more about execution. It's about how you can do this in a high mix, low volume segment, how you can make use of scalability and experience to take the business to another level. And I think that is the critical thing, because many of these businesses have huge walls, and you need 2 years, 3 years sometimes to get approval from these OEMs. And we have over 25 global customers now, and that helps us to scale the business.
That's an interesting point that you make, Gautam. So my question then is, I mean, the focus categorically is the engineering business now, right? And you're looking at sunrise sectors like aerospace and EV components that will drive growth. So what is the estimation that you have in terms of the engineering revenues over the next 2 to 3 years? In addition to that, where do you see margins and operational performance settle in or normalize from here?
So basically, if you look at the details, the growth will continue to be in a similar fashion. We will continue to grow both the precision and automotive sector as well as the aerospace sector. In the precision and automotive sector, particularly, we did a lot of work on the hybrid sector in the global market, and we made some very good inroads there. And that market has been growing. So we played on the right spaces in the right markets. Both revenue and EBITDA, revenue in the automotive and precision will be in the lower teens. In the aerospace will be around the 25% mark in terms of growth. EBITDAs, because of operational performances getting better, favorable product mixes that have happened last year, and that will continue this year, will also help us to keep our EBITDA margins pretty much like how they have been last year without the exceptions. So all looks good to keep the same momentum.
Well, Mr. Maini, good afternoon. Thanks so much for joining in. It's Puneet this side. Just what you mentioned on commercial airlines and how big of aerospace could be a division. We're also seeing multiple larger players also enter within India. What's your right to win strategy in that sense? Is it largely just the execution that will drive the gains in terms of order book wins also? Or is it that because the opportunity is so big that the early movers get the advantage?
So the opportunity is very big. We've been in this business for 22 years. We've had the early advantage. We also started, if you remember, with the engine segment, which is now a lot of people are paying attention to, which is the more difficult segment, because in the engine segment, you have more complexity. You have very difficult materials like Inconel and titanium, which are not easy to machine. So we took the difficult path, and that's paying off now because we've been able to then get on the best global OEMs from both Europe and US as part of our customer list. And that's helping us to go up the value chain quicker. It takes a long time, and hence you have to be patient to grow. But we've now reached a stage where you may have heard of our Andhra story, where we're going to do the next phase of growth. So all of that is planned on the basis of the last 22 years of experience. And now we will unleash the future based on that relationships that we've built and the strategies that we have to go up the value chain.
So just a perspective on your order book, because 2,350 crores, while quite strong, what is the execution timeline for the same? Is it that it can go down, or these orders will be executed in the next 3 to 4 years? And what's the order book number that you are targeting? That is it essentially doubling in the next 5 years? Is that something that could be on the cards?
So the order book will keep increasing. What happens is you typically have 5-year or 10-year contracts, So depending on when the contracts are expiring, you will be renewing them. But I think what is more important is the growth in those order books, and that growth happens on literally a monthly, quarterly basis. And this is only the current situation. With the growth that we are targeting, this is expected to continuously increase at a larger pace. As we get more complex products and longer term agreements, the order book will then see significant rise as well, depending on whether it's a 5-year, 7-year, or a 10-year order that you particularly do in a certain contract. So I would say this will only grow. The pace will be determined by the combination of products that you will get over engines, structures, systems, landing gears, hydraulics, fuel. We're in all of these different areas because we're basically high precision machining. So we go across the entire platform of the aircraft.
Okay. Gautam, we were having this interesting conversation with regards to what's happening with EV and what's happening with hybrid in the newsroom a couple of days ago. And I do remember you mentioning that hybrid market is stronger right now versus the pure EV market. If you have to look at that aspect, how is FY27 actually shaping up in terms of an order book balance between the two? And what's that trend that you are seeing between hybrid as well as EV?
So I'll separate the marketplaces. What I referred to last time was the export market purely and not the Indian market, because the Indian would have a different story. The export market, especially in Europe, is pretty much hybrid driven now, and the EVs have taken a hit relatively. They're not gone, they've taken a hit. So our bet on the hybrid market has been very good. We look at the hybrid market itself growing between 10 and 15% this year for us, which is quite a significant growth in that particular segment. So we are pretty bullish about the hybrid market, and we are also looking now to take this to other customers that we have. So hopefully that will continuously grow, not only in Europe, but also in the US.
Follow up, are you seeing a similar trend develop in India as well?
I would say in India, the pure EV market is pretty strong. India is a very price conscious market, and hybrid gives you a great solution for longer distances. In Europe and the US, you need to travel much more. Whereas, in the Indian cities, your EV has enough battery capacity to get you through. So I would say the trend is not the same in India. I would see that the EVs would be more popular than pure hybrids in India, but it's the other way around in the European and the US markets, as per me.
All right, Gautam. Thank you so much for speaking to us at NDTV Profit. Always a pleasure to get insights. So that's the management of Raymond Limited citing what's in store in terms of FY27 and the trends that he's picking up so far. But moving on, the cabinet has cleared ECLGS 5.0 targeting a 2.55 lakh crore in fresh credit flows. Now, this would be a potential game changer for small and mid-sized businesses. But how are the lenders actually viewing the rollout, and who gets impacted by the scheme? Let's get in Piyush for more details. Piyush, over to you.
Yeah, that's absolutely right. This is a very big positive for the MSMEs, and bankers have become more favorable in terms of lending to small and mid-sized companies, especially those who have an export-focused business. We do understand in the last set of ECLGS scheme, when it was rolled out in COVID, the delinquencies were not much high, and not each MSME actually opt to get this dispensation as well. So we are talking to bankers, especially the public sector banks are looking at growing their MSME book quite sharply, because they're actually aiming to grow their RAM, which is retail, agri and MSME loans, because it helps them in terms of yield as well. So both from a business perspective and a growth perspective, bankers are looking very positively to this. MSMEs who are in the segments of engineering goods, textiles, apparel, gems and jewelry, chemical, pharma, etc., they are expected to be getting a fresh loans now from banks, and there is one clarity that some bankers are seeking, whether this dispensation will also be allowed for working for term loan, because the current speech and the current statement which has been put out mentions only about working capital loans. So that is one clarity bankers are seeking. Back to you.
Thank you so much for that. In fact, let me get in Tapan Doshi as well. Tapan, welcome to the show. Always a pleasure to speak to you. Piyush actually got down details in terms of how the scheme would actually benefit a lot of sectors. I mean, aviation is one of them. You're seeing those kind of gains coming in for Indigo. According to you, what could be stocks that investors could look at on the back of the benefits that are flowing in?
This is good for banks. If you see a government guarantee, somehow a cushion will always help the bank, and it encourage MSME loan sanctions. Okay, again, lower credit cost pressure will be there. Again, better loan growth will be there from here. So if you ask me which are the banks, then I think MSME heavy lenders like SBI, Bank of Baroda, PNB in the large banks will be benefited. Small business banks like AU Small Finance Bank, Ujjivan Finance, then Equitas Small Finance, and they are the banks now which will be benefit, because government is coming in between also a little bit, helping through lending, guaranteed lending and all that. MSME, NBFC, even because of low credit risk, like Cholamangalam, even Shriram Finance will be beneficial. So aviation, as you rightly said, both SpiceJet and Interglobe Aviation will benefited out of this. So yes, it's a good package which will benefit both the MSME and the banking and lending businesses.
Got that view, Tapan, and welcome to the show. But Bajaj Auto continues to be a stock that's in focus today. Results come out today, but more importantly will also be the buyback amount as well as the price that they decide to do. So in terms of the results specifically, is expected to be over a 25% growth. Revenues looking to rise at 15,700 odd crores. EBITDA margins at 20.4% will continue to be the focus. Profit also at 2,615 crores will be a key one to watch in this particular quarter. But more importantly will be the buyback. Now, we've spoken that this is the second buyback for the company in the last 2 years. Last was in 2024, where shares were bought back at 10,000 rupees. Post that, we've seen an up move, but back to those levels yet again. So, could be very interesting the amount that Bajaj Auto decides to buy back the shares at. 4,000 crores was what the amount was in the last buyback, and 2022 shares were bought at 4,600, which was a 2,500 crore buyback. So that would be one of the major ones to watch out for. But also in terms of the other key aspects to watch, Tapan, how are you viewing this counter now? Because we see that KTM also was one of the other growth areas for the company. Outlook for FY27 will be something to watch. What's your opinion?
Well, it will be wait and watch, Puneet, now, because we have to see what will be the buyback price and also, but overall, of course, the last 2 quarters were positive for Bajaj. If you see their export recovery is good from here also. Premium bikes now is scaling high. Chetak EV expansion is very good. The only thing is we have to see now raw material prices if it goes up because of this war scenario and all that. And of course, EV market, a lot of competition there, whether able to contain that margin or not. Now the stock is not so cheap as it was used to earlier, as the stock has already gone up. So it will be wait and watch. I think we have to see the buyback price and the performance of the quarter, then only take a decision.
Got the view, Tapan, but its peer Hero MotoCorp was also in focus today. Results came out yesterday, a very strong set of numbers, over a 29% growth seen in its revenue, but largely conference call today focused on the future. Now the company has mentioned, Harshvardhan Tichle, the MD of the company, has mentioned about a 1,500 crore capex that the company is looking to do in the next year, and this will help in doubling the EV capacity. Listen into what he had to say.
In Deluxe 125 segment, we did have a dip in the very first quarter of last financial year, but thereafter, for 3 quarters, we've been gaining share quarter after quarter. Going forward, our investments in these growth segments will continue. We are investing in capacity expansion, and we have committed over 1,500 crores of capex in FY27, and this capex is going to expand our capacity in scooters, where for some of our models that are doing very well, we are doubling our capacity. In EV, where in fact in a matter of a month, we would double our capacity from where we started last year, and then further down the road in few quarters, there will be further doubling of capacity as we are seeing great momentum for our Vida brand.
Okay, so that's Hero Moto. But moving on, United Breweries and United Spirits, both of these counters are in focus on the back of earnings, both trading under pressure. Now, United Breweries, the overall growth has been disappointing on the back of cost pressures. Volume growth is better than expected and margins have contracted as well. They're expected to see 400 to 500 crore cost impact in the next 2 to 3 quarters due to the Middle East conflict. Likewise, if you see United Spirits as well, FY26 sales growth is up around 7.7%. The net sales value growth is 3.7%, and FY26 is around 7.7%. Prestige and above category growth is at around 5%, so that is what has led to this growth. And you have a popular segment which is degrown 13%. Both the stocks trading under pressure. Tapan, your views when it comes to United Spirits and United Breweries?
Both the stock is facing the input cost pressure. If you see, even the state regulation is actually quite unpredictable. That is why also you can see the volume hit also. Summer demand, we have to see how will be the impact. But from here, I think hopefully they are able to sell more premium brands, then the margin may improve. But from here, I think still both the companies will see a little bit pressure both on volume front and the margin front. So I wait and watch. Currently, I don't see any buy at both the levels.
That's with regards to where both of these companies go. But thank you, Tapan, so much for joining in. Always a pleasure to speak to you as well. And the other two stocks that we were going to talk about today is L&T as well, where you have brokerages which are not really happy with the way the commentary has been for FY27. So that stock is the top losing stock on Nifty 50. And you have Coforge, an interesting one coming in there because their executional order book is seeming very strong. And their Q1 FY27 revenue is going to be flat. QOQ is what you're watching out for. The stock up 8.5% as we speak. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Continues on the last street as Nifty trades near 24,000 mark. Broader markets overperform as well, and major sectors trade in the green, barring FMCG and energy. Coforge, meanwhile, delivers a standout fourth quarter profit, sharply beats street expectations on strong execution and margin expansion. Brokerages turn more constructive, citing improved growth visibility, better margins, and a healthy deal pipeline heading into the new fiscal. L&T, meanwhile, is in focus after missing revenue and EBITDA estimates, with margins slightly below expectations as well. Profit growth stayed modest, but management struck a confident note and guided for steady growth through FY31 despite near-term pressures. Meanwhile, the cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore of guaranteed credit to ease liquidity stress for MSMEs as well as mid-sized firms with zero guarantee fees and quick access. This stands to benefit export-oriented MSMEs, restaurants, and other businesses navigating global disruptions.
Oil, meanwhile, extends decline as hopes of a US-Iran deal lift sentiment, pushing Brent toward $108 a barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about whether you talk about sectors or the Nifty 50 as well as the Sensex, you're looking at a little bit of a weak picture right now. So Nifty just a little bit, close to its day's lows as well, and Sensex also about 180 odd points cut coming in. On the Sensex, you do have the sectoral picture that is also tilted in the favor of green, at least at this point in time. So there's actually energy, oil and gas, FMCG that are on the back foot in terms of the sectors. And other than that, when you talk about pharma, realty, auto, and financial services as well as rural and metals, those are some of the sectors that are shining quite bright right now. When you talk about some of the list of losers as well, there's a bunch of counters that make it to that list from within the broader universe as well and from within the Nifty 50. Now, when you talk about something like a KPIT Tech, Excite, Schneider, Aether Energy, those are some of the counters that are down from the broader universe. And when you talk about Nifty 50, L&T, of course, on the back of its earnings, 3.4% knock. Benchmark Reliance as well, also trading with a cut of about 2%. And on the flip side, you do have a bunch of counters like Dr. Reddy's, Trent, Interglobe Aviations, as well as Cipla and SBI Life in good shape right now. But that said, let's also quickly take a look at the world of commodities in terms of what that is also doing right now. Now, you do have gold as well as oil that are in focus, and let's also get you some important insights. In fact, Vandana Bharti, AVP Commodity Research, SMC Global Securities, is joining us on the show right now. Vandana, first things first, I wanted to try and understand what you think about the decline that we've seen of late when it comes to oil prices. Now, prices are still elevated, so there's actually a couple of kind of triggers that you're looking at, isn't it?
Yeah, this is because of the pause on Project Freedom, and they won't squat shifts. So this is a relief for the market, and because of that, we have seen a decline in the prices. But it is too early to say that okay, they are reaching to the peace deal and all, and the prices will move down. Soon it will see support near the level of $95 because it is completely decoupled with the spot market. They are paying $150, $135 for crude oil, and in WTI it is only $100, and Brent is showing $115, $110. So this derivative market has been decoupled with the spot market for the time being, and it is the main problem of this market. So yes, very limited downside in oil is right now expected from my side, and it is $95. From there we can see an upside in the prices, because any time we see de-escalation or escalation issues or statement coming out from Iran and US.
No, absolutely, and that decoupling has been quite interesting to also witness, Vandana, just like you rightly pointed out in terms of the spot and futures prices. But when you just talk about the fundamentals and put the contract aside for a bit, just talk about fundamentals for crude as well, you're looking at thousands of tankers, vessels that are still remaining trapped in the Hormuz. So do you think that the entire upside for oil prices still very much remains? And do you think that the baseline has also shifted for oil prices? Because some of the infrastructure worries, they're not going to go away, and they're not going to be fixed for at least a few months to years.
Agree with you, because if we consider the data, because it should be based on the fact check and data based, and day before yesterday only one ship crossed the Hormuz, and the normal data is 130, 126. So this is the intensity of how much serious is this problem, and they are considering the longer route. Ultimately it is increasing the freight charges, insurance charges, and despite that only 30% of crude is reaching out to the destination. And this is going to completely uplift the base case of crude oil, earlier it was $65, $60. Now it is $85 to $90 for 2026 if the problem persists here. And then we can see the higher side of, in fact, $115, $120, because this is the price level which market is indicating. And there is a worse condition in physical market. And if we consider the Indian import crude basket, it is telling the whole different story.
In a very different story, and we'll not get into that because we briefly touched upon that as well. But when you talk about gold prices, a little bit of a rebound that you've seen, Vandana, largely, do you think it's just the weaker dollar, or do you think that it's the entire safe haven demand picture that is shifting right now for gold? What are the current factors that you're looking at when it comes to this little bit of upside that is yet again emerged for gold prices?
Yeah, this is because of whenever we see a kind of de-escalation news, gold prices, it generally jump this time. So because of the crude oil prices and downside in dollar index, it is moving up. And second thing is that we have the bad data. They are they have started to come in the market, and we have seen a very weaker data from few of economies. Chinese real estate market, it is not doing good, and Bank of Australia, it has increased the interest rate. So the we can say that the circle of we can say that interest rate rise, it has already started, and it is giving a pressure to the equity market as well. So it is not always like the higher interest rate is giving a pressure to the gold prices. Because of the weaker data, gold is again up because of the safe haven buying, and dollar index is down. So because of that, we have seen a safe haven buying return to this counter, and we are getting continuously like bad news from political front, economic front and all. But yes, this time gold has limited upside near the level of 47 up to the level of $47.15 to $47.50, and there we can see a halt in the prices, because ultimately this crisis is creating cash crunch.
No, absolutely, and that cash crunch could be, very visible when it comes to certain pockets of the market, and that's also something that you're looking at in terms of the reflection of trading behavior as well at this point. But when you talk about the medium term, or any sort of timeline that you have in mind when it comes to gold prices, where you do see gold staging a decisive upside?
It may take the month of May to July, because if we consider the last war of Ukraine and Russia, earlier we have seen a rise in the prices of gold, and we have seen the consolidation of 4 or 5 months, and it is happening right now in gold prices. After that, we have seen a bull run from $2,000 to $5,600 kind of level. So longer the consolidation, higher side breakout is expected, and higher upside will be expected in the market. So $4,600, $4,500 is becoming a new support level for gold prices. From there, the prices should take an upside, and this time we are expecting first of all, we are expecting 5,200 kind of level till the end of 2026, 5,200 to 5,400 kind of level. But yes, this structural bull run in gold will continue in 2027 as well, because as soon as the war will end, de-dollarization will happen in faster pace actually, and because of that we have seen a quick rally in gold prices.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at it. Thank you so much, Vandana, for taking time out and joining us. So there you go. That's a sort of double update also coming in. Not just a price level, but also a month to really watch out for. May to July, expect a little bit of a range-bound move when it comes to gold prices. After that, you can expect a little bit of a pickup, at least when it comes to gold. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about some of these counters that are in focus right now. So something like L&T in fact stands out, and you do have brokerages also that have come out with a little bit of a bearish call, especially Nomura, and they've also downgraded it to a neutral rating. They've cut the target price as well. Now the stock, of course, is under pressure right now, and you do have about a 3.5% downtick coming in on this particular counter. Now, in terms of brokerage verdict, they're talking about, Nomura specifically is talking about how there's a muted performance when it comes to the fourth quarter, and a little bit of underwhelming guidance also that makes it to their radar. Other than that, they've also cut the FY27, FY28 financial year earnings estimates by up to 8%. Now, they're also less optimistic when it comes to the order inflow momentum, and that's also crucial to take a look at. In terms of valuation, they're talking about how there is less valuation comfort given some of the near-term uncertainties and limited visibility. But with that in mind, let's also move on and get you the word coming in from sources. In fact, sources are telling your channel that Zee has sought an expanded undertaking from Nykaa in the ongoing copyright infringement case. Nimit Dixit is joining in with all of those important details. Nimit.
Yes, absolutely. So in an ongoing dispute that's been going on since April between Zee and Nykaa, where Zee has sued Nykaa for copyright infringement, saying that in its Instagram reels, which we all watch in the ads, whether it's through influencers or its own channel, it's been using music for Zee. Now, Instagram rules say that for personal accounts, that's fine. You're allowed to add a song to your reel. But when it's a business account, then it becomes a commercial use, and that is not allowed. So that copyright violation stands. On the basis of that, they identified 12 different reels, and while now Nykaa has taken down those 12 reels and removed those songs, but Zee is still unsatisfied with that. What Zee says is that it apprehends that Nykaa in the future will again use this, so it's not happy with this undertaking. It's asking Nykaa and asking court to direct Nykaa to give a larger undertaking whereby it is disallowed from using its songs in the future as well, and it's also pressing for damages to the amount of 2 crores, which is not a lot given the context of the brand reputation here at stake, because this is a larger industry issue that's been in focus for a while, where the use of songs and the copyright associated with them, especially on Instagram and other social media platforms, is in focus. So what we're going to look at on May 26th, when the matter is going to come up again, is whether this larger undertaking will be granted by the court, protecting the copyright and the music of Zee.
No, absolutely, and thank you so much, Nimit, for joining us with all of those important highlights. But let's also talk about some of these FMCG companies that are also in focus right now. So they're in focus on the back of solid quarterly results, mind you. Many are seeing sales growth that is at a multi-year high. In fact, Mahima is standing by in terms of that explanation for what's working and what's really in store for FMCG, Mahima.
Right, so Shreyansi, overall Q4 has been a very good quarter for FMCG companies. A lot of these companies, in the broad end of spectrum have seen multi-quarter highs growth when it comes to revenue as well as volumes. And, largely if we take a look at the growth, it's largely driven by volumes. Now, if you take a look at the reason as to why these, this kind of growth has come in largely on account of GST cuts that we've seen, plus on account of freebies that the government has been giving to the public out there, and volume-led growth has remained the focus, the centric focus of this earnings, and has remained the past 2 quarters and will remain the focus for going forward as well. Now, if you take a look at the sales growth, the volume growth, and the portfolio exposure of GST, the table shows you as to how that exposure has been. Like for something like Bajaj Consumer, the GST portfolio exposure was as high as 95%, and that's why we've seen good numbers translating because of that GST push. Now, HUL has seen a sales and volume growth at a 12-quarter high. Nestle has seen a multi-quarter high in terms of both sales and volume growth. For Varun Beverages, it was a 4-quarter high sales growth, and for Bajaj Consumer, it was a 20-quarter high revenue growth. Now, in terms of common commentary that we are seeing from the management coming in, all of them have gone ahead and said in the Q1 they are going to see price hikes on account of cost and inflationary pressure because of this West Asia conflict. Headwinds due to West Asia conflict might impact the first half of Q1 as well in terms of the overall pressure in terms of how things fare in terms of margins as well, and companies are prioritizing volume growth over everything. So right now the focus remains on volume going forward as well. Valuations cheaper as compared to where they stand at 5-year average, but still not cheap as compared to where the numbers stand. But overall, ITC being the cheapest amongst the all at 18 times 1 year forward, followed by something like an Imami at 20 times. Now, in terms of return potential, as per what Bloomberg consensus estimates are suggesting, Imami has the highest one at 45%, Varun Beverages and Radico Khaitan at 27%, and GCPL and Dabur at 24%. So this is the overall view of what's happened in Q4 and what should one look at going forward in FY27.
Well, absolutely, and thank you so much, Mahima, for joining us with all of that detailed analysis as well. So there you go. Those are some of the FMCG counters that you should also be watching out for. But let's also shift focus and talk to you about what's on your plate. Rice exports feel the heat. Sources, in fact, are telling NDTV Profit that exporters are seeking urgent shipping relief from the government as basmati export prices surge to close to $1,300 a ton. What's really driving this spike, and what is the industry asking for right now? Let's go back to Nimit. Nimit, it's quite the busy day for you. Rice is on the boil. Tell us why.
Yes, absolutely. So rice exporters tell us exclusively that what they're facing right now is a shipping crisis, not a commodity or demand crisis. They have the goods, they have the rice. India's always been a big exporter. The government has taken some measures, but because of the huge rise in freight, which they say moves from $550 to about $3,000, a 6 times increase. Because of that, rice costs have gone up by about $200 a ton to about $1,300 in some cases. Earlier, it was about $1,100 pre the conflict. When the conflict started, it moved to about $1,200, and now in some cases it's at $1,300, which is a huge increase. Now, what they ask for is not a case-by-case solution as the DG Shipping has been doing. The DG Shipping, they say, has been doing a great job in addressing the concerns, but because these shipping lines are so large, they sometimes take advantage of especially the medium and the small rice exporters, if not the large ones. But what they say essentially is they want a faster rollout of the Merchant Shipping Act 2025, which came into effect last year, but has not been rolled out yet. They also say that this Merchant Shipping Act provides for clear, transparent shipping and pricing guidelines. Now, with this price going up, they also say that freight accounts for 15% of the total basmati export pricing. They're not able to totally pass on this price to all the countries and all their customers in the Middle East, specifically because countries such as the UAE and Qatar limit the price, and they can't pass that cost on, so they're having to absorb that cost. So they ask for quick action and immediate action, as well as a long-term action in terms of policy changes, creating transparent pricing and shipping guidelines, so they have a more arm's length and transparent, predictable relationship with the shippers.
No, absolutely, and thank you so much, Nimit, for getting us that highlight as well. So there you go. That's a key look at the rice prices as well that are quite on the boil right now. But let's move on from rice to tea as well, because you're watching Lunchtime Trades. Let's get you an exclusive chat that my colleague Sharad had with the Lakshmi Group's management. Now, this is a company which is highly focused in West Bengal as well, and you do have the winds of change as well blowing in the state. Let's also go across and listen in to the management's view also coming in when it comes to the entire tea industry as a whole.
yes, we are joined in by Rudra Chatterjee, MD at Lakshmi Group. Good afternoon, Rudra. It's always a pleasure to talk with you. But explain us what we are doing in this room. Of course, a little bit of tea industry buzz is there, but what's it all about?
So we are tasting teas from tea estates in Darjeeling and Assam. There's Adabari here, which is in Assam. We are coming towards the second flush, so this is a very important time to taste teas and understand how the standards are. Lakshmi has been growing tea from 1912. Business started by my grandfather, and today we grow teas in Darjeeling, Assam, Tripura, and also in Rwanda in Africa.
Wow, that's pretty interesting. But speaking of Bengal, there is a big change happening here. The sentiment is quite upbeat. But what are the projections looking like? I'm sure some numbers have been worked out, next 5 years. What is it for Bengal?
So West Bengal is a $250 billion economy. The goal should be to take this to a $500 billion economy in 5 years, which is doubling its nominal growth rate from around 7 to 8% to around 15%. Now, how does that happen? West Bengal has some key areas which could be unlocked. Let's take apparel and home textiles manufacturing. Our sister company is OBT, the largest carpet manufacturer and home textiles manufacturer in India. But whether it's home textiles or apparel, West Bengal has a long history of textiles. So can we create an textiles export business of $50 billion, which is what Bangladesh does? Can we have a plug-and-play system where international brands can come, have SEZ benefits, get best cost inputs? That will be a hugely employment generating, and the skills are there among the Bengali people to be able to do that.
Apart from the skills portion, let's just talk about the sectors, Rudra. Which sectors you think should fire from Bengal?
So, apparel is one, which is a $50 billion opportunity. Food processing, which includes fish, fruits, rice. Look at Thailand, which does similar geography, does around $20 billion of food processing exports. So creating hubs around South 24 Parganas in the potato belt. How can we export food? This is another opportunity which I think is huge. I think having data centers in West Bengal, getting a submarine cable from Singapore, which we don't have today. It is there in Mumbai, there's in Chennai, reduces the data cost.
So it's like a landing station basically.
Landing stations, and improves the data quality, and you can have West Bengal as a data center for the eastern region. Similarly, there are areas like furniture, which is something OBT also does. North Bengal has immense potential in furniture, creating a hub model where you create a furniture, and obviously we would require infrastructure in ports, we would require infrastructure in Kolkata to have the design team. But all of these are large opportunities, which can add up to a significant area. The growth so far has been service-oriented, construction-oriented. We need to get into manufacturing-oriented and export-oriented. And that is what OBT does. In tea, for example, what you're seeing here is, tasting tea. But we package tea, we bottle tea with Coca-Cola, Makai tea is sold as honest tea. We do tea extraction. All of those are large tea processing opportunities, which China has been very successful. China does almost 3 times the amount of tea that India does, and most of it is consumed as processed and domestic.
Right, right. And Rudra, apart from this opportunity, since you are a big pioneer in the tea industry yourself, just wanted to understand how this tea industry is functioning in Bengal right now. Is there a revival attempt coming in? Because we have seen a lot of times, at times the tea gardens get sold off, there are some distressed assets, that's what we hear. But what's the ground reality here?
So, Darjeeling tea is the best in the world. There is no question about it. We have to not only sell Darjeeling tea as auction and let the rest of the world brand it. We have to sit in Kolkata and brand Darjeeling tea. In a small way, Makai has been doing that, but it has to be a much larger effort across the industry. Secondly, Darjeeling is also one of the prettiest places in the world. Creating tourism. There's a Taj in Makai, there's going to be an Oberoi in Makai. Creating tea tourism at all levels. High and, economy levels. Creating health, education. Darjeeling was not only tea area, it was also a sanatorium. so for healthcare. So we have to reimagine this industry. So Makai Battery was started in 1859. Today we are in 2026. It is not going to remain exactly the same. We have to reimagine the tea industry for the 21st century. We are doing some of it, and it will be private sector led, but it requires the infrastructure in and around Darjeeling. We need bottling capacities, we need SEZ facilities where we can export packaged tea to ensure that West Bengal becomes the hub again of the tea industry around the world.
Alright, and there you go. So that's a word coming in when it comes to the tea industry as a whole. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew.
Good afternoon. You're watching Small Cap Buzzers on.
Hello and welcome to NDTV Profit. Well, you're watching Small Cap Buzzers, wherein I am your host Varsha, and with me is Somit Sarkar. Talking about what we're going to take on the show, we're going to talk about Knowledge Marine. Well, Somit, what you can say about this company, interesting company,
Well, yes, Knowledge Marine is one counter which looks quite interesting, and we'll be speaking with the management today on the show. And the discussion is largely on their expansion into the shipbuilding unit that they have announced recently. And if you look at the stock, that is also up nearly 31% in the last 1 month. We'll be also speaking about Raymond Realty. That stock has been gaining in trade on the back of strong numbers, which is largely on the back of better collections that the company has seen in the fourth quarter of FY26. Even if you look at the pre-sales growth, that was largely led by robust demand across ongoing and the newly launched projects of the company. When it comes to India Pesticides, that stock has gained nearly 12% on an intraday basis. That is its biggest move that we have seen in nearly a year. And if you look at the volumes, they are nearly 24 times its 20-day average. So strong volumes leading to strong gains for India Pesticides. And lastly, when it comes to SPML Infra, that stock has been buzzing in trade on the back of a landmark deal that the company has announced of close to around 1,128 crore to develop 1 gigawatt of BESS project, that is BESS project, and the project will be executed over the next 18 months, and that is the reason why the stock has been gaining in trade. Now, if you look at the markets, the Nifty, it's not quite a great day, though the Nifty is looking positive, around 40 points up in trade, but from the day's highest point, we have declined by around 100 odd points, and the Nifty is just managing to stay above the 24,000 level, and this is, I believe, the 6th or the 7th consecutive session where we are seeing Nifty consolidating around the 24,000 level. On the sectoral side is the Nifty Energy and the FMCG index, which are in red, while on the positive side, we are seeing Nifty Pharma gaining around 3% in trade. But when it comes to the mid and small cap space, both the sectoral indices have been gaining in trade and outperforming the benchmark. Mid cap and small cap, both the indices are up around 1.3% in trade. But Varsha, which are those small cap counters that have been buzzing today?
Well, a lot of stocks are actually buzzing, of course, on the back of news flows, earnings, and then you have volumes also. You have Gandhar Oil, where the stock is buzzing on the back of strong volumes. Volumes are trading at 33 times of its 20-day average. You have Finiotex Chemical as well, buzzing in trade today. There you go. The Gandhar is up almost 17%, but Finiotex is up almost 14% in trade. You have Sunflag Iron also buzzing on the back of volumes. Volumes are 5 times of 30-day average. Shanti Gold is also in focus. Omax Auto, let's pull up that chart also, because in the last 5 days, the stock is up 54%. And today as well, the stock is up almost, in the range of 5 to 7%, if I'm not wrong. But a huge, uptick over here. On the loser side, though, you have Sakar Health, you have, BGR Energy and PTC India Financials. Well, PTC India is under pressure on the back of Q4 FY26 numbers. So these are basically all the stocks which are in focus when it comes to small cap. But one stock, which is in focus, this Knowledge Marine, wherein Knowledge Marine and Engineering Works, wherein they have expanded through acquisition of waterfront land for shipyard, and this acquisition marks pivotal step into shipbuilding enterprise. But to speak more about this, what is the opportunity here and what growth lies ahead for the next 2 to 3 years, we are here joined by Sujay Keval Ramani, who's the CEO of Knowledge Marine and Engineering Works, and Saurabh Daswani, who's the Managing Director at the company. Hello, gentlemen. Welcome at NDTV Profit. The strategic expansion into the shipbuilding enterprise, I believe you already have orders in hand when it comes to shipbuilding, but if you could give us more details on the acquisition of waterfront, and how is the order book looking like?
So thank you for having us today and giving us this opportunity. Presently, the order book in hand for Knowledge Marine, the parent company, is at 1,400 crores. And the Knowledge Shipyard company has an order book of 180 crores, totaling the group's order book at 1,580 crores. The future pipeline for the parent company is at 2,500 crores, and Knowledge Shipyard is at 300 crores, with the possibility of a total group pipeline of 2,800 crores. The reason we invested in the shipyard is we have been doing shipbuilding for the parent company, which is an operating company. And now we believe that cost center can be transferred into a profit center with the experience that we gained over the last 11 years. And deploying the same manpower, which has gained the experience to build for the public and the government.
Right. Okay. Can you just take us to the financials? How much this acquisition has costed you? By when do you expect it to break even? And when will it be EPS accretive?
Yeah, so the project is the total investment. What we are looking is in 3 phases, and it is going to be a total of 300 crores. Wherein the phase one, wherein we are investing close to 60 to 80 odd crores, is going to complete by September to October this year. The second phase is going to get completed by May, June next year, and the whole facility will be ready by next year, December, and it will be kicking in by that time. However, the current order book, what we already have, should be able to cater with the phase one, which is going to complete by September, October, as I said.
Okay, and post this new acquisition that has been completed, their setup is completed. How do you see the order win trajectory to go forward for Knowledge Marine, say for FY28 as well?
So, with the shipyard being in the 4th year, the revenue coming in from the shipyard is expected at 1,000 to 1,200 crores when the shipyard is able to deliver between 16 to 18 vessels per year. And with that, in addition to the parent company's top line, we project somewhere around 2,000 crores 4 years down the line.
Right, and Mr. Kewal Ramani, shipbuilding globally, correct me please if I'm wrong, is known for cost overruns and delays. How are you structurally insulating yourself from these kind of risks?
So what I would like to state is we are presently only concentrating on smaller vessels with a length of up to 100 meters and a draft of sub 5 meters. We have developed the expertise in building these vessels in the last 11 years, and the shipyard design is being made in such a way that the assembly line takes away the reasons for cost overruns. And we have learned from the best. And I would like Saurabh to tell you about the team that is coming in to help us with the experience that they've had in the past from the yards around the globe.
Right.
Onboarded Mr. S. Krishna Kumar, who is a naval architect and has been leading many shipyards around Dubai, Singapore, Oman for almost 4 decades. And with him, he's also bringing in a team of more than 3 or 4 people who also have an experience of about 2.5 decades working into these shipyards around the globe in Dubai, Singapore, Oman, who have been into this industry for a long time. So with the new entrants and what we already have, we believe we can have a good team who can actually look after these challenges.
Right. Also, as you are scaling into shipbuilding, how will margins look like? What is the margin profile over there? Because currently, in December 2025, you saw around 43% when it comes to EBITDA margin. But how will margin shape up when the shipbuilding will have a meaningful contribution to your business?
So we, with the past record, have been able to maintain the EBITDA margins between 30 to 40%. Going forward, we think the margins will stay intact because of the way we bid and execute our works. We do not see any reduction or any kind of effect on the margins going forward with the new business as well.
Right. I believe you are also looking for international expansion, but given the recent geopolitical issues, is that plan still on cards? Any developments on that front?
So we are doing technological tie-ups and technology transfer into India and trying to make in India for the vessels that we are planning to build abroad first. And now we are focusing on that. That helps us control the cost and still maintain the market share going forward.
You also mentioned active participation in green truck tenders. Have you secured any new orders since Q3?
So we have already secured 2 orders, but in Q3, the bids are still under evaluation, certain bids, and the results should be out within the next 30 days.
Right. And your Q3 was very strong and fantastic set of numbers. But going ahead, maybe, in FY27, what kind of revenue growth are you penciling in? Because in the last 3 years, your CAGR has been around 50%. What is that growth to be expected in FY27 and at what margins? I mean, you said that you will be maintaining at 30 to 40%, but that's quite a broad range. If you could give us the ballpark numbers.
So Q3 was a great quarter for the company. Going forward, we will try to maintain such margins. The upcoming year is also a good year for the company with the orders that we have secured and the orders that are in the pipeline. We have been continuously delivering growth, and we promise along the same lines going forward as well.
And lastly, just one question, given the recent geopolitical issue, given the fact that we have seen an increase in commodity cost, there have been increases in freight cost as well. Any impact of the same on your business in the fourth quarter or in the first quarter of FY27 that you expect?
So we have developed some resilience in the company in the last 10, 11 years, even going through COVID or the present war situation. We have been able to shift our business basis that in terms of procurement, and we are sourcing majorly now from India. And I don't think it will impact the company in terms of deliverables going forward.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Knowledge Marine. Let's welcome in our fundamental guest now, Girish Sodani, co-founder of Ensure Capital. Girish, you heard the management quite a strong, optimistic outlook that they have for FY27 and post the new acquisition that they have done that becomes operational as well. They're quite confident on growth and maintaining margins going forward. How are you looking at this counter the current valuations?
So, actually, we have to think about it first, the sector. The marine sector is a little bit a lengthy process. We can say that the vision is at least for the next 3 to 5 years down the lines. So, come to the sector positions, obviously, any stocks, it will be Cambrew or any other stocks, we have to just think about for the next 2 to 3 years. Come to the expansions mode now, the company have already done a very fantastic expansions to the Vandaman ports. Basically, this completely approaches the highest propositions if we talk about the ancillaries, repairs, as well as the vessel constructions. So the companies are getting a very strong advantage from this particular. And approximately, this is a very strong access positions also, like a 188 meter, completely a waterfront. It's completely based on the 6 meters as well as the strong proposition for the vessel as well as the other development product lines. Come to the strategic developments and the company expansion for the financial year 27-28. We are just looking out that the revenue PAT would be some around 60 to 70% down the lines, as we saw that the approximately 1500 crore order books complete in hand by the management. And the single windows, obviously the financial assistance schemes also there by the government of India. So we are just looking out for this particular advantage in the next financial year 27-28.
Right. Well, moving on, time to dive into the F&O market setup and the cues shaping trade today. Let's bring in Puneet for more details.
Well, thank you for that. Definitely a couple of stocks within the Sensex as we are continuing to see pressure on them. L&T is definitely one. But when you move on, look at the individual stock specific action where you're seeing longs being built up. Coforge and SRF do feature on that list. Now, SRF on the back of results, conference call commentary also, has been decent enough, and Varsha, you can deep dive into that. But largely, Coforge also very strong results from the company, has been beaten estimates across brokerages, and some of them actually hiked the target price as well. Shorts being built up on L&T post results as well as on X side, while longs are unwinded on Hitachi Energy and has seen a consistent one-way move from 20,000 all the way up to 33,000. Seeing some pressure today. Tube Investment is the other one which is seeing longs being unwinded in the system. Finally, short covering seen on Force Motors. Yesterday, the company came out with the new versions of the Traveller, and that is expected to drive another set of growth for the company. While Vodafone Idea is another candidate seeing short covering. Kumar Mangalam Bengla, being the non-executive chairman, could be one of those triggers, but continues to be in focus for the third consecutive day post that relief for Asia. So these are some of the key stocks that we are tracking today.
Well, thank you so much, Puneet, for all the details. Well, moving on, India Pesticides, let's pull that stock up. The stock is up almost, there you go, 7%, though it has come off. But, a lot of triggers working for this company. First of all, this company is expected to post its results, that is Q4 results on 23rd May. And this company is into manufacturing of agrochemical technicals, APIs and formulation business. Technicals and APIs, nothing but the raw material, I would say, the main ingredient, the active ingredient for the end product, which is pesticides and herbicides. So the few triggers that is working for this company, one is of course the margin drivers. Margin expansion has been attributed to better operating leverage, and the ongoing cost efficiencies have supported profitability for this company. Well, onto the export seasonality, export volatility is demand timing and geographic driven. Q3 and Q4 demand, if you see, is a Australia heavy business. So there the exports, or rather the business from Australia, is expected to have a good growth in Q4, and customers may order in advance or last minute, creating quarterly swings over there. The Shalvis facility, which is the technical scale up, now technical is nothing but the active ingredient used for the end product. The commercial production has commenced at Shalvis, and the block 1 is operational, block 2 is under construction though. A near-term revenue potential from this unit is expected at 80 to 100 crore in FY27. Medium-term plan, if you see, is to add 2 to 3 blocks annually for next 3 to 4 years, and the long-term aspiration is 1,000 crore revenue from this Shalvis unit. Talking about the CDMO CRAMS, I would say the next leg of growth for this company, well, the active engagements with customers in Japan, USA and Australia are being taken. Japan customer is expected to visit again in March, April, was expected to visit, but we'll talk more when we speak to the management. Management expressed optimism on materialization in Japan, and the samples were approved in USA and Australia, and was companies awaiting commercial next steps. Lastly, for FY27, well, 20% year-on-year growth is expected, and the EBITDA margins is expected to remain in the 18 to 20% of range. Currently, if you see the EBITDA margins for India pesticides, well, in Q3 it was around 17%. For FY27, 18 to 20% is the range that they are expecting. Well, Girish, coming to you on this, what is your perspective when it comes to India pesticides, and of course the overall agrochemical sector, also considering the price sensitivity or the impact of West Asia war as well?
So it's completely talk about the agrochemical now. The sector is completely in a switching to different verticals, just facing the heavy issues from this particular geopolitical tensions we are looking out. But overall, the company's fundamentals are strongly built up. If you talk about for the India Pesticides Limited, it's completely into the recovery stages. If you talk about for the next 2 to 3 years down the lines, we are just expecting the revenue guidance would be 1,000 crores in the financial year 27, and just expecting the targets of around 3,000 crores by financial year 30-31. Come to the profitability, obviously, if we talk about the numbers, the previous numbers, we are looking at the very first inventory for the 23 to 24% CAGR growth. In the financial health, we are looking out. In the term means operational pivots, turnover metrics, as well as the completely demand and supplies. Right now, the project lines was very strongly built up. Right now, so we are just looking out the order book stand would be some around 4,500 crores in the early financial year 2027. So come to the completely a background into the Indian pesticides. We are looking like that if you having a hold of around 2 to 3 years down the lines, obviously the pesticide sector is completely looking out for the very attraction film.
Well, yeah, okay. Well, moving on, Raymond Realty. Let's see what that counter is doing, because that counter is buzzing on the back of, there you go, on the back of Q4 numbers, almost 18%. But, let's bring Mahima to give us details on why Raymond Realty had a very strong quarter.
Right, so Varsha, if you take a look at the numbers, right, revenue saw an uptick of almost 51% at that 1,157 odd crores versus that of 766 odd crores. EBITDA saw an uptick of almost 49%, almost in tandem with the revenue growth at 253 crores versus 170 crores. Margins stood at 21.5 versus that of 22.1%. Slight downtick in margins because of probably raw material inflation largely on account of the West Asia conflict, and net profit saw a growth of around 44%. Now, in terms of the operational metrics, the recorded pre-sales stood at around 1519. In Q4 itself and FY26, the overall number of was 3,023 odd crore. So almost half of the pre-sale has happened in Q4, and that's probably reflecting in the numbers as well. Q4 pre-sales has shot up by 139%, and that's what is probably something that the street is liking. The collections, of course, saw a moderate growth of 4%, which is not, which has not been the case for a lot of real estate companies. The collections have grown much faster for real estate companies this quarter, but that's not the case for Raymond Realty. Now, in terms of launches planned for the year of 26-27, 2 new projects on own land in Thane and 2 new JDA projects in Mumbai are on the way. That's the 4 projects that the company is working on in JDAs. And in terms of outlook for real estate, they are targeting up 20 to 25% growth in booking value. Future expansion will happen through capital light model, aims for 25% of margins and revenue to go to 4,000 to 4,500 crores in the next 3 to 4 years, and focusing on mid-size and premium segment right now. So this is the overall view of what's worked for Raymond Realty and why the stock is buzzing.
Right. Well, thank you so much, Mahima, for all the details. Girish, what's your view on Raymond Realty, considering the huge run-up that we've seen today, almost 18%? What would you advise to investors, number one? And number two, apart from Raymond Realty, any other stocks that, in the realty sector that you like?
So come to the Raymond Realty now. Obviously, it's a little bit of run-ups right now, so not fresh allocations as of advisables. If you're getting a chance of around 500 or 510 or 515, so the view was completely based on for the next 1.5 year. The reason behind it, there's so many shifted out there completely in the revenue shifts as well as the MMR focus. They're completely now the 4 new project lines to be shared, as well as they are just reshuffle their structuring for the direct allocations as well as the 50% JDI joint development activations. With strong land banks. So completely overall the Raymond Realty looks very fundamentals. But if we come about for the next, for the other real estate companies, so the micro Lodha is looking out very attractive right now. We are just expecting that the 16 to 17% year-on-year growth we are just expected, as well as the stable portfolios right now, and the land banks we are just expecting by 30-35% by the financial year 27-28.
Right. Moving on to SPML Infra, that counter has been buzzing on the back of a strong order win. What does that mean for the company? Let's get in Shivam with more details on the same.
Well, yes, SPML Infra is an infrastructure development company with a diverse set of business segments, including power transmission, and the stock is up around 3.5% in today's session and has touched 5-month intraday high. Now, the stock is buzzing on the back of receiving the contract, which is worth 1100 odd crores, and on this, the company will develop a 1 gigawatt battery energy storage systems at Barauni Thermal Power Station, which is operated by NTPC in Bihar. Now, this project ranks among the largest single BES orders that has been awarded in India, and for company it is also significant, as this will mark the first large-scale grid battery energy storage systems for the company. Now, this project is going to be executed over the period of 18 months, followed by 15 years of operation and maintenance. And looking at the recent developments, that the board of the company has also approved a fundraise of around 190 crores through warrants and equities. Now, the board has also approved increase in the capex of from 176 crores to 238 odd crores, which is aimed at supporting the expansion of battery energy storage system capacity from 2.5 gigawatt to 5 gigawatt per hour. Now, looking at the financials of 9-month FY26, the revenue has declined a slight a bit, while the EBITDA was up around 25%. The margin stand at 10.4%, while the PAT has increased by 27.7% on the back of lower operational expenses. The total order value of the projects, including this new order that has been secured by the company, stands at 5,452 crores. And looking at the stock performance, the stock has given a positive performance in 1 week, 1 month, and year till date basis.
Right. Girish, any view on this counter SPML Infra?
Looks like as midterm fundamentals stocks as well as the company come into the expansion modes also. Just BESS capacities is going to be expanded by the 5 gigawatts per hour. So along with that, a new manufacturing unit also there. There is a capex of around 230 crores. And just looking out for the overall structure in this particular segment itself, if we talk about the order books like a Jal Jeevan as well as the NTPC's order also. So we are getting a strong order books in this particular segment itself. So further seeing all the scenarios, looking out at the stock fundamentals are looking very attractive, but not at this current levels. I'm just looking out for the some reduction will be there at the near terms. And then if you talk about for the next 1.5 year time, then it looks very attractive.
Well, thank you, Girish. Thank you for joining us and giving us the way forward and your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a
Hello and welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vacharani, and with me, as always, is Puneet Zaveri. And before we start digging into all your stock-related questions, let's take a quick look as to how the markets are doing. The Nifty 50 right now is trading around 0.3% higher, but fallen off from its day's high point most certainly. Started probably highest at its day's high point, but right now trading around that 0.3% mark. Off from its day's low point as well, but a 140 odd points downtick is what we've seen from the day's high point. The Bank Nifty is doing better than what the benchmarks are doing right now, especially the Nifty 50 is up 0.8 odd percent, and 54,900 levels is where it's hovering. That's with regards to the Bank Nifty. Let's pull up the Nifty 50 heat map and see as to what are the counters that are putting pressure. You have L&T, which is seeing a downtick of around 2.6% on the back of the numbers. You have ONGC, Reliance, Power Grid. So heavyweights putting that pressure. Reliance almost down 2%, ONGC down 2.4% as well. Power Grid, Titan are some of the other names which are not doing particularly well. But on the flip side, you have Dr. Reddy's, which is shining in trade today, up 3.7%. In fact, pharma as a whole, pack as a whole, has been doing very well since the past 5 or 7 odd days. Trent is something which is seeing an uptick of around 3.7 odd percent. Tata Motors, Interglobe Aviation, Asian Paints are some of the other names which are also doing fairly well in trade today in that range of 2 to 3% each. Let's quickly pull up the sectoral heat map and see as to what sectors are doing right now, and as to what the sectoral picture looks like. You have pharma seeing gains of about 2.6 odd percent, followed by realty, which is up 1% as well. Metals also doing fairly well, up 1%, and your auto pack is also doing fairly well. FMCG is where the pressure really is, down by about 0.6 odd percent, and you have Nifty Energy, which is also seeing profit booking down by about 0.5 odd percent. So that's with regards to where the sectoral picture goes, but also the advanced decline ratio to help us understand as to what the broad end of spectrum is doing. Both the mid cap 150 and the small cap 250 doing fairly well, and that's indicated in this advanced decline ratio, Puneet, because almost more than 2:1 ratio is what we're seeing.
And that's healthy to see at this point of time, right? Because we've seen the broader markets actually doing much better than the benchmarks. Benchmarks continue to have that selling pressure. 24,300 we touch, and we're now back again in that contractionary zone in that sense, and that's visible on your screen right now for the broader markets. But the BSE 500 also puts in perspective some key ones in terms of what's moving in trade today. Embassy Development continues to be up 20%. Shoppers Stop is a surprising one because results weren't too great, but Spark also up 14%. Delta Corp up 13%. Alkyl Amines up 10%. So actually from the morning show, there has been gains being built into a lot of these games, and Coforge is also one of them, up 9% on the back of results. On the losers though, you've only seen KPIT Tech on the back of results now that is under pressure, and Exide also is down in trade today as well. But before we start taking all your stock related queries, an important update that we want to put through, because rising input costs, especially in the textile sector, are now beginning to flow through the apparel companies. Now with over half the increase already passed on, sources are telling NDTV Profit that further price hikes are expected in the coming months, and my colleague Ridhima is now joining us to give us all those details. Ridhima, over to you.
So textile industries are now putting their input costs, they're going to give it to the apparel industry as per the textile and garment industry sources. Now further input costs could be fully passed on to the textile industries. So right now due to this pass on, the cotton prices have risen by 7 to 8%, whereas synthetic garment prices are up by 15 to 20%. So apparel companies are already thinking of passing on this to the customers. Some of them, the smaller apparel companies, have passed on 4 to 5% in May, whereas the bigger apparel companies are still in a wait and watch situation before they pass on the hikes, as they have more capacity. And now stocks in focus include Trent, Aditya Birla Fashion and Retail, V-Mart, V2 Retail and Bazaar Style Retail. Now this price which will be put on the customers, that will be reflective only in Q2 FY27, and it's a wait and watch situation when this price hike exactly happens for the companies, and when the bigger companies sort of take a lead and set the trend.
Thanks so much for that, Ridhima. So continue to monitor all these trends, and we'll start very shortly with the stock related queries as well. Let me welcome in Kunal Shah, Senior Technical and Derivative Analyst, and Mirae Asset Sher Khan for the same, and we'll be joined by Chakri Lokpriya on the fundamental side of things too. Kunal, very good afternoon. Thanks so much for joining in. Let me take the first query now with you on HCL Tech actually, and our viewer Shanta Murthy from Bengaluru, who's holding 50 shares right now of the counter at almost 1400, currently sitting on a loss of almost 27,000 rupees. Is there any kind of indication, because the fundamentals have been quite weak in this quarter for HCL Tech? What's your view on the stock now?
I think overall for the stock specific for HCL Tech, I think already we have broken the critical support zone. So from a short to medium term perspective, the view continues to remain negative. Any bounce if you get into the stock since it is trading in the oversold zone, again utilize that as an exit opportunity. We might see the stock sliding down further towards the mark of 1120.
Okay, all right. The next one that we have is on Tenneco Clean Air. Our viewer Shankar from Bengaluru is asking if buying at the current price makes sense. He's planning to buy around 100 shares. We have Chakri joining us now. Chakri, a very good afternoon to you. Your view on Tenneco Clean Air?
Tenneco, sorry, I don't invest in the companies, so I don't know much.
No worries. Kunal, do you think there's enough data on the charts to give some perspective?
See, I think not a level to buy at the current levels. Already, if somebody has bought, then continue holding it. But currently, I think the stock is already overstretched on the technicals. Might see some profit booking in the coming days.
And most certainly one of the big beneficiaries of Mahindra as well as the 7XO model getting upsold because of the suspension system that Tenneco had provided. So when you look at the year-to-date chart, also you will see a sharp up move of Tenneco Clean Air on the charts. Let's try pulling that up very quickly. There you go, 27% from the lows for almost 492 as well. Recent listing though, so but that's a key perspective on Tenneco as well. But Sriram Raghuram from Chennai is holding on to 50 shares of First Source Solutions, bought at 105. Now he bought it back in May of 2022. So he's doubled his money in the last 4 years and held on to it. So very kudos to you, Sriram. But Chakri, do you track First Source by any chance? The results came recently, actually just an hour ago, and have been accepted well by the markets, looking at the 5% up move. But any view on this counter?
Yes, the results are good, and as a company, I think it's well positioned in both the outsourcing bit of the business as well as their organic growth. I think they'll continue to gain traction. So I think it's worth holding on to if he's a long-term investor.
Okay, the next one is KPIT Tech. Ambika from Chennai is holding 250 shares, bought at the levels of 650. Wants to know if she can continue to hold this from a long-term perspective. What's the long-term view on this particular counter, Chakri?
KPIT, along with the rest of the IT companies, is going through a massive reset of growth expectations. So that uncertainty will weigh on the stock. So maybe it's a good time to take some money off the table.
Chakri, did you have a view on the results today as well, or that just continues to be the momentum in terms of on this counter?
The results have continued to show the fairly muted overall environment which is plaguing the whole sector, and manufacturing IT, for it to pick up, is still quite some ways away. So I think it's therefore from that perspective it would be good to take some money off the table.
Fair point, Chakri. But the next question now on Jubilant Pharma. Our viewer has bought 50 shares, bought at 440, and this is Sriram Ranganathan, who's from Chennai, asking about a recommendation on this counter. Let's pull up Jubilant Pharma, now up at 955. So he's also doubled his money here. But Chakri, it's been a counter that's been missing in that sense in terms of momentum over the last 3 to 4 quarters. Would you say that he should continue to hold on given the attractive buy price, which is 440?
The answer is, clearly there's nothing like taking money off the table. The growth has been kind of, languishing lately. And, so therefore, the expectations, the earnings expectations, the momentum are likely to slow down for the business. From that perspective, that's why I recommend taking money off the table.
Okay, we've got Anjali who's calling us from Hyderabad now. Anjali, a very good afternoon to you. I believe you have a question on Sumitomo Chemical.
Yes, ma'am. Good afternoon to you, ma'am, and all of you. Yes, ma'am. I'm having Sumitomo Chemical 200 quantity at the price of 550 average. So
Anjali, I wanted to understand as to what is the time period that you're looking at for this particular counter?
6 to 8 months, ma'am.
6 to 8 months. All right. Then I'll take this up with Kunal. Kunal, your view on Sumitomo Chemicals?
I think recently the stock has witnessed a sharp recovery from the lower levels. 480 was a decisive level, which we have taken out in today's trading session. So this move can extend. Since he has a 6 to 8 month perspective, I think continue to hold the stock. Probably around the buying price or a bit above, you might get an exit point for the stock. Overall, the larger term trend for the stock continues to be sideways. Utilize this opportunity where you'll be getting a move towards 500, 550 on the upside as an exit opportunity.
Got that view, Kunal. And viewers, you can also call us for stock-related queries as well, as we have our experts here who will answer your questions. So, before we start, of course, the rapid fire session, it'd be good to get your calls in. But the next question, Kunal, also on MTAR Tech. This one's been in its own zone here, Kunal. What would you recommend? It's a good target. That's also a question coming in from Chennai. Because now at 6,200, does the momentum still continue?
I think definitely time to take money off the table for MTAR Tech. Any bounce, even if you get from these levels, also utilize that as an exit opportunity. Clearly, we have seen a very sharp rally on the upside. Even on the larger time frame from the technical perspective, everything is in the overbought zone. So you might see soon a correction coming into the stock.
Okay, the next one is on Titan. Vijay from Chennai wants to know the short-term target on this particular counter. Kunal, I'll stick with you. What are the charts suggesting for Titan?
The Titan has been losing some momentum in the recent times. Already it has seen a sharp rally on the weekly charts. There has been a negative divergence on the stock and the stock has been making a new high, but your momentum indicators are weakening. So clearly again for Titan also my recommendation would be to pull off the money from the table. You might see some correction coming towards the lower end of 3,900.
Got it. Well, the next is an interesting question from Prashant, who is also a regular viewer of the show. And Chakri, he was watching our show Ask Profit earlier on, and he had asked that, you'd earlier recommended Uno Minda as one of the counters for a long-term view. Would you recommend even entering this space, this stock right now for the next 1 year?
Uno Minda for the next 1 year or more, definitely yes. As a company, it's facing, along with the industry, shorter-term issues in terms of order momentum because of the export revenues are being somewhat impacted because of the current geopolitical, but for longer term, yes.
Okay, all right. So that's the view coming in on Uno Minda. The next one that we have is coming in on JNK Bank. Our viewer, Sabita from Hyderabad, is holding 100 shares at the levels of 121. Wants to know whether to hold or exit this counter. Kunal, your view on the charts for JNK Bank?
I think if she is holding from a short-term perspective, then definitely take some money off the table but if she has a bigger horizon, say 5 to 6 months perspective, then probably one can continue to hold. The stock can extend towards 155, 160 on the upside.
Got that view, Kunal. We also had the management today at 10:30 where they spoke about how FY26 was kind of flattish, but expectations are higher from next year as well. But take across another caller from Vijayawada now. Aruna has a stock query for us. Aruna, good afternoon. What's your query?
Yeah, good afternoon, sir. I'm having Oracle Financial Services, OFSS, 100 quantity of 8,300 average.
Okay.
So what is the long-term and short-term view on this? If I want to sell, what is the point to sell?
Got it. Well, Aruna, firstly, good on you to buy it at that price, just on an up move, and good to get those gains of almost 1.4 lakh rupees. But Kunal, this counter stock has seen so many queries that we've gotten on this one. From 6,200 on, the rally has gone all the way up to the current market level. Do you think it has more legs, or should Aruna book out her profits right now?
I think continue to hold the stock. 9,600, 9,800 has been the rejection zone earlier, and we have tested those levels on the higher end. Now already we have seen a sharp rally, so there could be minor pullbacks that would come in. But overall, I am expecting, since the uptrend has been very strong. So again, this is a new leg that has started into the stock. We can expect this move to continue towards the mark of 10,200, 300 on the upside.
All right. Okay. The next one is on Godrej Agrovet. Our viewer Sanket from Delhi has been holding 807 shares at the levels of 605. Wants to know if he can continue to buy more, keep holding on whatever he has. What should be the future prospects for this one is what he's asking. So Chakri, I'll come to you on this one. Your view on Godrej Agrovet?
Godrej Agrovet is a very slow-growing company, and the sector is subject to a number of vagaries. And there are also, every once in a while price controls that can come in. So from that perspective, I wouldn't really add on, but wait for a better price because valuation is still okay.
Okay, all right. We've got Pradeep who's calling us from Bengaluru. Pradeep, a very good afternoon to you. Go ahead, ask your question.
Very good afternoon, Mahima. See, I am having 100 shares of Goldium International. Bought at 144 rupees, and 100 shares of Salzer Electronics bought at 340 rupees. Now, I wanted to sell one of these shares. So, which I should sell and which I can hold?
Sorry, you said Pfizer, right?
Pfizer.
Which is the other counter? Pfizer, correct?
No, not Pfizer. Salzer.
Okay, Salsa Tech. Okay, Salsa Tech. Okay, understood. All right. And when you bought this, Pradeep, was it the charts that you saw for both of these?
I am a long-term investor.
All right. Okay. Got your question then. And you want to book profits in one of them. Is that understanding correct?
Yeah. I wanted to know which I should book profits and which I should hold.
Okay. Got your question. I take this up with Chakri then. Chakri, Goldium International is one counter that he's been holding. The other one is Salsa Tech. Which one do you think has more potential to grow further, and which one should he book profits for?
Both are good companies, but if you have to take one off the table, I would go for Goldium. Salz Electronics has a number of triggers coming in the next couple of quarters, business triggers, and therefore worth holding on to.
Got the view, Chakri. But the next question from Uma from Bangalore, and this one's coming, Kunal, towards you, because she's had an open-ended question on the solar industry. She wants to play this theme via the charts, but for a slightly more time frame compared to the near term. Anything that's on your radar right now within the Wari is the Fujiyama Power, because we've seen a bunch of new listings and a few existing one like Premium Energies amongst others. Anything that you like in the space now?
I think recently we have seen a good dip in Vari, and I think that's a good buying opportunity. Again, it has come to that demand zone from where we had seen the previous rally which has started. So again, the risk to reward ratio seems to be favorable. So one can go long over here, can probably expect targets of 3,500 on the upside. Also UTL Solar, which is Fujiyama. Again, the rally has been very sharp from the lower levels, but recently we had seen a dip. Again, that dip has been bought aggressively. So again, this can also extend the move towards 310, 320 on the upside.
Okay, all right. It's time for a rapid fire round. Kunal and Chakri, try to keep your answers as short as possible. The first one is from Subramaniam, who's writing us from Bengaluru. He's holding 1,000 shares of Vodafone Idea, bought at the levels of almost 17 rupees. He wants to know if he can hold or sell from a long-term perspective. Chakri, your view?
Very difficult to call, because a huge amount of debt. So therefore, I'd rather sell the stock.
Mr. Reddy is holding on to Aeroflex at 167, Kunal, and he's holding 3,000 shares. So he's in quite a lot of gains at this point of time. Would you recommend him to book partial profits, continue to hold?
Yeah, book 50% and continue to hold the rest.
Silchar Technologies, from a slightly long-term perspective, Kunal, your view on the charts. Kalyani from Telangana wants to know.
Sorry, I'm not able to find the stock.
It's Silchar, S-I-L-C-H-A-R.
SIL, right?
Yes.
Sorry, I'm not able to find this.
By any chance, any view on this one, Chakri?
No, I don't know this company. I'm sorry.
Sure.
The next one, coming in now, it's from Shankar, who wants to know a quick view on NTPC Green, where he's planning to buy 500 shares. Would you recommend that, Chakri?
NTPC Green, clearly yes, because long growth potential ahead of it. Valuation is okay.
Canara Bank bought at the levels of 161. 2,000 shares what Arvind has bought. Wants to know 6 to 8 months view on the counter. Kunal, your view?
I think the view continues to remain bullish on PSUs from a short-term to medium-term perspective. Continue to hold the stock.
Shrikanta wants to hold, is holding 200 shares of Avanti Fee. He's not mentioned the price, but Chakri, space has seen a massive re-rating, but a very big opportunity. Would you still continue to hold?
Yes, clearly this is the time to hold the stock. Huge amount of re-rating is possible.
Okay, Federal Bank, is this the right price to buy? Chakri, this question is directed towards you. Anil Singh is asking.
Results are okay. Banking as a sector is fine. Federal Bank strong, good results. So I think worth holding on to.
Kishore from Hyderabad is holding on to Tejas Networks, bought at 413, and he's holding 150 shares. Now, he has a long-term view, Chakri, of 18 months, but should he continue to hold? It's been a very volatile counter, right?
It is a volatile sector, but stock and worth holding on to. Long-term potential is very good.
Okay, TCI Express bought at the price of 732. 212 shares is what Rashmi has been holding. What should she do next? Kunal, your view on the charts?
And they continue to hold.
Ajay Agarwal has LTM 150 shares at 5,500 here. So he's in a loss right now, Kunal. Should he average down? What do the charts suggest?
I think no, definitely not averaging it down. In fact, utilize pullbacks as an exit opportunity.
Orion Pro Solutions bought an average price of 886. 24 shares is what Suman from Kolkata is holding. She wants a 3 years perspective. Chakri?
Yeah, I think from a 3-year perspective, I think there is some amount of leeway, so worth holding on to.
Brigade Enterprise, is it a good time to enter this counter now, Chakri?
Yeah, I think real estate as a space will do well after all these geopolitical issues are kind of settled. So it's a more a longer term play.
Okay, TCS bought at the levels of 2730. Average or sell? 5-year view on this one, Chakri?
There are enough headwinds now, so I would rather sell the stock right now.
Sigachi Industries bought at 43 by Madhu Babu, and he's holding 1,000 shares. Now, it's been a very volatile counter, Kunal. Should he continue to hold down? What's your opinion?
Sorry, which counter?
Sigachi. Let's pull up the 1-year chart also as Kunal goes through it. Very volatile. I think there was a fire incident also at the company. But any view here, Kunal?
Yeah, I think again, utilize pullback to exit the stock.
Correct. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Chakri as well as Kunal, appreciate your time and your inputs on a whole bunch of queries. With that, we've reached 90 queries for the day, including both the morning and the afternoon edition. So thanks so much, viewers. Of course, that's 54 queries of the morning. And Chakri as well as Kunal have helped us solve almost 36 queries in this half an hour of the show. But thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No.
Hi, thanks so much for joining in. You're watching India Market Close, and take a look at this. What more has to be said? We've bounced from the low point of the day and we're currently well above what we started off at the high point of the day and climbing further. This is the benchmark Nifty 50, and the broader markets are also moving in tandem. So pull up the mid-cap index while we're talking about this. It is at the high point of the day, 1.6% higher. Let's pull up the small cap index as well, and it's gaining about 1.6%. What is occurring? Let's pull up the bank Nifty to see if it's showing a similar up move, because you have the frontline banks that have gained quite considerably. In fact, it is trading with gains of about 2%. Pull up the heat map for the Nifty 50, because this is a very sharp move, and you're seeing a lot of stocks that have moved from the low point. If you watched the show this morning, you would have seen that there was a considerable amount of red on the screen. That has changed quite considerably. And you have Indigo that continues to rule the roost. It was one of the top gainers in trade in the morning, but you have Dr. Reddy's Laboratories trading at the high point of the day. You have Tata Motors, PV, Trent, etc. that are doing well. But you will see the banks. Axis Bank is up and about. You have SBI that is up and about. HDFC Bank with gains of about 2.3% or thereabouts. And you should see ICICI Bank as well with considerable gains of about 1.5% as well. So the heavyweights on the benchmark Nifty 50 are really pulling ground today. Pull up the contributors chart just to drive home this point. And right on top of the screen, you have HDFC Bank and ICICI Bank, followed by State Bank of India and Axis Bank. 5 banks that are leading the gains and contributing a chunk. But don't forget this, because if you take a look at the 190 points that is being contributed by the rest of the pack as well, then this is a very strong up move. Quite a considerable amount of this is being led, as you've seen, by the banking index. Reliance Industries on the downside, Larsen & Toubro reacting to a certain extent to the outlook for the first half, which the company itself has said is going to be a little soft in the current context, is losing a little bit of ground. ONGC, Infi are the other drags, but not too much in the way of big losers for the Nifty 50 at the very least. Let's talk about the heat map for the sectoral indices, because you will see a large amount of green. Of course, this was the case in the morning as well when we opened up. In fact, if anything, you have a little more red on the screen than you did at the start. But you have the pharma index, PSU banks. This is an index that has been underperforming in the recent past, and we were talking about the possibility of the Nifty bank breaking past the lull that it has had, and that up move and that trigger that you had this morning with regard to the guarantee scheme that was announced by the government seems to be the trigger that these banks needed. So the PSU banking index is up as much as 2.5%. You have the mid-cap index that is up and about. Realty is doing particularly well. The Nifty bank is up about 2.3% or thereabouts. You have auto as an index that's doing okay. The mid-cap index is up about 1.8% or thereabouts. The Nifty metal index as well, up about 1.5%. What isn't doing well on the downside is actually the FMCG index and the CPSE index, both of which are losing less than 0.2% each. So what are the factors that are at play right now? You have had holding on of 24,000 for a while. We're well above that, in fact, at this moment. and a consolidation in the range of 23,800 to 24,300. You've seen value buying that continues in small cap as well as in mid cap, and the broader markets have outperformed the benchmark. That continues to be the case, but the late move that you've seen in the benchmark Nifty 50, we'll have to see where it ends up. The top sectoral gainer for the fifth session is pharma. All constituents or most constituents trade in the green. The Nifty Bank is actually seeing support at 54,600 for the second straight day, and the major resistance is at 55,600. I just want to pull up the intraday chart for the Nifty 50 again, because while we were speaking about all of this, it continued to climb, and it is trading 283 points higher above what has become a very critical resistance level in the recent past at 24,300. So the question to Nilesh Jain, who's joining me right now, of Centrum Broking, is with the blitz that we're seeing right now, Nilesh, and there's no other way to describe it. It's a blitz, and we've run very quickly to that 24,300 mark. What are the fresh levels that you would look at for both the benchmark Nifty 50 as well as the Nifty Bank, which seems to be in a tearaway hurry today?
Very good afternoon, Alex. Absolutely, a very strong rebound that we have seen today. I think it is more sort of a giving confidence, because now today the Nifty has taken support exactly at its 21 as well as 50-day moving average. So cluster of support at today's low somewhere around 24,050. And from now here on, we are expecting a move towards 24,500. So another 200 point uptick is something that we can expect in a very short-term time frame. So it's a buy and decline now. We are getting more confidence because the volatility index in India is cooled off sharply by 6% today. And for the first time after a long time, it has slipped below 17. So that is another thing that is giving more confidence. Coming to the Bank Nifty, after long underperformance over Nifty index, finally it has shown a big outperformance over the Nifty index, and also making an attempt to cross 56,000 as well. That's the 50-day moving average for the Bank Nifty in the spot level. So overall, Bank Nifty also looks strong for 56,500 to 57,000. So we are expecting a gradual uptick to continue towards this 200-day moving average that is placed somewhere around 57,200. So that will be the next target in the May series that we can expect. So both Nifty and Bank Nifty look strong, but yes, broader markets are looking more stronger than the benchmark indices. Mid-cap index is merely few hundred points away from a new record high, and the kind of rebound that we have seen in the small cap index, that is also giving more confidence. So overall, it looks like a broad-based buying that we are witnessing, and it is likely to be a sustainable one.
Just as we're speaking, the peak has been found, and it's just gone a slight bit below that peak, right? So we've broken below the 24,300 mark for the benchmark Nifty 50. But your point on the broader markets is well made, Nilesh, because if you look at April as a whole, then you see 17% gains for the small cap index, about 13% for the mid cap index or thereabouts, and you built on that in the recent past with an outperformance in the broader markets, right? So there you go. So 1 month, of course, does not capture all of April, is up about 15.5%. But let's talk about individual stocks, and I did not bring you those. As I look at the 500 stocks of the Nifty 500, there are just over 100 declines. But the key gainers, let me highlight those for you. You have Alkyl Amines, which is doing particularly well. You have Wockhardt, you have Valor Estate, you have Coforge that is reacting to numbers and continues to gain ground. You have Tejas, you have eClerx, and you have SRF, which is our selection for the stock of the day, and we'll come to that in just a bit. Among the key losers, you have not too many in the way of very, very big losers. You have Schneider Electric that's losing about 5%. You have Vardhaman Textiles, you have KPIT Tech, Ather Energy, all losing over 4% and less than 5%. You have Credit Access that is seeing a little bit of money being taken off the table after the sharp rally that it saw in the recent past. But I've listed out several stocks for you, Nilesh. Is your pick for today among those, or is it separate?
Well, Alex, a very good setup across the broader markets we are witnessing today. So slightly different set of stocks that I have. First of all, within Pharma Pack, we have seen a very strong momentum. So we are very much constructive on pharma space. Mankind Pharma, this particular counter has given a very good breakout today. In fact, yesterday as well, we have seen a very good setup. Today, on derivative front, we have seen 4% OI addition as well. So we are getting more confidence on derivative front as well. With this kind of a breakout, we are expecting a follow-up on the upside towards 2450 to 2500. These are the two targets on the upside. And 2295, somewhere around today's low, will be the stop loss. So Mankind Pharma will be first preferred bet. Apart from that, if you see the other stock that we are liking is Shriram Finance. So NBFC space will be another space where we may see the momentum coming back. So Shriram Finance, we are bullish for upside target of 1020, 1040 with a stop loss below 978. Shriram Finance is also a buy. And lastly, one more counter that I have is MCX. So Bombay Stock Exchange is trading at all-time high, and MCX is likely to follow that momentum on the upside towards 3200. That's again a positional target. So one can keep a stop loss below 2900, and MCX is also buy.
Now, of course, at this point, it's conjecture as to why the market is rising as much as it is. But there is a possibility that a news report that was put out just 16 minutes back, from what I can see, by Axios about the US-Iran conflict could have had a bearing in turning the tide. Because if you look at the intraday chart for the Nifty 50, you will see that that big spike took place about 20 minutes back. Now, what are they saying? And it's a pretty simple update for you. There is a possibility that the White House believes that it is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. They have quoted 2 US officials and 2 other sources that have been briefed on the issue. It must be stated very clearly that NDTV Profit or the NDTV Group don't yet have any confirmation of this story, and therefore it is not verified. The feeling at this moment is that the market could be reacting to the possibility that the US-Iran war, the tensions might be dissipating. We just had Brent crude on the screen right now. Let's pull those up again, because earlier today they were already reacting, or rather last night, crude oil prices were reacting to an update by President Donald Trump that said that Project Freedom would be put on hold in the near term for a little while because there is significant progress that was made, according to him, in the talks with Iran, and they were moving to a conclusive agreement. So Brent crude now trading lower by as much as 6% at 103, 103.5 and moving lower very, very quickly. I just want to also pull up the rupee if we can. And if we can pull up the exact rate as things stand right now, you will also see a sharp reaction in the Indian rupee. Remember, for the rupee and the chart that you're seeing on the screen, down is good. That means that it is appreciating against the US dollar, 94.68 as things stand right now, and a pretty sharp move, a 0.6% move for the USD INR pair in a day is a pretty sharp move. Nilesh, if you have a view on crude oil prices or the Indian rupee, if you can step in and perhaps give us a check on either of those two.
Right, Alex. So we have been tracking both the commodities. So first of all, USD INR, if you see, it has formed somewhere kind of a double top pattern on technical front, where 95.30, 95.40 has acted as a very strong resistance. And it has also gone into extremely over territory. So this kind of a profit taking was very much likely. So we may see further retracement to continue on the lower side towards 94.2 to 94. And it may test its 21-day moving average that is placed at 93.81 in the best case scenario. So overall, as of now, at current level, we expect some bit of profit taking to continue. So rupee may appreciate further. Now coming to the Brent crude, Similarly, we have seen multiple tops at $120. If you can pull up, last 2 months chart, you can clearly see at 120 to $125, that was a strong resistance zone. Multiple tops can be seen at that particular range. So now we are expecting a follow-up more on the lower side to continue towards 102 to 100 and in fact $100 is something that we may see going forward. And if it breaks below $100, then next target straightforward could be at $90. So that will be further positive development we may see going forward, provided it should break $100 support on the lower side.
Sequence of events that you need to pay attention to all of this week. We've been focusing more on geopolitics than perhaps when you saw that bit of a lull in the conflict between Iran and the US. Earlier in the week, you had news of certain drone attacks and certain increase in tensions. And subsequent to that, you had statements that were made by Iran officials as well as the US. Iran, for example, talking about the fact that it believed that the US should not be drawn back into a conflict. Remember that this took place just a couple of days back. And since then, you had Project Freedom that was announced. It was said that the blockade would remain in place, but the US would help vessels that were stuck in the Hormuz Strait to get through and to pass through. The latest update, of course, last evening was that Donald Trump announced that they would put Project Freedom on hold. There was also a statement made by other officials of the Trump administration saying that a deal could well be nearing closure. And of course, Pete Hegseth, talking about the fact that the truce was very much continuing between Iran and the US. The latest, of course, is an update from Axios. Remember, we've told you that this is not confirmed. It is a source-based report quoting multiple sources of the US administration and White House saying that there is a possibility of a memo or of a one-page document and an agreement being signed by the US and Iran. Devin Choksi joining us right now to talk about the markets and everything else that is happening. Devin bhai, thanks so much for taking the time. We're sticking with this geopolitical story because it is the biggest story as things stand right now. Between 16 and 20 minutes back, there was this report that came about saying that there is a possibility of a deal between Iran and US very soon, and the markets have really zoomed from that point. Would you buy into this, or would you hold out and wait for an official announcement to come through?
Yeah, Alex, good afternoon. Well, I think the deal is definitely going to be taking place. How soon, how fast, and in what contours I think this is going to happen, I think is something which is a subject matter of guess. And that's where probably I think the market is either excited or nervous on a given day. Today, I think what I would like to think a little differently, that assuming that the deal is getting through, if not today, tomorrow, the next thing that I think one will have to be extremely careful about is how exactly are we going to be positioning your investment in this quarter. See, the last quarter results have already given good amount of confidence about Indian corporate sector producing better numbers. However, in the first quarter, that is the current financial year, the first quarter, we are likely to see, I think, a severe amount of challenges in various companies and their books, etc. Those businesses which are dependent on global supply chain mechanism, the logistic management activity included, I think they are going to be having the first taste of challenge in this particular quarter with the kind of performance that they will be talking about. Already companies have started talking about pain in the high input cost, particularly the commodity prices, including the metal commodity, chemical commodity prices. So they already started talking about, I think, the adverse impact of that. And still the quarter is yet to get over, but at the same time, I think the businesses of the companies, if they are not meeting the kind of expected numbers, probably the market will not be very kind in tolerating the kind of valuation at which I think it has bounced back. So in my viewpoint, in summarization, I feel that I think today we stay in the range between 22,200, which is the low that it has made up till now, and 24,600, 24,800.
Okay.
In this range, market is tightly placed as I see it at this point of time.
Sure, of course, Devin. Bhai, just want to go through what the details of that story is. And Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group, joining in to give us the idea. Now, this is what is being claimed, and it is coming in from the White House. The White House believes it's getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed negotiations. They claim that this is the closest they've been to an agreement. So what are the provisions that we know of so far? The deal would involve Iran committing to a moratorium on nuclear enrichment, US agreeing to lift sanctions, release billions in frozen Iranian funds, and both sides lifting restrictions around transit through the Strait of Hormuz. We have to wait and see whether the Iranians respond to this, because we've seen versions of this coming in before. Pramit Pal Chaudhary, just want to ask you, of all of the things that this one-page memo reportedly has, do you think the Iranians will agree to not charging any levy through the Strait of Hormuz and leaving that unchecked? Because that is a strategic advantage they've gained as a result of this war.
So the most likely way that would be handled, the Iranians have already passed a law in their own parliament, in the Majlis, saying that they will have the right to impose such dues on any ship that goes in and out of the Straits of Hormuz, and they will share that right only with Oman, which controls the southern shore. So legally, there is no way back for the Iranians. But what can happen is either the Iranians can unofficially say, we won't impose such a due for an unspecified amount of time, calculating that when the Americans eventually pull away and this war comes to an end, they can impose that due anyway, and nobody will really be in a position to protest. Or they can wrap it in a different language. For example, the Iranians have also said they expect to be paid a war reparations for the damage that has been done to them during the war. And they could therefore theoretically put those dues under a war reparation structure, charging the countries like Qatar, Saudi Arabia, and UAE directly and say, you pay it to us in case your ships don't get. I will expect Iran to still demand some kind of money, but it can be wrapped up in a manner that is not of the same language that the Americans are saying. So the principle that the Straits of Hormuz remains open as an open international maritime corridor can be preserved.
Pramit, hi, Alex here. The other sticking point, and something that you've heard about in fits and starts from the Iran administration, I'm calling it the administration, but the spokespeople, shall we say, of Iran, is the nuclear deal and the lack thereof, and their unwillingness to surrender the enriched uranium that they have. So where do we go on that front? Because they seem to have been unwilling to budge on that point.
Well, what is interesting, if this one-page memorandum is anything to go by, the Americans have actually walked back from their original position. So the first issue was the enrichment question. America said, you must commit not to enrich uranium for 20 years. Iran had said, we are prepared to commit to 5 years, which is exactly what was under the original JCPOA agreement. In this memorandum, it seems the Americans have said, why don't we go for 12 years? At least 12 years, preferably 15. Obviously, Iran will probably go for the shorter number. But you're seeing the Americans effectively walk to a mid position between the 5 and the 20 years. And so I think that's something the Iranians can live with. Not least because, especially if this does not come with any monitoring system or verification structure, it after a few years, Iran can really do whatever it wants. So I think we're looking at a compromise in which 10 years perhaps is what the Iranians will offer. But the Americans have clearly walked back from that original 20 years by quite a bit.
Okay, just one more point, Pramit. The fact is that we're hearing only one side of this, and I want to make it clear to our viewers, this is an Axios report that the street is responding to. And Axios, in its report, is quoting officials from the White House. There is no official word from the White House yet. Having said that, there is no word at all from the Iranians. And this is what we've seen time and again, right? Bluster and sometimes claims from the American side, and then the Iranians come and say that there's no such thing. How do we know this is not just one of those times?
So what we're seeing, I think, is a very standard negotiating tactic. The Americans have basically positioned themselves by saying, okay, look, this is what we've sent an MOU to the memorandum of understanding to Iran. We know that we believe that the Iranian regime is divided between hardliners and pragmatists, so we don't know whether it will be accepted. But what we will do is also leak it to the press. So if the Iranians come back and say, no, this is unacceptable, or come back with a set of demands that of their own, which America finds unacceptable, America can at least go to the public, to their public and to the international community and say, look, we made major compromises. The people who are being difficult about this are the Iranians, not us. And that's basically what they're positioning themselves as. This is, as you said, this is not the way diplomacy is normally run. Normally, you try to get everything settled behind closed doors. But in this case, given that Iran and America, the distrust levels are so high, they do not have diplomatic relations. Iran will be nervous to send even a foreign minister to meet an American foreign minister for fear he'd be assassinated. Given the state of relationship between, this is basically how it's going to play out. And finally, you have a President Trump whose concept of diplomacy is, should we say, very different from what the norm is.
Yeah, different is one way to describe it. Thanks so much for taking the time, though, Pramit. Always a pleasure speaking with you.
Thank you.
All right, I want to go back to Deven Bhai on this. Deven, you were listening to this conversation, right? A geopolitical expert talking about it, and it seems like this is a move towards a deal, as you were pointing out. But the question is, what should your response be? And I asked that question to you at the start, but I want to refine that just a tad bit. You have crude sensitives. The top gainer on the Nifty 50 is Interglobe Aviation. It's up, 6% at this juncture. So the horse has already bolted. Is there any point jumping on it right now? You could well be in a situation where you're caught on the wrong foot.
Yeah, Alex, I think that's one main point is that we all believe that sooner or later, I think this situation is going to ease out, some agreement will take place, and I think the market will remain excited. I would like to believe that I think that excitement is not going to be permanent. It is going to be probably an event-driven excitement. The reason for which I think I'm saying this is because in this particular quarter, the reality check comes in. The corporate earnings are not going to be reflecting the kind of values that market is right now assigning to some of the stocks. And that's where we are going to see the challenge. Even if we want to believe that tomorrow onwards, everything will become normal, as far as I think the problem with the Iran and the other places is concerned, my still belief is that I think it's not going to get normal for the business. Business will take time. And that's where probably I would like to buy into this market during the correction. Having identified good opportunities and understanding the businesses at a right price, right time, I think one will like to buy. Now, the question will arise that I think we're going to sell at that point of time that you will buy. My take is that I think those who have actually bought it at a lower levels, they are right now also booking profits. So that is a good time to, I think, see the correction in the price. And that's where probably I think would like to buy some of the good quality stocks. Not in hurry at all, at least at this point of time, unless I think the stock is a compelling selective story.
Okay, Nilesh, I just want to understand from you, what is the Nifty position right now? Because if you think about it, this is what's been holding back, right? And having said that, we don't know if all of this changes because these things tend to change quickly. But as of now, as of the levels that you're seeing and the strength that you're seeing in the Nifty and Bank Nifty, please. You're on mute. Yeah, you're on mute. Yeah, there you are.
Right. So in last 6 to 8 consecutive sessions, we have seen some bit of profit taking that is coming back specifically in the second half of the session towards the closing hour. But today the case seems to be different. If Nifty manages to close about 24,300, that will be considered as a positive close. Then probably we can expect a short covering rally towards 24,500 to 24,600. These are the levels that we are expecting in the Nifty on immediate basis. So today's close, which probably we might see that closing about 24,300. and that will be considered as a positive close. And given the kind of a setup we are witnessing on India VIX, which has slipped below 17 after a long time, so that is also giving more confidence. And given the kind of derivative data we are witnessing, a lot of call writers were active at 24,300, and they might run for the cover now, and we may see a short covering move on the upside to continue. Now coming to the Bank Nifty, similar to the Nifty, it is important that it should close above 55,800. That's the 21-day moving average. And if it breaks above 56,000, that will be another confirmation that we'll be getting on the technical front. And target for the Bank Nifty now comes somewhere around 56,500 to 56,800. So the setup on the Bank Nifty also looks strong. And given the kind of outperformance we are witnessing today, we may see a huge amount of short covering in the banking space, specifically index elevated counters like HDFC, ICICI, and Axis Bank. So these are the three specific banks that we are keeping an eye on, and we remain bullish at current level in the Bank Nifty as well.
Okay. Picks that you would look at as this moves, how would you look at, say, an ONGC? How would you look at an Indigo? How would you look at an Asian Paint, some of those crude sensitives, Nilesh?
Well, Tamanna, as far as oil upstream companies are concerned, we have already seen a very good momentum in the stocks like ONGC, Oil India, and Coal India. But now I think we may see some bit of correction out there. The focus will be on crude sensitive stocks which might benefit from the falling crude oil prices. So first of all, Indigo, the setup has turned strongly positive after today's move, and we are expecting a follow-up on the upside to continue towards 4,700 to 4,800. So setup looks positive. If somebody is already holding the long position, can stay put, keeping a stop loss below 4,400. And major trend reversal can be seen across all OMC stocks. So specifically, Hindustan Petroleum is something that we are liking at current level as well. After a spurt of close to 7%, there is still upside room left towards 425 to 430 on the upside. So yes, all the stocks within OMC space, HPPP, ISC look strong. Keep an eye on aviation space, specifically Indigo. So these are the stocks that we remain positive for further momentum to continue.
Okay, David Roche, strategist at Quantum Strategy, joining us right now. David, thanks so much for taking the time. Markets in India and in fact across the globe reacting to this Axios report that is quoting a number of sources, some of them from the White House purportedly. And they're talking about the possibility of a one-page memo, a deal to be signed between Iran and the US. And some of those provisions talking about the easing of restrictions of travel between on that Strait of Hormuz. What do you make of this?
I respectfully say that this is a press media report, and I have the greatest respect from my colleagues in the media, but I don't have a lot to go on as regards any factual evidence for a deal. However, what I can do is tell you what I think this would mean if it were true. You cannot settle the conflict which President Trump has started in the Gulf with a one-page memo, because it will decide nothing and put all negotiations out in the future, which leaves us in a worse position than when he started this war. So any one-page memo which says Iran is going to do this or going to do that, and the Americans are going to go home, is effectively a defeat. It is nothing to celebrate. Why? Because what matters to you and me is whether oil moves. And a deal, a one-page deal where the Americans go home, will simply say that Iran remains in charge of the Gulf. And then at least 50% of the oil will not move, because Iran has plenty of enemies among the Gulf states and others, which it will prevent using the Gulf for shipping purposes. So it will not settle the problem economically for you and me, and therefore not for markets. So I would say to you, hold your fire. Don't get carried away by markets which were already so frothy and are now blowing even bigger bubbles, because any quick fix to the Gulf will actually be a quick defeat for Trump. And that will leave what matters to us, oil, in as much danger or more than before.
Not to be facetious, David. It depends.
You never are facetious.
It depends on the size of the text. You can probably fit quite a bit on a page. But having said that, the crude oil prices have come off quite substantially, and Brent crude at 102 or thereabouts, where a couple of days back it was much higher. It was 115 plus. The oil market's also taking notice, David, or would you say that this is simply paper crude and is not indicative of what the real situation is?
It's not indicative of the real situation. Brent is a paper transaction. It's an investor vehicle. If you go down and try and get immediate delivery of oil, whether it's 40s or Brent or whatever, you will find that you'll be paying 30 or 40% above these rates. And the reason for that is very simple. With the entire Middle East network for exporting oil, including the pipelines on the Red Sea, being closed down, we are short of 23 million barrels of oil a day. And that means that global inventories are falling. And people are scrambling in the countries where the inventories are reaching critical level, the EU, Australia, India. People are scrambling to get oil at any price. And that's the price that matters. So don't be distracted by what traders are doing in financial instruments about oil. Look at real-time deliveries.
David, so therefore, and you've identified, I think very aptly to say that this is not going to be solved by a one-page memo. So therefore, from your perspective, there are a couple of sticking issues, right? You talk about nuclear enrichment, you talk about control of the strait, and you talk about reparations that are being sought by Iran. From your perspective, what will be needed for a conclusive agreement to be signed?
Oh, I think the only conclusive agreement which the Iranians are prepared to sign, and after all, you have to say, what are the Iranians prepared to sign? With the IRGC hard line in control, the only conclusive agreement that they're prepared to sign is a withdrawal of the Americans, not only from the Gulf, but from the Gulf states and surrounding states, an acknowledgement that they are in charge of the Gulf, which they, by any international law, are not, and that they can charge what they like to let whom they like through the Gulf. That's the deal they'll sign. And it's not the deal which anybody in their right mind seeking to solve the problems that we are dealing with, which is whether oil will move or not oil, they could not possibly sign this. But that is not what it's about. You see, you're asking me who would sign a deal which settles the issue. And I will say they will sign a deal which does not settle the issue, because Trump wants out because people see his policies as a disaster and the midterms are coming up, and he's prepared to get out at pretty well any price, I believe. And the Iranians want to keep the control which they've got, which is they lost the war, but they won the strategic battle for control over the world's oil supplies, the choke points, the Gulf of Hormuz, etc., and the Red Sea. And they're not going to give that up. Why would they give it up?
That was exactly my question. That was exactly my question. Why will they give that up? Why will you give up a strategic advantage that you've been handed? But then something's got to give, right? Otherwise, the blockade continues. David,
what they reckon they'll give is they reckon Donald Trump will give because he wants to go home. That's what they reckon. Now, whether they actually get to that point or not, we'll see. But why on earth would they give up? What has changed?
Yeah. David Roche, thank you so much for speaking with us. Just a quick question with Devin Bhai before we wrap up this segment. Devin Bhai, is there a strategic re-look at opportunities if this war is truly ending? Would you look at a portfolio reshuffle in earnest and some stocks which now set to benefit?
Tamanna, a lot depends on how exactly we see the commodity prices settling. Particularly, I am looking more at it because the India economy on a consumption side is a fantastic roadmap. So I think there is no second thought on that aspect. In fact, sooner the war-related uncertainties goes away, I think better it would be for the companies in particular, because I think they would be in a much better position to execute. The current challenge is related to the pricing pressure due to the commodity prices. And if those pressures, if that pressure is coming down, in some systematic manner, then probably I think market will look ahead with a larger amount of confidence. At the same time, I think some of the significantly subdued stocks like L&T, where probably we see the opportunities actually, I think, becoming bigger, but for this uncertainty at this point of time on execution. I believe that I think such kind of companies should be considered in the portfolio because I think when the tide turns for better, I get at this point of time, you are likely to see the better appreciation from some of these companies which are better down at this point of time.
Okay. Thank you so much, Devin Bhai and Nilesh, for speaking with us. David Roche will take a very short break. We're coming back with a crude check. We're speaking to experts on crude. We're getting you BTST ideas. This is turning out to be an exciting Wednesday close. How should you make the most of it? Are you making sure you're not caught napping when this finally ends? Look at that spike on the Nifty. The broader market's showing even more strength. We're coming back with all of that in just a second. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Inside.
Okay, it's becoming a wonderful Wednesday this close. Alex, how quickly things change also tells you how much pent up anxiety there is in the markets, and this is the one thing holding back, because it's not just the Nifty and the Sensex. You look at the rupee,
Yes.
you look at European markets, you look at American markets, you look at crude prices, you look at the VIX. All of those indicators telling you that a wall of worry might be fading and will drop quickly.
Yeah, absolutely. And the one asset class that you did not mention, Tamanna, but I think is going to be very critical to watch is bond yields.
Yes.
Because as of this morning, I was talking about it and it's been highlighted. In the UK, you have the 30-year yield that is at the highest level since 1998. You have in the US, the 30-year bond yield that is 15 basis points away from its 23-year highs. And in Japan, that's a similar situation, less than 15 basis points from all-time highs. So there is pressure because there is an anticipation that if this conflict is prolonged, there will clearly be a macro impact. But we've got Shivangi Sarda, analyst, equity derivatives and technical at Motilal Oswal, as well as Dharmesh Kant joining us on this leg. Thank you so much to the both of you for taking the time. Allow me, however, to go across first to Pankaj Srivastava. Okay, he'll join a bit. Okay, let me amend that. Let me go to you, Shivangi, then. On the charts, we've just gotten a check on the Nifty 50. I'm wondering whether your ranges have shifted based on the late rally that we've seen today.
Very good afternoon. Absolutely. It has been turning out to be a wonderful Wednesday close, of course. We've seen that index has rallied to the near resistance levels of 24,350 marks. And, the next up level that we're looking out for is 24,500. Of course, the support levels have shifted higher. Now we could look at 24,150 as an important base here. Of course, all the other, global tensions easing off, and with the, domestic cues also indicating a good sign of buying, we would recommend a buy and decline here as well, even to continue at these levels. And we are seeing buying across the street, across sectors. So some of the good picks could be handpicked from here. Of course, talking about the bank Nifty here, we've seen that outperformance can be seen here today after a series of underperformance. And we've seen that now it is holding above 55,500 levels. So till the time it respects these levels, we could expect an up move towards 56,500 odd zones for Bank Nifty.
Okay, futures, S&P futures are up and about. I wonder if we can pull up the rupee. It's at its strongest point of the day. We'll pull up the rupee for you in a bit as well. You're seeing US futures doing very well, 94.62. So either you look at it at lowest point or highest point, but let me just put it this way, it's at its strongest point of the day at 94.61. Brent has cracked nicely, good for India. MCX Silver July futures are up as well. So it's looking good, almost a 7% downtick on Brent. Pankaj Srivastav, Senior Vice President at Rystad Energy, is joining in. Pankaj, I have a very simple question for you. The one thing that US President Donald Trump has been saying incessantly is that the moment this ends, oil prices will collapse. There will be this huge push down. Do you think that's likely to happen?
Yeah, the chances of that happening is quite high because the moment the Strait of Hormuz opens, we can expect the significant supply push coming from the Middle Eastern countries, and that is going to help the crude prices go down. Because one thing we also need to know that the refineries, at least in the Asia region, which has some of the refineries started utilizing their SPRs. And when the flow will start resuming, we will see that the pressure on the crude prices are going to come down. Another aspect is that is also we need to consider that because of the high prices currently being faced in the at least the Asia region, the demand destruction is happening, and that demand destruction is also going to help in reduction in the crude demand, and that is basically supply demand game is there, and then you will see the crude prices going to drop. And with the geopolitical conditions, but this is not going to happen immediately. It will take certain amount of time due to the normalization of the logistic through Strait of Hormuz, and then certain amount of infrastructure damage has already happened in Middle East. So the full capacity of the food production coming to the pre-war level is going to take certain amount of time. So our expectation is that if we see a major peace accord happens within couple of weeks or maybe by end of this month, the normalization process will start from mid of June, and the crude prices are going to be in the range of $80 to $85 by the end of this year. So that is our assumption based upon our internal analysis. And yes, you can see that this is the way Mr. Trump is talking about.
The contention, Pankaj, has been made that the levels that we're seeing for Brent is on paper, and the on-ground reality is very, very different. Availability of physical crude, the prices when transactions are actually taking place, and the movement of crude. So how do you study these two different markets, so to speak? They seem to be operating on completely different triggers.
Yeah, so Brent is, you can see the benchmark crude. So Brent crude production in reality is very, I would say, insignificant amount. So, and that depends upon for the different market. If you're talking about the Asian market will be more interested into the Dubai sort of the crude, that is the medium sour crude. And the European market, which used to rely on the Russian crude, they started processing significant amount of the WTI. So reality will be always be different than what the Brent prices are being shown. So if you see, as far as the India is concerned, our crude cost is significantly higher than what the Brent price is showing. So and the reason is that these are the benchmark crude, but they do not represent the real processing by the individual refineries. So they basically you compare relative to these crude prices. But still, I feel, and then we whatever we have studied, the Middle Eastern supply is going to release, and then we have to also remember that UAE is coming out from the OPEC plus, and that is going to release another 1.5 million barrels of oil, and that oil will be mix of the sweet as well as the medium crude, so suiting to the Middle Eastern refineries.
Sure.
And then whatever we anticipate based upon the current situation, some more countries are also going to come out from the OPEC.
Yeah.
And those exits will basically loosen the grip of the OPEC on the overall food market supply situation.
Yeah.
And then more supply is going to come up, and then you will see the crude prices are going to fall down.
It's actually a pretty...
That is going to happen.
By 2027.
Our expectation is
absolutely
the next one.
Absolutely, Pankaj. We're seeing a fundamental shift in the way that crude will be priced, but the conflict needs to end first for that to pan out. Thanks so much for taking the time. A pleasure having you. Right, let's go across now to my colleague Somit Sarkar, because I'm very certain that there's a lot of buzz in the dealing rooms and he's pretty sure to have gotten some interesting updates for you. Somit, good afternoon. What are you picking up?
Well, a few stocks that dealers have highlighted in trade. Firstly, it's Ola Electric. Dealers indicate that the company will be launching its QIP very soon. They have already completed the road shows and they will be taking analysts and investors for a plant visit this week. So most likely by next week, they might launch their QIPs, what dealers are indicating. Then Yes Bank is another counter. That stock has been buzzing in trade. There are buy flows on the large HNI desk. Dealers are expecting a positive news flow very soon on this counter. For Coforge, that stock has been on a gaining trend, and this is largely in the back of strong set of numbers. But what dealers have indicated is that in the higher point in trade today, there was a domestic mutual fund who was a seller in this counter. So keep an eye out for Coforge as well. For Hindustan Zinc, multiple dealing rooms have recommended buy calls to their clients based on technical charts. The stock is up nearly 4% in trade. And lastly, it's PB Fintech and LIC Housing Finance. There are buy flows on PMS desk. Dealers are expecting strong Q4 numbers from both the names. For LIC Housing, they have specifically said that there could be a valuation catch-up as well that could happen post numbers. So keep an eye out for LIC Housing as well in trade.
So, I mean, just very quickly, any buzz you're picking up about this possibility of a peace deal, or people are just on wait and watch mode?
Sorry, I could not.
The peace deal, the US-Iran peace deal, is that causing some excitement in dealer rooms, or people are wait and watch mode?
Yes, there is some excitement that has come in. In fact, if you look at market, the Nifty has also broken above the 24,300 level. But I don't think there would be too much buying that would come in at this moment, because this is something that we have heard. This is something that we have heard earlier as well, that they are very near to filing. They are very near to signing a peace deal, and then nothing has gone through. So market would remain cautious at this point of time. Is what dealers are indicating.
I agree. We've heard this song before, that there's almost a peace deal happening, but then does it really happen or not becomes the question. Dharmesh Kant, would you also wait and watch? Because, you know, here is where FOMO comes in. You have about 10 minutes to go for markets to close, and you don't want to be caught on the wrong side of this rally.
I mean, the FOMO may be valid as well, because Tamanna, one thing is very clear: the market has rallied 2,000 points from the lows on the hope and anticipation that this deal will happen. When it will happen, it has not happened till now. But since it's coming from the third party, it's not coming from Mr. Trump, so the faith is all the more there. To my mind, I think that something must be there in next 48 hours, as has been indicated. And I mean, we are going with a buy on this kind of a scenario, because earlier, any fall in the market in last 4 or 5 days, if you've noticed on a technical ground, it has been bought into quite decisively. So that gives further more confidence. And I think the sectors where the impact was most, maybe the financials came out with a very strong set of numbers, including banks. They should be the first beneficiary out there. For example, Axis Bank, they provided 2,000 crores as a provisioning for this event. That all will be reversed. So the profitability will be far higher. Automobiles as a space have reported good set of numbers. You should be looking onto them, because input price pressure, which was earlier, thought of or being scared of, goes away. At the same time, all the infra plays, L&T is a very good buy. No harm in taking a chance here because these are fundamentally good, stories in the building, good numbers, good order books. I think you should be taking a chance by buying this market at current levels.
Hey, all right, quite a strong statement coming through. The nature of the news wheel is that the breaking news takes precedence. But having said that, one of the biggest stories of the week has to be the victory of Thalapathy Vijay in the assembly elections in Tamil Nadu. He came out of left field, some might say. Wasn't expected to win, but he has managed to clinch that maximum there, or rather, at least the amount that he did. The question is, a lot of people have is, how much money does he have? What are his assets? How much wealth does he have? And usually, this gets disclosed ahead of an election season. And we have those details for you. In fact, my colleague Nimit is joining in, not just with a breakdown of those assets, but possibly a few dance steps as well.
Absolutely, Alex. I've been preparing for this my whole life, but I'm pretty sure that Thalapathy Vijay is walking to the governor's office like this. From his master movie, which everybody knows about. He is the master now of Tamil Nadu, as we can see. But now we'll discuss how much he really makes. And it's going to shock you because everyone thought a lot of money can be made from movies in Bollywood. But going down south, we can see that Vijay Thalapathy has built himself quite an empire. Now, if we look firstly at his overall assets, his declared assets which come from the Election Commission of India before you file to participate in an election is at 648 crores with a liability of about 7.64 crores. That comes to about 641.22 crores, quite a substantial sum, I would say. And now this consists of both movable and immovable assets. First, let's talk about his cash, which of course, he's 51 years old, but quite Gen Z in that respect, where he doesn't really have a lot of cash declared. It's 1.1 lakh and his spouse is at 1 lakh. So that's 2 lakh in cash, but that's only not even the tip of the iceberg really. Movable assets at 426 crores. The movable assets include stocks, bonds, banks, FDs, all of that. We're going to dive into that in a bit. And his immovable assets include 20 large immovable commercial and residential assets at 222 crores. That brings up the 640 crore mark. Now let's dive into his movable deposits, right? Big deposit heavy guy he is, not big on stocks, and we'll see that a little later, but really big on the banks and the deposits, old school, I would say, at 333 crores of banks and FDs in total. Now if we break this down a little more, that the biggest one there is a bank account at the Indian Overseas Bank. That's a 213 crore bank deposit that he has, just one. Now apart from this, he also has a bunch of different FDs. Axis Bank's fixed deposit at 40 crore. He also has an Indian Overseas Bank account at 25 crores and another one at 10 crores from HDFC Bank. If we move on from this now, you'll see that his equity exposure, surprisingly, which is our bread and butter really, is close to nil. From a 640 crore amount, he has about 20 lakhs, 19.03 lakhs in equity exposure. And this also is, really, it's declared, it's about 3 shares that he holds, Indian Overseas Bank, Jayanagar and Sun Paper Mills. Now, there as you can see 25,000 worth of shares that he holds, still more than some people, less than most others here. Vehicles, now this is where superstars from the industry really shine. He has a 13.52 crore worth, including a big Tata Caravan worth 6 crores. Look at that beauty right there. Of course, BMW 2.01 crore. He also has a couple of other BMWs thrown in at 80 lakhs, but those are just small ones. Another Lexus 350 worth 3.02 crores that he has, a fantastic car in my personal opinion. And of course, the bling comes with the game itself. 6.47 crore in just bling, jewelry, gold and diamonds. Gold, as we know, especially in times like this, is a great investment. So good thinking there, Thalapathy. gold and diamonds, as we say. Also, a lot of that went from his wife. Now, immovable assets, which we discussed earlier, 20 properties, commercial and residential, including a sprawling mansion overlooking one of Chennai's biggest areas and more expensive areas, I must say, Mylapore. And that itself is at about 40 crores or so. And that also has an Olympic-sized swimming pool, which is fantastic because as an actor, you must stay in shape. Lastly, a commercial property in T Nagar worth 35 crores, just to add to the game. And of course, lastly, he's also declared that his spouse Sangeeta Sornalingam has 18 crore in overall asset, divided into immovable, movable, a little bit of stock just like him, and of course the bling.
Fantastic. We want to see a redo of that dance step. I think that was the highlight.
And the hum as well. Oh, there you go.
There you go.
All right,
this is what I've been here for. This is why I took this job.
Completely. I think you're earning it right now, Nimit. Thank you so much. You know, what really struck me is because this individual is going to be running the government of a state which is doing very well financially on relative terms. This is a prosperous state. So the investment philosophy reflects how they think.
Though, actually very traditional.
Though superstar Vijay has not come out and spoken to anyone yet, talked about what he wants to do in terms of economics, but this is going to be an exciting space to watch.
Absolutely. And particularly also, just to drive home that point, and I went to Coimbatore, there's so much investment that is currently happening in the state, right?
Yeah.
So it's not like it's one of those other states that you have to worry about. Economic policy. I'm going to be
but
very
they say if you really want to know someone, watch their portfolio. Take a look at their portfolio. That's their inner self. So that tells you something about this person. All right, lots of news breaking this afternoon on NDTV Profit. Sources tell NDTV Profit that key Air India board meeting is set to take place in Mumbai on May 7th. And we have details on what those issues could be. CEO succession and financial stress will dominate the agenda. But let me get in Danish to fill us in on all of those exclusive details. Yes, Danish?
Well, that's correct. We have tomorrow a very key board meeting will be taking place at the Bombay House in Mumbai, where the Air India board will be chaired by Mr. N. Chandrasekharan, who is the Tata Sons chairperson. Besides this, we will have Mr. Campbell Wilson, who is the current CEO of Air India, and there will be other board members as well. So initially, what we're learning from our sources is the fact that a proper review will be done of Air India's financial performance in the financial year gone by, and we are also learning that Air India might have suffered losses more than 20,000 crores. So they will be doing a tight scrutiny that what really led to such huge losses. Besides this, they will also be taking certain calls on how the Air India will look like in financial year 27. They could be taking some major calls as far as what sort of recalibration they need to do for the network. And what
Danish, we're just going into market close. Danish, we're going to market close, so I'm going to have to wrap this up. But, we're going to come back to you for more details on it. And of course, he'll be on top of that story tomorrow. 2.5 minutes almost to go. Just look at the intraday. That's going to tell you the full story. The bank Nifty, the Nifty, the intraday is where the story is. Nearly 300 points up on the Nifty. A lot of that coming in just the last hour or so. That wall of worry that the markets have climbed. This is one Axios report, but something about this one perhaps is believable because it's not just the Nifty and the bank Nifty or the broader markets or the Indian markets, right? This is all your US futures, your European markets,
crude oil prices.
Your crude oil prices. We should pull up crude oil prices because that's the lead indicator, right? About what a large swath of very powerful investors are feeling about whether the US-Iran war will end or not. In case you missed it, there's a Axios report which says a one-page memo is getting ready for a deal. Alex, 7% down right now.
Yeah, 101, 102. What is critical also, Tamanna, as we wind up is for the Nifty 50 to be holding above that 23,300 mark, which, by the way, has been a very key resistance point. So we're holding, if we hold above that, and of course, the only fly in the ointment, and it's a pretty big fly at that, is that if this gets countered overnight or tomorrow by Iran, then some of this exuberance will get tempered just a tad bit, but it is actually pretty good. The Nifty Bank actually is critical to watch because this is an index that has not participated. Of course, the other big trigger for the Nifty Bank was the credit guarantee scheme that was announced just overnight. And so we were talking about it this morning, the need for a trigger for the PSU banking pack as well as for the Nifty Bank that is in place. and this is another one.
Yep. We should just pull up the advanced decline ratio, the intraday chart through the day, and then we'll come to the sectoral heat map because you need to see what has been contributing. Look at that yawning gulf. It's actually beautiful, almost how it was in the start of the day, but even better right now. 582 declines to 2037 advances on the broader markets. The sectoral heat map will give you a picture of what's working the best. CPSE a little muted, energy stocks to some extent. You'll see a cool off in an ONGC, etc. Maybe FMCG major, but look at the banks. The banks and the financial services, right, are front and center of this rally, isn't it?
Absolutely. The PSU banking pack. There are a few earnings that have also come through in the interim, but I think more than anything else, there's that comfort that the government is stepping in like it did during COVID-19 to say, look, we'll provide you with a guarantee. You can lend a little bit more, provide working capital where required to give these MSMEs, the export-facing MSMEs, the time to tide over a rough period. But a few seconds to go for the close, and we are ending very, very well. Very critical to note, by the way, the Nifty Mid-Cap Index, if you can pull that up very, very quickly, right? So we're at 25,572 or thereabouts. We're just a few inches away from all-time highs for the mid-cap index.
22,570. Just the Nifty heat map before we wrap up and what the big boys have been doing and how we're closing off. Indigo, there's just zooming past. 7% up. You know, of course, low crude prices always help. This is the big proxy play for that, and the Air India board meet and troubles at their big competitor could be also helping in that sense. The India VIX is 7% down, under 17. That's an important marker to look at. ONGC expectedly will come down as crude prices cool off. RIL will come down as crude prices cool off. So that is to be expected, but not really anything to be sad about. Tata Motors, PV, Shriram Finance, Trent, Asian Paints, again, something that benefits from crude, all looking strong. So you need to go into tomorrow's trade looking at a couple of factors. Britannia, Bajaj Auto and the likes will report, so that becomes important.
And the bonus possibly from Bajaj. Oh no, buyback.
The buyback from Bajaj Auto is what everyone will be looking at. But also keep in mind that a lot of news flow could take place between now and tomorrow morning's market open. So watch out for all that and more. Let's hope that this mood really stays on.
Absolutely. And on that note, from Tamanna and myself and the team that put this show together, thank you so much for watching and stay tuned. This is NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a lowdown of everything that has happened in terms of today's trading session, but as well as news and updates from within the country and across the globe. First things first, let's take a look at the markets. Then the Wall Street shrugs away volatility to really end higher with bulls taking charge, especially late in the session. Now, when you talk about the Sensex, that really climbed over 900 points. Nifty held firm above 24,300 and signaled that really improving sentiment despite a choppy day of trade. Moving on then, let's talk about sectors. Now, sectoral action largely remains in favor of green. All sectors end on a positive note, and that's barring Nifty Energy as well as FMCG. Moving on then, the US and Iran are closer than ever to ending the war, with Axios reporting talks around a one-page MOU as well that could halt hostilities and open the door to nuclear negotiations. And that's something that markets were looking at, in fact, and the draft would trigger a 30-day window for talks, ease sanctions as well, and pause uranium enrichment, as well as reopen the shipping through the Strait of Hormuz. But nothing is signed just as of now. Divisions inside Iran and fragile trust mean that diplomacy is narrowly winning over renewed conflict, at least for now. Moving on then, let's talk about the impact of this also on oil prices. Now, oil slumped for a second straight session as peace hopes trumped war risk as well. And you do have Axios reporting that the US and Iran are close to a one-page framework, like I said, to end the conflict. And that's something that sent Brent as well as WTI sharply lower. Other than that, in terms of the backdrop, you do have President Trump who's paused ship escorts through the Hormuz, but with blockades still very much in place. Traders are betting that diplomacy cools prices faster than barrels can return. Moving on then, let's talk about gold as well. That pushed to a one-week high as diplomacy really lifted sentiment. Optimism around a possible US-Iran deal is what you're looking at, that dragged oil and the dollar lower, and as a result made bullion shine as well. Now, in terms of prices, you're looking at somewhere close to $4,700, but analysts are warning that fresh highs may need big institutional money, not just fading war risk, but that's something that you're looking at. Other than that, gold prices were close to a one-week high. Moving on then, let's talk about banking stocks that saw broad-based buying after the Union Cabinet really approved the emergency credit line scheme as well. And in terms of this scheme, you're looking at $18,000 thereabout in terms of the outlay that is expected to unlock about 2.55 lakh crore rupees of fresh credit. And this is for MSMEs, airlines hit by the Middle East crisis. And the move is, it lifted sentiment across both private and public sector lenders on some of those expectations of higher credit growth as well as lower asset quality stress. Moving on then, let's talk about Polycab that reported a strong set of numbers in the fourth quarter. Now, the stock wasn't doing all that much, but it was supported in terms of the earnings fine print by healthy demand across segments. Though margins declined, at least on a year-on-year basis, profit growth, now that remained modest despite higher EBITDA, reflecting margin compression. And the company also announced a 47 rupees per share dividend, extended the CFO's tenure, signaling continuity as it navigates cost pressures alongside top-line momentum. Moving on then, let's talk about CG Power that reported a strong set of numbers, and that's marked by healthy revenue growth, margin expansion as well that you're looking at. Revenue and EBITDA rose sharply on a year-on-year basis, aided by operating leverage, while the net profit also grew over 30%. Improved execution and cost control is something that you're looking at, helping lift the margins, reinforcing the company's steady growth trajectory amid a favorable demand environment. Moving on then, let's talk about L&T that was under pressure and ended the day with a cut of about 1%. And this, of course, after the result. But in terms of the brokerage verdict as well, Nomura downgraded this particular counter to a neutral rating, citing a muted fourth quarter performance and underwhelming guidance. Now, in terms of what else the brokerage had to say, they talked about how they've cut the target price sharply after trimming FY 27-28 earnings estimates. Nomura's flagged weaker visibility on order inflows under the Lakshya 2031 plan, said that elevated valuations offer limited comfort amid near-term uncertainties. Let's move on and talk about brokerages staying largely positive on M&M after its Q4 performance, even as some flagged margin and tractor side pressure. Kotak Securities maintains a buy rating with a target price of close to 4,000 rupees, backed by strong pricing and auto strength. When you talk about JP Morgan as well, remaining overweight on this particular counter, and their target price is somewhere close to 4,100 rupees. Robust SUV volumes is something that they're talking about, and that's along with steady guidance. Now, when you talk about the word coming in from Jefferies as well, they're keeping a buy stance, trimming their target price to somewhere close to 4,000 rupees again here as well, amid tractor cycle concerns being flagged here. Citi also maintaining a buy rating, lifting its target price to somewhere close to 4,400 rupees, citing margin improvement as well as a confident management outlook. Moving on then, let's talk about United Breweries that delivered a mixed set of numbers for the fourth quarter, with growth held back by rising costs even as volumes improved. The company sees better than expected volume growth and a strong premium portfolio, but higher fixed cost and bottle expenses that really weighed on the margins. Management also warned of elevated cost pressure over the next few quarters due to global disruptions, which could really weigh on the near-term profitability. Moving on then, let's talk about United Spirits that reported a steady set of numbers for the year, driven by premium brands, even as mass segments remain a little bit under pressure. Now, sales growth that moderated in the March quarter, but the full-year performance stays resilient on stronger realizations, and the company continues to see healthy traction when it comes to their prestige and above portfolio, while the demand in the popular segment, in fact, remains a little bit weak. Moving on then, let's talk about Coforge that surged more than 9%, about 10% at close as well after a strong fourth quarter performance and upbeat operational commentary. When you talk about the margins, they expanded on a meaningful basis on tighter cost control, while deal momentum remains healthy with multiple large wins that you're looking at during the quarter. The company also reports a stronger order book for the year going forward and reinforces this particular confidence in the near-term revenue visibility and growth, and that's something that you can very clearly also see being reflected in the stock price as well. Moving on then, let's talk about SRF that jumped more than 7%, almost 7.8% at close after a solid fourth quarter number as well. And when you're talking about the key triggers, what makes it to the list is strong growth, and that's across key businesses. You're talking about fluorochem, technical textiles, and films really driving earnings with sharp improvement when it comes to operating profits, especially in films and textiles. Now, the fluorochem business benefits from higher volumes and better pricing, and the company signals further capacity expansion in this segment. Moving on then, let's talk about Hero MotoCorp that slipped into the red after early gains. And this is as management flagged near-term pressure when it comes to the margins from rising commodity costs, while the two-wheeler major also posted record revenue and profit also coming in for the fourth quarter. You do have investor sentiment that cooled off a little bit during the earnings call, and the company stressed that cost inflation could really drag on margins. And that's for the coming quarters. Now, at close, of course, you did have the stock with an uptick of about 1% thereabout, and this is even as demand momentum and volume growth remain strong. Let's also move on and talk about brokerages remaining constructive on something like a Hero MotoCorp as well, and this is after a largely strong set of numbers. Now, JP Morgan and Morgan Stanley have maintained their overweight ratings, citing effective pricing and fixed cost management that helped offset commodity pressures. Citi also reiterated the buy call, flagging robust demand post GST cuts and some of those gradual gains when it comes to scooters and EVs. That said, analysts are closely watching sustainability when it comes to industry growth, market share momentum, but also evolving cost pressures. Let's also move on and talk about KSE International that has secured new orders to the tune of about 1,000 crores, strengthening its transmission and distribution order book across India and the Americas. Now, when you talk about these key wins, it includes a high-value 500 kV HVDC project in West India, cabling works in East India, and tower and hardware supplies in the Americas. And this underscores, of course, the strong momentum in grid infrastructure and international markets. Moving on then, let's talk about DCX Systems that in collaboration with Israel Aerospace Industries has broken ground on a new radar manufacturing facility in Tamil Nadu, and the plant is designed to serve as a hub for manufacturing, but also integration and testing of advanced radar systems, marking a significant step in strengthening India's domestic defense electronics and radar production capabilities under global partnerships. Moving on then, let's talk about Premier Explosives that has received export orders to the tune of about 34 crore rupees for the supply of rocket motors, marking a boost to its defense exports portfolio. Now, the stock wasn't doing all that much, but the contract, when you talk about this one, it was secured from an international client, is going to be executed over the next 18 months and strengthens the company's presence in high energy propulsion systems for global defense applications. Moving on then, let's talk about Zee that has stepped up its legal push in the ongoing copyright dispute with Nykaa at the Delhi High Court. Now, sources are telling NDTV Profit that Zee is seeking a wider undertaking to prevent any future misuse of its music catalog beyond the takedown of limited set of social media reels. The media company is also pressing ahead with its damages claim, with the next court hearing also scheduled later this month, so this is something to watch out for. Moving on then, let's talk about rice exporters that are coming under sharp pressure as a surge in shipping costs squeezes margins. Now, sources in fact are telling your channel also that exporters are seeking government relief as basmati export prices rise sharply, driven entirely by freight costs rather than any shortage at this point in time. With price controls in key overseas markets limiting pass-through, exporters are now pushing for faster reforms under the Merchant Shipping Act to ease the stress. Moving on then, cost pressures are now clearly moving through the apparel value chain. Industry sources are telling NDTV Profit that textile companies have already passed on over half of their higher input costs to apparel makers in the month of May, with full pass-through likely over the next couple of months as well. Now, garment prices are beginning to rise, with smaller players feeling the pinch even more, even as leading retailers hold back hikes just for now. Moving on then, let's get you some business news. Air India is sharply cutting international flight capacity as rising global crude prices and widening ATF cracks squeeze costs as well. And data from OAG is showing that international capacity fell over 20% on a year-on-year basis in the month of April, with further cuts planned for May and June as well. Now, North America and Europe have been hit the hardest as the airline prioritizes cost control amid a challenging fuel environment. Moving on, then, Indian companies stepped up investment commitments in the United States, with 12 firms announcing $1.1 billion in fresh investment at the Select USA Investment Summit. And the pledges are also expected to create over 1,500 American jobs and form part of a broader $20.5 billion commitment. This is across tech, manufacturing, pharma, and Indian FDI into the US now totals over $16 billion, underscoring deepening economic ties. Moving on then, let's talk about Samsung Electronics that has crossed a $1 trillion market valuation powered by surging demand for AI chips, and shares rallied, of course, sharply, making Samsung only the second Asian company after TSMC to reach the milestone and lifting South Korea's Kospi as well above the 7,000 mark in the morning. Alongside peers like SK Hynix and TSMC, Samsung now sits at the center of Asia's growing dominance in the global AI and semiconductor ecosystem. Moving on then, let's talk about Freshworks that announced it will cut about 11% of its workforce, so roughly about 500 jobs, as it restructures operations amid rapid adoption of AI. The company said that automation and AI-driven coding have reduced routine work across teams. And shares, of course, fell sharply after this particular announcement, even as Freshworks really said that savings will be reinvested in its core employee experience and IT services business. Moving on then, let's talk about AI. OpenAI and Anthropic are accelerating efforts to drive enterprise adoption of AI by forming JVs with major global financial institutions. Both moves aim to help businesses deploy AI tools more effectively through hands-on support, with billions already invested and IPO ambitions looming as well. Boosting real-world adoption is now critical to turning heavy AI spending into sustainable profits. Moving on then, let's talk about BlackRock CEO Larry Fink also, who's warned that global shortages of compute power chips and even memory and electricity could really give rise to a new tradable asset class as AI adoption accelerates. Now, speaking at a conference, he's talked about how demand for AI infra is far outpacing supply, arguing that this is not an AI bubble but a supply-constrained market, even suggesting that futures trading tied to compute capacity is something that could be on the horizon as well. Moving on then, let's talk about Apple that has agreed to pay $250 million to settle a class action lawsuit, in fact, accusing the company of misleading customers over its AI features. Now, the case was centered on claims around Apple Intelligence, including promised enhancements to Siri. While Apple has not admitted any wrongdoing, at least at this point in time, eligible US buyers of iPhone 15 and even 16 models could really receive payouts anywhere between $25 to $95. On to some national news then. Panic spread across parts of Punjab after two blast-like incidents were reported within hours in Jalandhar and Amritsar. Now, in Jalandhar, a scooter parked outside the BSF Punjab Frontier headquarters caught fire and exploded on a busy stretch near the Amritsar-Delhi highway. Hours later, another blast-like incident was reported near the Khasa cantonment area in Amritsar. Now, police, army, and forensic teams rushed to both sites, sealing the areas and launching investigations, with the state being placed on high alert. Moving on then, on to some international news. US President Trump has also paused Project Freedom, the operation to guide stranded ships through the Strait of Hormuz, saying that the halt is temporary to allow space for a possible peace deal with Tehran. Now, when you talk about this US blockade of Iranian ports, that remains in place even as Iran claims the move as a victory. The Pentagon is saying that more than 22,000 mariners on over 1,500 vessels remain trapped, with ship traffic still largely frozen. And you do have Secretary of State Marco Rubio, who said that the offensive phase of the war is over right now, though Tehran has yet to respond. Iran, though, has rolled out a mandatory new transit protocol, so let's talk about that as well. Now, this is for ships crossing the Strait of Hormuz, requiring vessels to seek permits and follow IRGC-designated corridors. The move is coming in as President he rejected the US conditions to reopen the waterway as unrealistic. The timing is critical, coinciding with President Trump's brief launch and pause of the Project Freedom as well. And in terms of the US mission, this is aimed at escorting neutral ships, and that's something that you're looking at that we just told you about. But together, the steps signal Iran tightening control even as diplomacy hangs in the balance. Moving on then, let's talk about Iran's Foreign Minister Abbas Araghchi as well, who's met China's top diplomat in Beijing. Now, this highlights growing coordination between the two strategic partners ahead of Donald Trump's expected visit to China. It is Araghchi's first China trip since US and Israeli strikes triggered a historic global oil supply shock. While no details have been disclosed as of now, the timing suggests that Iran will feature prominently in talks between President Trump and President Xi later this month as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And When the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
In the Middle East war, a big update coming in today. White House signals US-Iran deal to end war near closing. Both sides are setting a framework for nuclear negotiations. US awaits Tehran's response on war and nukes. Oil prices fall sharply on reports that US and Iran are closing in on a deal to end war, pushing Brent towards $101 a barrel. Markets surge in late trade on US-Iran peace deal hopes. Nifty ends above 24,300, while the rupee rebounds to near days high after a sharp recovery and closes at 94 rupees 61 paise against the US dollar. US Secretary of State Marco Rubio to visit India soon. US envoy Sergio Gore says, meanwhile, India Inc. announces $20.5 billion of investments in US. Pharma leads with $19 billion push. Reliance to shut crude unit after Naira maintenance ends. Government says Reliance refinery shutdown won't have any impact on LPG supplies. Rising fuel costs hit Air India. Amid high fuel prices, Air India reduces international operations. The airline has cut overseas capacity by 22% as compared to last year in April. Rice exports feel the shipping blockade heat. Sources tell NDTV Profit that the exporters are seeking urgent shipping relief from the government as basmati export prices surged to $1,300 a ton. NDTV Profit tracks Bengal mood after the election verdict in West Bengal, shifts the power map, and also NDTV Profit's Sharad Dubey brings in exclusive industry voices from the ground zero in Kolkata. Sources say TVK's Vijay will take oath as Tamil Nadu Chief Minister tomorrow, likely to take oath alone. Meanwhile, Vijay intensifies the allies' outreach after Congress TVK writes to VCK and left parties. Hello and welcome. You have tuned into Profit 360. I'm Nisha Poddar. And in a big development today about a couple of hours back, well, it's coming in from the Middle East. US is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. Now, the US expects Iranian responses on several key points in the next 48 hours. Nothing has been agreed yet, but the sources said that this was the closest the parties had been to an agreement since the war really began. Among other provisions, remember, the deal would really involve Iran committing to a moratorium on nuclear enrichment, the US agreeing to lift its sanctions and release billions in frozen Iranian fund. And both sides really lifting the restrictions around transit through the Strait of Hormuz. That will be a big relief for the world. Now, this after Trump announced the HALT Project Freedom that US had really launched with considerable publicity. But recently,